Okay. Hey, everybody. It's me, Jeff Gibby, over with Metastock. I hope you're doing well. Thanks for joining us today. Our last online event of the year, our last big online event of the year. So in any case, it's good to see you. I'm glad you could come. I hope you're all doing well. Anyway, let's start with a legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines determining and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So in any case, Neil, good to see you. Good morning from Ontario. We've also got icy roads here in Utah. Gerd, good to see you from Germany. Thanks for coming. Where are you from? Let us know in the chat. Say hi, all that kind of good stuff. As we get started today, I want to thank our sponsors today. Longtime running sponsor, Stocks and Commodities Magazine, great partner of ours. They've been making magazines. They've been publishing since 1982. They've got 17,000 different articles, 1.2 million subscribers. If you want, you can go up to our registration site, metastock.com/traders-summit, and you can register for a free issue. Also, all of the presenters today kind of put together either like a free course, a free ebook, and all that kind of stuff. So if you haven't registered yet, maybe you just caught the stream on YouTube, go to metastock.com/traders-summit or the comment there and register. That way you can kind of get some really good goodies. So good morning, Mike. Mike says it's a whopping 29 degrees and you're in your Christmas stockings. Cool. Vincenzo, good morning. Good to see you. Okay. If you haven't yet, join thetradersforum.com. There's live market chats. We do lessons a couple times a week. You can learn about the market. It's a community of traders helping traders. You can join for free, thetradersforum.com. I'll see you there. And of course, we're Metastock. Metastock's been rated the best software in its price category. It's been rated #1 for 31 years in a row. We're going to be talking about how to use it to run market scans, test trading ideas, get patented forecast information from our Metastock forecaster. Pricing for Metastock starts at $75 per month. We're going to be talking about it all day. If you want to see why it's been rated the best software in its price category for 31 years in a row, go to metastock.com/summit deal. Click on the QR code, whatever you want to do, but you can actually buy a month and get the second and third month for free. Good morning, Pierre. Good to see you as well. All right, very cool. Our first speaker today is Serge Berger. Serge is going to talk about a method that he's created to identify stocks that are about to move with good momentum. It's called the TST Trender. Serge has been working with Metastock for a number of years. We love to have him. He does a really, really good job. And I think that's how I'm going to introduce you today, Serge. How you doing, Serge? There we are.
Hey guys. Sorry, I'm plugging in my phone. I'm under the desk.
Okay, no.
I'm here though. I'm just trying to, hence the delay. So my apologies.
No worries.
What's going on? Is everything going well?
Yeah, you ready for the holidays?
Yeah, I'm ready to slow down a little bit. It's been
Are you going to have any time off?
No.
Okay. Fair enough.
What they say, money never sleeps. Yeah. I think that's the problem we have. Hey, actually, can I share my screen? I want to show you something.
Yeah, I just sent you the screen share request, I think.
Yeah, I got it.
Okay, good.
Let me know if you can see this thing here. I'm going to make it a bit larger. You see that?
Yeah, we can see a chart of some sort.
Yeah. So check this out. So this is actually pretty cool. So this is if you look at the white line, it's the average of the past 30 years. If you look at that table on the left, It's the average of the past 30 years of the S&P 500 seasonality since October. So from October to the end of the year. And it's pretty cool. And actually, I created this in the icon.
Yeah,
Thing.
it looked familiar to me.
Yep. So just want to let you know. But basically, what you can see if you look at this a bit closer, and you look at the, I guess, blue line, that's the S&P 500 until Friday. And today it's unchanged, so it's not really, it's the same price. But basically, if you were to juxtapose this to the white line, you can see that over the past 30 years, the S&P started to go into a consolidation period for about 2 weeks, from basically now or last Friday till about the 20th of December. And the reason for that, if you kind of look at it through the lens of flows, it's, investor funds are kind of, a lot of funds are kind of closing their year, so there's less of a natural bid. But also the people that are still around and doing stuff, they typically take a bit of a backseat, whether that's algos or traders, between now and just getting past the Fed meeting. So last week we had the November jobs report. This week on Wednesday, we're going to get CPI, so inflation reading, and then we're going to get the Fed on the 18th. Once we're past that sort of, triplet of economic data, things tend to become a bit more directional again, at least if the 30 years of history here has been any guidance. So just thought I would quickly
That's cool.
share that with you.
That's awesome.
It's pretty cool.
All right.
Anyway, let me get started here. Thank you, Jeff. I appreciate it.
Glad to have you. It's all yours.
Thank you. Good morning, everybody, or afternoon, wherever you are. We'll get started. I'm going to turn the camera off here in just a second because I don't want to distract myself. But I hope everyone's doing good and you're settling into the holiday spirit a little bit here, depending on where you are in the world, of course. I do think 2025 is going to be a very different year than we had in 2024. But let me qualify that a little bit. When I say that, I don't mean that 2025 is going to be like a horrible stock market year, like a down year. Anyone can make that forecast, but honestly, it's not that helpful because the forecasts are usually totally wrong. Like into 2024, most Wall Street forecasts were basically calling for like low, small returns in the S&P, maybe even a down year. And of course, we're up 29% or something. Couldn't be any more wrong. Now the forecasts are for huge up years again next year. I think that's unlikely too, but it's neither here nor there. What I do think we're going to have next year is more of a trader's market, and I'd like to define that here before we get started a little bit. What I mean by that is that if you look at the market, the S&P, and I can probably share a chart with you guys to show you this a bit better. So if you look at the S&P, if I have a chart, I don't even have a chart. Anyway, so for the past 15 years, the market's essentially hockey stick from the lower left to the upper right with very little dips, so linear thinking, blindly buying dips has worked very well. I think that's going to be different this coming year because we're going to have a lot more headline news, whether that's from, the incoming US administration. There's going to be more news, right? Some jumpy news maybe. But the point is, I think that's going to give us a lot of opportunity. So, but I don't think we're going to see the Max 7s just blow higher again, like with no dips. I think that trade is probably over. So those people that are now riding high on the latest sort of, linear moves, some of the big names you guys know, like a Palantir and those kind of things, I think we're going to get much more of a two-way market where momentum will be important to be aware of. And so, as I promised, I'm going to turn off my camera so I don't get distracted too much. But what I'd like to go through here is kind of a discussion around momentum and what that means. And so when I look at the markets, or at least the way I've perceived it through my lens of the past 25 years as, an investment banker and money manager to this date, I look at, how can we have the best possible opportunity to make money in any given year? And every year is a little bit different. So it's important to be able to distinguish between, let's say, trending markets and what I consider to be more of a trader market. Now, before we look at this, I do have to put up my own risk disclaimer as well. Risk in trading and investing is real. So, anything we talk about here today is purely through the lens of education. We're not going to do any investment advice here. It's purely educational. And I do think everyone should get educated as much as possible on the markets, because we never want to risk more money than we can afford to lose. So please keep that in mind. In terms of indicators and tools, a general word from me. I think, just like we need multiple golf clubs to play a round of golf, 14 is what's allowed in a golf bag. We don't need necessarily 14 indicators, but we do need a few different tools in order to make money, because just like you don't want to hit out of a greenside bunker, a driver, we don't really want to be using certain indicators in different types of markets. And I think that's important. So, there's not a one size fits all typically. And if there is, it's selective. So I think we are in a momentum-driven market. And I actually think a momentum is one factor. Momentum is actually what's called a factor, if you've never heard that before. And what that means is, factor can be anything, can be from different types of styles to different types of value even. But when it comes to the market, in terms of what we're looking at, we think momentum is actually one of those styles that really doesn't go away. And it has a lot to do with algorithms that rule the market. Algorithms are always going to flock to one part of the market where they see the most upside. And it's also what's caused the markets to be so linear as it has been for the most part. But I think the linearity in the markets is going to stop here next year, and we're going to have much more dispersion, but we are going to have amazing momentum opportunities in pockets of the market. So it's not going away, this opportunity. It's probably just not going to be in the same stocks that we've had go up, linearly and vertically over the past couple of years. So that's as far as momentum is concerned. Now, just quickly, a definition of momentum, and I should say this is a bit more of my definition. In the world of physics, I guess this is the textbook one before we look at mine. But in the world of physics, the way that I sort of understand it is momentum is essentially the product of mass and velocity. And so P equals M times V, M being mass, V being velocity. But when it comes to the markets, which of course is what we're here to talk about, I like to think of momentum as like acceleration. And again, for better or for worse, that's my definition and the way we've always looked at it through the lens of all the trading desks that I've been involved in and the way we run money now as well. So when I look at momentum, I kind of think about it as a car that's driving along at 45 miles an hour, but then is turning onto the highway. And the car is accelerating from 45 up to 75 miles an hour. It's that delta right there, that change is really what I consider to be momentum. And I'm sure there's a physicist or an engineer that will disagree with that, and that's totally cool. But remember, I'm talking about it as far as it relates to the markets here. So I think it's the rate of acceleration is the way I look at it. And so when we look at this in terms of its durability, momentum moves typically don't last for an extremely long period of time, because then you're talking about trends. Momentum moves can, on an intraday basis, last for minutes. On the daily charts, they will last from days to weeks to months. But after that, they become trends, and that's a different thing. So momentum is kind of fleeting, it's temporary, but it's also, as a trader, where we want to focus. Traders want to focus on momentum, particularly those people in here that might be using individual stocks or ETFs or leverage, like with options. Is anyone here an options person? Give me a quick yes or no in the chat box. Or futures, of course, right? Leverage products. What we're really looking for is momentum. And so momentum is an incredible thing if we can take advantage of it in at least my view, the proper way. So let's talk about this. Again, momentum is not a constant, it's temporary, it comes and it goes, but that's also actually the good thing about it. So again, we've established what momentum is. Let me just differentiate it quickly from trend. So if you look at this chart here, this is a bit of a longer term chart. Actually, it's not that long, it's like 18 months or whatever. The trend, by my definition, is that big green arrow that goes all the way from the lower left to the upper right. That's the trend. Momentum is when that trend sort of pauses and then reaccelerates. Remember, the car slowing down to a lower, speed, and then reaccelerating right back and getting back up to speed on that maybe 75 miles an hour that it was going before. That reacceleration is what, to me, momentum is, and where we can really take advantage of moves in the markets. Now, typically, when I look at momentum, the way that a lot of people use it, be that with traditional indicators coming out of the box off of different broker platforms and so on and so forth, there's a lot of lagging signals that can lead to essentially late entries and exits. I'm going to even call them false signals that can lead to maybe more losses than necessary. Obviously, as you probably have guessed and have experienced, trading is not linear, meaning not every single trade is going to be profitable, far from it, but we want to be able to increase that frequency of profitable trades as much as possible. So traditional indicators typically don't adapt quick enough to what I consider to be these sudden market changes in terms of momentum. That's the way I look at it. So we developed something called the TSD Trender Indicator, and I'd love to give everyone here access here in just a bit to this indicator, which actually Jeffrey helped me as well with it. And so what it does, it detects fresh momentum in real time, and it uses very specific parameters to provide us with those entry signals. So they're timely. It reduces the false positive rates, meaning the false signals, and thus becomes better. So what we actually like to do is we can apply these both on the daily charts for swing trading, but we can also use them for day trading. I don't know if anyone here is a day trader, but I will show you how that works here shortly. So we're analyzing price and to some extent volume data to detect momentum. So, and it gives us buy and sell signals based on very specific and clearly defined, predefined criteria. So, for example, it gives us a buy signal when momentum is coming in on the long side, or it would give us a sell signal when momentum is going in on the short side, meaning when momentum is increasing on the downside, where one would maybe want to buy a put option or short the futures contract or short the stock and so on and so forth. So that's what we're looking at. So the benefits here is really an increase in our view in accuracy by detecting true momentum, giving us timelier signals, and also being able to thus adapt to different market conditions quicker than usual. And we can use this indicator on MetaStock. I'll show you here's this today, among other places. So let's get into this, and let me just share with you a few signals here that I think will resonate with you. Before we even go into individual stocks, allow me to share with you the track record of literally just the S&P 500 using momentum. So as a trader, what we want to do, at least what I think what most traders want to do, is we want to be involved in a, let's say, stock when it's doing something. So as a directional trader, we don't so much want to be involved when it's not doing something. Now, obviously, there are strategies that take advantage of sideways markets, income strategies, and I love those too. But Today, my focus is on being able to find momentum, which I think a lot of people have understood is a powerful force in the market. And so when we look at the S&P 500, if we were to just take the daily chart here on the S&P and go back, let's say about 12 months. Over the course of 12 months, if all I did is follow the signals of this indicator, it would have given us 1, 2, 3, 4, 5, 8, 7 and 8, 10 trades over the course of, actually this is closer to like 13 months. So over 13 months, we would have gotten whatever I just said, 11 or 12 trades, right? That's like less than one a month. Most people do that amount of trades in a month. So a lot less nervous trading. Let's see how this would have worked. So we got a buy signal in November of last year. That was good all the way until April. I think this, if I remember correctly, this was about 18% of gains, something like that. There's nothing to do. It was just momentum. We have a trailing stop, which in this case is this purple line. And there was nothing to do until we got stopped out in April, right? So imagine not having to do 1,000 different things, but just respecting momentum. Then we had a sell or short signal, which ultimately got stopped out for essentially flat gains. What we like to do with this indicator in our process, I should say, is we like to get to a free trade as quickly as possible. So what that means is we want to, let's say, buy 2 options contracts or buy, let's say, 200 shares, or if this is a futures contract, buy 2 futures contracts or short 2 futures contracts. And once it reaches that initial profit target, which you would see here as exit, is we want to close half that position. And the reason for that is because once we're in a free trade, it's going to be very difficult to start losing money on the rest, right? And you can see obviously how that happened there. We very quickly got to a free trade and then we were just writing free profits. And in this situation here, we got to that free profit target and then the rest got stopped out right there actually on that day for, you know, a net probably still a marginally profitable trade, but we certainly didn't lose any money. Then we got a buy signal, and I don't know, this one was like another 7 or 8%, I think it was. That was good from May to mid-July. And then it took us out of the market. In fact, it then went short the market. It reached the free profit target and then got stopped out on the rest. So this one too would have been a marginally profitable trade. Then we had a sell signal in September that did not reach its initial profit target. It got stopped out for I think what was about I think it was about a 1.5% loss. Then we got a buy signal in September, and that one lasted all the way until just before the election, right? So again, what it's allowing us to do is to be in the market when there is momentum, and it's telling us to not be in the market when it's boring. That to me is the definition of what a trader wants to do. Then we had a sell signal right before the election. Now, for me personally, that's not a trade I'm going to take. I'm not going to take a trade right before the election, so I'm going to ignore that one. Then we had a buy signal right after the election on November 6th. That one has now reached its free profit target and technically is still staying in the trade, although we actually took full profits on this trade on Friday, so just before the weekend. So that's whatever we counted, 10 or 11 trades over the course of 13 months on the S&P, being in the market when there's something happening and out of the market when it's just boring and there's nothing going on, right? There should be, as a trader, I think this will resonate with a lot of you. We could have done the same thing with something like NVIDIA. In fact, let me quickly bring up NVIDIA so you guys can see this. So this here is shares of NVIDIA. Again, let's go back 12 months and see it's gotten a bit choppy here over the past couple months. But again, it's keeping us in the market when there's something going on and essentially keeping us out of the market when there's nothing going on. So, or the NASDAQ 100, same thing. I can show you that one quickly as well before we go into some individual stocks. Let me bring this over. Just getting to the QQQ here. Here we are, QQQ. Just getting up the ticker. And you guys have individual stocks you would like me to look at? Here we go. Please let me know. Just type it in, and I'm happy to look at them. So this is the NASDAQ 100. Again, same exercise. Let's just go back to let's say 12, 13 months. And again, you can see we got 1, 2, 3, 4, 5, 6, 7 signals over 13 months, and it would have only kept us in the market, long or short, when there was something going on, right? So that's a lot of action to be taken advantage of when there's something going on, but not when there's nothing going on. In fact, I can share this with you guys here, even just today. And again, we're going to look at this here more shortly in just a few minutes as it relates to individual stocks. And I already see some people here wanting to look at some of the high flyers, and we'll go through those, MSTR, all the ones you guys like to look at. We will look at those. But even just like on an intraday basis, I will show this to you like just to give you a bit of a sneak peek on this. Like for example, the NASDAQ 100 gave us a lovely buy signal. Let me bring this over here. Give us a lovely buy signal last Friday. This is a 5-minute chart. You can see momentum comes in. This is right out of the gate at 9:35 Eastern time. You got a buy signal, and it starts moving towards its profit target right there, right? And then you can see we have a trailing stop. Or even this morning, this is live here right now. You can see the NASDAQ 100, we got a short signal, right? A sell signal, and we retested, and now we're going lower. So, this is momentum coming into the market, all right? Are you guys following so far? So let's start off, and let me look at some of the ticker symbols you guys are wanting to look at, and some ones that I know a lot of people like as well. Let me just quickly bring this over. 1 second. I want to make sure I have the correct price feed here. Here we are. All right, so this is Walmart. Let me just quickly, I just so you guys know, I have a different screen resolution on this screen than on the others, so I have to keep constantly moving the chart back and forth, so that's a little bit annoying. But so here you can see Walmart. We got a buy signal in August as momentum came in. We then very quickly reached that free profit target, and then basically have been trailing higher with this purple line. So that buy signal came in around $74. Currently in stock is $20 higher, around 94, right? So you can see, hopefully you can see how that works. There's a lot of momentum stocks I know that that people like to follow. So I'll show you, like for example, I don't know, like Salesforce, and then we can look at MSTR and all those things as well, if you guys would like, and other names as well. So here, for example, is CRM. This is Salesforce, and you can see same idea, right? We get a buy signal, we then reach that free trade signal at target, which my definition is we want to get that free trade target. We then take half the position off, and then we basically ride the rest higher on a trailing stop. The trailing stop that we use in this case is the purple line, right? So and again, it's the same story, or the same it's the same process all the time. So let's look at MicroStrategy. I notice a lot of people interested in that name for a good reason, of course. So let me just get to the right chart so I can show this to you. So here is MSTR. Obviously, this is a big momentum trade or stock this year, and you can see how this, just having followed this indicator, or just having followed momentum by by using the TSD trender, which is what this is, here's what would have happened. If this is all I would have done this year, I would have had one buy signal in February from around $51. That would have gotten stopped out around 152. So that's $100 higher. Then there was a sell signal that very quickly reached a free profit target and got stopped out. So that's, again, a scratch trade. Then a buy signal that also roughly went to a scratch trade. A sell signal for a scratch trade, another buy for a scratch, another sell for a scratch, and now everyone's frustrated. Well, then you get a buy signal on September 9th at around 151. The stock is now trading at 385, right? The free profit target was reached very quickly. So I'm now riding on a free trade using my purple line as the trailing stop. So that's $100 there in profits initially in the year. Then a bunch of scratch trades, which I'm sure frustrated everyone, but they weren't losses, right? And then we had a buy signal that now is up another $230. I mean, that's very, very powerful. So that's $330 on a $51 stock initially. I mean, that's, you can do the math. And again, that's not even using options. So is this making sense, folks? Can you guys see the power of momentum, right? Momentum is very, very powerful if we can take advantage of it in the right way. In fact, this morning, I can show you guys this. We have new momentum coming into the Chinese stocks. So specifically, what we're looking at here is like K-Web and those things. So K-Web, for example, which is Chinese internet stocks. This is actually run by what I consider to be a friend of mine now, Brendan Ahern. He runs this ETF. And K-Web is up this morning sharply. You can see on the back of China announcing more stimulus on the fiscal and the monetary side overnight. And so we're now, for the first time in many weeks, actually, seeing a fresh momentum buy signal. And again, the same rule applies. We have an initial free trade target. I believe that's around $35.40 or so. And then we can use the trailing stop for the rest of that. There was a question on Meta, I believe I saw before from YouTube, if I'm reading that correctly. So let me look at that. That's from the YouTube crowd. Thank you all for tuning in here as well on YouTube. Let me bring open Meta. And again, just to be clear, just so you guys know, I am having a different screen resolution on this screen than the others, so I have to constantly move this chart back and forth. So anyway, on Meta, yes, we do actually have a buy signal in Meta, and this is for the people asking on YouTube. And you can see we got a new buy signal there on the 2nd of December. It then very quickly reached that free profit target, that free trade target, meaning we now have a rest of the position we can keep on for a trailing stop. If I want to be really aggressive with my trailing stop, I can use the blue line. If I want to be more conservative and give it more wiggle room, which is what I typically tend to do, I use this purple line that you can see right there. So that's momentum coming into Meta. Hopefully that makes sense for those of you guys that were asking before. What about, sure, let's have a look at like Ethereum and those kind of things. Let's look at the ETFs. That's probably a bit more fair so everyone can look at those. So this is Ethereum here. Let me again get the chart so you guys can actually see it. Just 1 second. I need to make sure it's visible to everyone. So here is the chart of Ethereum, ETHA. We received a buy, it's an ETF, right, that I'm showing you. We received a buy signal on November 6th. And again, very quickly reaches that, again, what I call the free profit target, free trade target, meaning we can take half the trade off and keep the remainder on for a free trade. And so those buy signals came around whatever, $20 or so. This ETF is now trading around 29, let's call it $30. So that's, at least as I'm concerned, that's a pretty good trade, particularly given the fact that we're now already in a free trade, having reached the first profit target as well. And if anyone here is a day trader, let me know. Again, like I said before, I'm happy to show you how we like to use this intraday as well. HUBS, that's HubSpot, if I remember correctly. Let me look at this one and bring it down so you can see this properly. Let's just look at a few months here on HubSpot, drag it down. So let's say since like the summer, we had a sell signal first. And then you can see we very quickly reached that free profit target. So again, free trade, meaning now we're in a free trade. And then the trailing stop, ultimately, we had a second chance entry. Ultimately, we finally got stopped out on August 20th. So that's that. Then we had a little buy signal that didn't reach the profit target, ultimately got stopped out for probably just about flat profits. A little sell signal that got stopped out for a loss of probably, let me see, that's probably about $10 or so. And then we had a buy signal that remains intact around September, and that one remains intact. As you can see, we're trailing it higher with the purple line right there. You guys see that? Zoom, sure, we can look at Zoom. Let me just type it in properly. I know there's a lot of tickers that are similar, so give me a minute. I need to find this one. Yes, and we're going to look at more intraday as well. In fact, I want to show you guys what we're looking at intraday here in just a second. I already showed you K-Web, which was firing off earlier this morning right out of the gate. So here is Zoom on the daily chart. This is, again, momentum, right? All we care about is when is the stock moving. And so Zoom came in and gave us a new momentum buy signal in August, then very quickly reached that free trade profit target. And you can see it continues to trend higher along those lines. United Airlines is a very trending stock. That is very true. In fact, it's so trending, it's almost like toppling over itself, over its own head. So let me just show you how this thing is working. I think it's actually getting overbought now, quite honestly. I've been saying that now for a while, but I do think now it's really just stretched. Either way, in any way, we only care when it's doing something. So at least according to this process. So you can see we had a sell signal in June, and that ended up reaching that profit target, that free trade target, as I call it, very quickly. So now we're sitting on a half a trade. And then ultimately that got stopped down for the rest of it for a nice gain a bit further down. And then the latest signal we had in United Airlines came on September 3rd, around $44. The stock is now trading, 98. It was north of 100 just last Friday. And you can see how it's still trailing higher along both of these lines, particularly the one that I like to use is the purple one as the trailing stop. So entry was around 44. Stocks now trading $98. Again, it was north of 100 just a couple of days ago. Is this making sense, folks? For those people that are just joining, what we're doing here is we're following momentum. Even stocks that you may not think are all that interesting, like I don't know, let's look at Deere, for example, DE. I think that's a stock that a lot of people, let's see if there's momentum in a stock like Deere, DE, and then we'll flip intraday a little bit. Let me just try to find DE. Give me just a second. Trying to find it among all. Oh, here we go. Deere. Here we are. Here we go. Yeah, and then we'll look at intraday because I want to make sure you guys see all this. So, like for example, Deere, let's just look at the past couple of signals. So you can see, again, we only care about momentum when it's actually doing something. So we got a buy signal in August, very quickly reaches that free trade target, and then we can trail the rest, so nicely profitable. Then we had a momentum sell signal. It reaches its free trade target. Actually, this one got stopped out. Sorry, this one got stopped out for a loss of, I don't know, a couple percent. And then we got a buy signal on the 21st of November, and that one continues to work. It's already now reached its free trade target, right? So now let's look at some intraday stuff. What I was showing before is like a new signal this morning, just intraday. Just, again, literally just this morning on like KWeb, and it is Monday morning, right? So we just need to take that with a bit of a grain of salt. But even KWeb this morning, it's now a buy signal coming out of the gate this morning, as you can see right there on the 5-minute chart. So it's a buy signal. It's already reached its free trade target. Now we're kind of just in it for the gravy train, right? Going for that sort of trailing stop. Or I think even biotech is giving us opportunity here. Let me. I think that was this morning we had a buy signal. Yeah, so even biotech this morning, and obviously again it's Monday morning, so just kind of keep that in mind. You can see the buy signal coming in, and it's already reached its initial free trade target. And now we're in it for the rest. Let me show you also like the NASDAQ 100, because again it's just Monday morning, and so we have a bit of a, it's a bit early to do to show you a lot of stuff in real time, but let me show you what the signals even looked like, even just like last Friday. So like this, for example, is right out of the gate. This is the NASDAQ 100. You can see it here on a 5-minute chart. This is just last Friday. And you can see we got a buy signal, and then it reaches its predetermined profit target. And then if I want to, I can use a trailing stop for the rest, right? Again, same exact principle. Here we're looking at it on an intraday basis. I use this a lot personally for stocks, ETFs, but I also use it a lot for futures, because futures have a lot of momentum, right? Just like momentum stocks, like you guys all know, like the Palantirs of the world, and all those kind of names. There's a lot of momentum in futures as well. So for those people that enjoy other things outside of stocks, you might find it interesting to use momentum. Let's look at Netflix. That was a question from before. Apologies, just getting to it now. I think that was someone on the YouTube site that was asking about Netflix before. So let's start off with the daily chart first and see if this would have made any money over the course of this year. So we had a sell signal first. It actually was only a half position trade because it already reached its profit target, and then it got stopped up for the rest. So I'm going to call that, I don't know, a loss of like 4 or 5%. Then we had a buy signal at 6:30. That one ultimately got stopped out for a gain of about $40. So notice when I say stopped out, I mean it's an actual gain because it reached profit targets. This one also reaches its free trade target, then gets stopped out for the rest. So again, these are marginally positive trades. And then the latest signal in Netflix came on August 15th. around 648. The stock's now, at 900 and so dollars. So, those are very, very powerful momentum trades, at least as far as I'm concerned. So hopefully you guys can see, the power of using momentum in markets. Let's look at intraday quickly. I wanted to show you something that's right now live, and that's Netflix. So can you guys see this here? This is a live chart right now of Netflix. Can you guys all see this thing? Hopefully you can. It's an intraday live chart, a 5-minute chart, and you can see that Netflix gave us a sell or short signal, more or less out of the gate, around 15 minutes into the trading day. And so when I get this signal, and again, it very quickly reached its free profit target right there, I can buy a put option, I can short the stock, I can buy a put spread, right? Anything like that. And you can see the stock since then is now already down something like 2%. So that's intraday, right? So you can see momentum coming into the stock. Because again, we don't care when there's no directional movement as a directional trader. I only care when there's actually something happening. And then this is just an example of this morning. Is that helpful, everyone? Do you guys kind of see where we're coming from here? So again, what I'm looking for is momentum. And I really think as we are already now, but also particularly next year, we're going to get a lot of momentum moves. And the reason I say that is because we're going into a year, S&P is up 60% in 2 years. We're up, 29, 30% this year after a strong year already last year. Valuations are stretched, but more importantly, we're going to go into a newsier period. I think as the Trump administration enters, there's going to be a lot of news, and I think that's going to translate into a lot of opportunity from a trading perspective, and particularly from a momentum trading perspective. You can imagine there will be some news on one sector or one stock or another, being based out of some news out of the administration, and there'll be a lot of momentum for probably days and weeks to come at that point. So that's what that is. Yeah, sure. I can go back to the S&P as well. Let me quickly go back to this and show you that as well. So again, if all I do is just follow momentum, what it's going to allow me to do is to be only involved in the market when it's actually doing something. So this is the current chart of the S&P 500 here. I'm using Meta stock, and you can see that it has moved a lot over the course of the past 13 months. I mean, to state the obvious, but it's only giving us trades when there's actual momentum taking place. So over the course of literally 13 months, it gave us, again, I think it's at 11 trades, right? Because all it's doing is giving us something to do when there's something to do, right? And so the latest signal actually came right after the election on November 6th. We actually sent that out as a trade alert to our clients as well, and exited that on Friday. So now, like I said before, I would like to give everyone access to this indicator here. So if you like the idea of momentum, if you can kind of see the power of not being in the market when there's nothing going on, because it's just kind of nonsensical, unless of course we're looking for generating like selling option spreads and things like that for income. That's a different conversation, of course. But most people that are self-directed nowadays at home focus to at least a good extent on directional strategies, i.e., what really should be momentum. So particularly anyone in here that's an option. Is anyone here an options person? Does anyone here use options, by the way? give me a quick ME if you're using options or futures, right? Or anything levered, even just high beta stocks. Like you're looking for momentum. And so the TSD Trender works on meta stock. What we're going to do here today is we're going to make this available to all of you guys here for literally just 80% off. So like that's a huge discount. That's $397. You get access to this thing, and you also get 12 months of the trade alerts. So for $397, one-time access price, and you even get 12 months of the trade alerts. You can get it all. So what are you going to get? You're going to get this indicator that you can install on Metastock and other platforms as well. I'll tell you in a minute. You're going to get full use access of all the educational and member sessions, and again, the trade alerts we send out. There's bonus materials as well, like our 3x triple play strategy, which is basically 3 strategies that I think everyone should know and learn as well. It's one of them is a short term, then there's a swing and a long term strategy as well. You're going to get checklists with you for this as well, so you're not alone. And of course, monthly coaching sessions where we go through and go through the market, scan it live for the signals, and of course address any questions there might be. If you want to take advantage of this right here today for Metastock's special session here today, I can give you 80% off here today for anyone here today and today only. So that's $397. And the way to do it is to go to metastock.com/trender. And then when you go there, you can use, do the usual checkout payment versions. But again, you get full unrestricted access to the trender indicator plus 12 months of the indicator. We send out trade alerts on, like the big ETFs and some stocks as well. We actually just closed one in the SPY, as I mentioned before, on Friday because it really kind of reached our profit targets. If you need to call someone, I know Metastock has a phone number there at the bottom. It's 800-882-3040. So you can give them a call there. And we're doing a member session. Actually, we just did one last week. We're probably going to do one this week as well. And you're going to get full access to our members area as well. I'm going to quickly show you what that looks like. But the member sessions are awesome. This is what the members area looks like. You will see our open positions. You will get how-to videos. You will be able to install the indicator on the different platforms that we have it available on. In fact, this is the wrong product. Sorry, I'm an idiot. It's Monday morning. Where are we? What does it look like? TSD Trender here. Same idea though. It's the same idea. So you get access to the trade alert section, the educational materials section, of course the indicator. And I should mention the indicator is available on multiple platforms. It's available on Metastock, as we're here today, of course. Also TradingView, NinjaTrader, Thinkorswim as well. So if you have multiple platforms or even just one, this is where it can be used on. I want to quickly also circle back to one trade that I showed you guys before. It continues to work. It's this short signal, momentum signal in Netflix. It's just a 5-minute chart right today. As you can see, it's ticking live right now. So clearly this is live. You can see we got a sell signal and it continues to work. It's still working. And we can now use either, if I want to be aggressive, I can use this blue line as a trailing stop, or I can use the purple line as a trailing stop. So that's up to us. I typically like to use the purple one to give it a bit more breathing room. Metastock.com/trender. It's $397 yet. So you only pay this once. And then you also get, in this case, 12 months access to the trade alerts as well. And again, you can install it on multiple platforms, including, of course, on Metastock. Jeffrey, do you want to quickly run through some of the scanning stuff?
Yeah, I was going
on
to
Metastock? Yeah.
Zabir was asking, like, how do I find stocks? How do we recognize these? And I
Yeah.
was, well, let me show
No,
you.
please
So,
do.
okay,
Please
let
do.
me go ahead. I'll go ahead and take control here. Serge, before I do, I want to say thanks. That was great.
Thank you. I mean, it's great to be here, and it's Monday, so
It
you
is
know,
Monday.
take it slow. Like a week is just starting. You can have a busy week here, but I appreciate it, Jeff. So you okay taking it from here, showing people a
Yeah,
bit where to
I
find
got you.
things?
Yeah.
Perfect. I hope this is
The
helpful,
scanning is my
everyone.
favorite part of Metastock and this thing too. So it works so well. So
I
I'll
love
get
it.
it from you. Thank you very much, Serge.
Perfect. Thank you, guys. Have a good
All right.
week.
Okay, let me do this. Okay. Thank you for the question too, Sabir. Let me go ahead and, oh, no. Trying to do this in the right way. All right. Scanning. How do I reckon, Zabir, here's a question that he asked. How do we recognize these stocks, or does it apply to all stocks? How do we find stocks that have these momentum moves? And it's so easy to do. So I've opened up the Metastock Power Console here. I'm just going to come down here to where it says Explore, which is our scanner. I can scan any markets that I want with this. And what I've done is I just searched for, I put in the words TST. So the TST Trender stuff would come up here, right? So I've got TST Custom. You can actually go in and change a lot of the variables in the methodology. You can actually do an optimized test and kind of change them around to kind of fit kind of your stuff. And then there's two built-in ones. There's the day trade mode and the trend or swing mode. I'm going to run the trend or swing mode. Like I said, you can run it on any market, but just for the sake of time, I've already got it set to go for some index constituents list, the S&P 500, the NASDAQ 100, and then I'm blanking on the Dow 30. Okay, so I actually have run this scan, which is why the start exploration box is not illuminated. I've already got it up. It doesn't take very long to run. It just took me maybe 20, 30 seconds to kind of run through this. And right here, we can kind of see what came back. So I ran this while Serge was talking. Out of the 500 or so stocks that I ran through it, about 476 were rejected. And that leaves me with 27 that I can look at. 27 that have an actionable thing. So right here, I've actually already sorted it. You see Hershey Company had a long today. If it had a 1 in this column, it had to have a short today. And so I've got the symbols, very, very simple. That's how you identify. Very, very cool. So what I'm going to actually do here is we're going to open up the chart, kind of look at kind of Hershey. And ideally, what I would do is kind of take a look at all the 9 or so longs that are out here today and kind of see if there's any that I really, really like. Let me go ahead and really quickly apply the right template so that we kind of get the right indicators on here and all that kind of stuff. So here we got a buy signal from Hershey. It's almost up to the profit target. That might be something that we kind of want to look at. Something came out news-wise or earnings related today, which has pushed Hershey much higher. Let me kind of show you what the expert advisor and the commentary would look like. I'm going to go ahead and view expert commentary. And right here, it's just to say right now we've got a long signal. Our current profit target would be 212.97, which is this dot here. Our stop loss would be 171. Looking at this kind of from where we're at, I may want to look at the next stock on the list, which I can do just by clicking on this. It's going to bring up the next stock on that list. And then I could kind of take that one either. So you get an idea. It's pretty easy to identify which ones. This one actually looks pretty good. We got an entry signal. We've got a profit target right here and a stop loss right there. Very, very easy to go in and identify those and kind of set them up on the chart. Question came in from Sirkin. Sirkin, thanks for the question. Is there a back test that's available for these? And there is. We probably don't have time, just looking at the time, to run a back test right now. But if I wanted to go in and actually test, and I show how to do this in the boot camp that comes along, but if I wanted to come in and actually run a system test with Metastock, remember it's been rated the best software for 31 years in a row. I can test either just the built-in swing method, the day trader. There's even an optimize that allows me to go in and test the different moving average lengths, the calculation methods, all kinds of stuff to kind of get an idea of what works best. So absolutely, you can system test it. Sirkin, if you want to reach out or if you want to reach out to us and have us run a back test, we can. We can send you some results and that kind of stuff. You do that. Let me just type it up right here, metastock.com/sales-chat. So here, let me send that to the chat. But yeah, absolutely. If you do run an optimized test and you kind of say, well, I really like kind of these inputs as well or better, they will allow you to kind of go in and kind of, you just do a pretty simple editing process. I show how to do that in the bootcamp that's actually included. So there you go. Cool. Thank you for the questions. TST Trender is the product. Here's the indicators that are included. I just showed how to run the scan. You can run Metastock in white mode if you prefer, and that's the only difference between this screenshot and what I just showed you. It does have system tests. Here's the report of a system test and kind of how this worked out on a system. Now, one of the things I will say with our system tester, I love the way that it tests because like I can take a methodology and I can test it against a stock or the S&P 500 or like all the optionable stocks, and I can kind of really get some pretty good results of what's out there. You're welcome, Zirkin. Zubir says, thanks, this is powerful. Yeah, it's a really, really cool system. So you've got the expert advisor, you've got the commentary, you've got the alerts, all that kind of stuff is built into that. I like the commentary because it includes those clear entry and exit signals, your profit targets, your stop losses, your trailing stops are your stop losses trail, and so on every day it's going to kind of give you an updated trailing stop loss. You can go in and completely adjust it as you like. So I also like all the stuff Serge includes. That's the 12 months to the 2% club, the trade alerts, the risk management, and all this is for a very, very cheap cost. Tutorials on how to use TST Trender, the monthly coaching sessions, the strategy guide, the ultimate traders checklist, all of this stuff is included. And these live sessions we already did. They're available instantly. Serge spent a good time actually going in and kind of talking about the system. And then I went through and did tips. And so these were back in August when we recorded them, but these are recorded. They're available. As soon as you subscribe to the system, you're going to get it. So normally, $19.97 would be the price of this. And just with everything that's included, we're still going to back it with a 30-day money back guarantee. So you can give it a go, see how you like it. The introductory price is $397. You can do that by giving us a call, 800-882-3040. You can go chat online with us if you want a system test circuit, or you want to see some other charts and see how they look. Go to metastock.com/sales-chat. They're happy to pull those for you and send them. You can also go to metastock.com. For anything that we actually have available today, you go to metastock.com/summit deal and get this package, okay? We're going to be talking a lot about all of the different packages or different programs that are available as part of the session today. TST Trender, of course, we just talked about. Vora Victory Method 2. Daniel Sinnig's going to come in and talk about a SuperTrend bullseye. Jake Price Headley is next. He's going to talk about Big Trend Toolkit. It's awesome. Spoiler. Jake Bernstein is going to come in and talk about JBXC. We have some training that's available with Jake Bernstein or Oscar Carboni. The package price, the retail package price of everything that we're selling today is about $6,884. We've put together a special bundle that just includes all of the add-ons. It's $2,792, which is a huge discount. If you want to do that, you'll want to give us a call. It's not available online. You can also chat with us though, 800-882-3040 or metastock.com/sales-chat. So there you go. All right, we're going to go ahead and kind of just move on pretty quickly here. I want to thank you, one of our sponsors, the Traders Forum. If you go to www.thetradersforum.com, you can chat live with other markets. You can learn about technical indicators, the chat, a lot of lessons. We do a couple of sessions a week. It's a great session. Everything up there right now is free. www.thetradersforum.com. Hope to see you there. Of course, Metastock. I've talked a little bit about Metastock. If you want to try out Metastock and find out why it's been rated #1 for 31 years in a row, you can get an extended trial. If you pay $75, you'll get December and January and February. So it's about 25 bucks a month for the 3-month package. You can do that at metastock.com/summit deal. 800-882-3040, or chat online with us. We can send you some more information about why it works well and kind of a little bit of an overview, all that kind of stuff. Metastock.com/saleschat. So, all right. Our next guest is Price Headley. Price is a great friend of Metastock. I've been working with him for probably close to 2 decades at this point. Price is always, I love kind of the mentality he takes about trading, all of the research he's done over the 30 or so, the decades. I'm not sure. I think I'm going to date him by saying 30 years, and I'll probably be off. But all of the research that he's done over the years has been designed to kind of ignore smaller opportunities in the markets and really focus on the bigger opportunities. He does a great job with it. Let's go ahead and get you started. Price, how you doing?
Good morning, Jeff. I'm great. How are you?
I'm doing great, Price. I can hear you. You sound good.
Happy holidays. Exactly. Great to be with you all and kick things off. I follow Serge, and always a pleasure.
Are you all ready for the holidays yet?
Never. I always say I'm going to be ahead of it, but I think with the late Thanksgiving, it seems like it's made it feel like it's really coming up even faster.
Yeah, it is. It's the 9th already.
Oh boy, the countdown is on.
All right.
Let me share my screen real quick here. Tell me if you can see that all right.
Yeah, I can see it fine. Great.
Perfect. Right, I'm going to try to leave a little extra time for you so you can show the toolkit at the end. All right. Well, thank you, Jeff, and good morning, everybody. Price Headley here in Lexington, Kentucky, in our Big Trends headquarters. Great to be with you as this summit is launching out here. You got tons of trading content and different ideas coming at you. And one of the hardest things, I think, in this day and age that we live in with so much information at our fingertips is figuring out how we're going to focus, right? So I'm going to focus you today on just one technique that I like to use to find kind of the two rivers flowing into one more powerful trend. It's all about trends. And as Jeff alluded to, I look for big trends. I don't look for the small fish. We're going to talk about how you can start small as a trader and find trades with bigger potential, right? So this is something that even a smaller lot trader can benefit from, using low cost options. As I get things rolling, I do want to ask a quick question, get you all engaged. How many of you are trading options? If you give me a number of how many years you've traded. If you've never traded an option before, just type a 0. If you trade them for 15 years, type a 15. I love to know how many option traders we have and how long you've been trading options if you have. As Jeff alluded to, I've been trading options for 35 years and counting, and I launched Big Trends 25 years ago and counting, and Jeff and I have known each other for about that whole time because he really helped me to quantify a lot of my Big Trends methods into the clarity that they're available now on the Metastock platform as something called the Big Trends Toolkit. So we got a 3-year trader. Great to have you with us, Serkan, as well as more popping in. And some that have never traded options, don't panic, okay? Know that we're here to guide you through this process in a really simple, easy to effective way. Quick disclaimer to get out of the way, of course, to remember that the information we share with you in this presentation is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or method is not necessarily indicative of its future results. Do see our terms of use on our bigtrends.com homepage for more information here as well. Great to see Ricky, another 3-year options trader. So again, experienced and non-experienced can all benefit from this. This is my favorite small account strategy. Guess what? I use it for medium and larger accounts too, but it's how you can start small and build your confidence. And really, ultimately, it's about anything you trade has to prove it to you that it's worth your time, it's worth your risk capital, and it's something that you can execute again and again and again with consistency. And consistent execution is really what our focus is on for our Big Trends fellow traders. So this strategy goes for up to 300% gains. That's 4 baggers, the proverbial home run or grand slam type of opportunities. I'll show you how we do that, but still taking partial profits along the way too, while managing risk. And so bottom line is we're going to talk about not one technique, but actually 2 indicator techniques that actually, when they fire together, kind of like two rivers flowing into one more powerful river develops. We call it double confirmation. So that gives us double the confidence. It doesn't guarantee it's a winning trade, right? There's going to be winners, there's going to be losers. That's the case in any trading system or method, and you just need to know how to handle it. And so what we do is we actually, what I'm going to share with you today, you can do this in the Metastock platform yourself if you want to invest that time. I know a lot of people who are like trading for a living and stuff. I mean, Metastock is a great platform to do it yourself. We'll get a lot of people who say, do it for me, right? Give me the trades when they signal to here in the Big Trends headquarters that basically, fire it out as a real-time email alert and a real-time text alert on your mobile phone. And so we're going to walk you through how we do that, but you can of course do that yourself as well via Metastock. So we'll give you a bunch of case studies, chart examples. It's about taking advantage of these moves without having excessive risk or excessive cost into a trade. What I'm going to teach you about today, you could get started controlling each 100 shares for as little as no more than $100 per options contract, controlling each 100 shares. So whether you're trading, we tend to recommend trade at least 4 contracts because we're going to talk about partial scaling out at several profitable target exit points. So we'd recommend having at least 4 option contracts so you could get started with doing this strategy with as little as $400 maximum per trade. Let's start by looking at a winning trade example. A chart's worth 1,000 of my words. And this is one we did on a less than high flyer. This is Freeport McMoran, copper and gold. FCX is a symbol. Remember, everything I share with you today, it's basically a focus on what we've done in the past. It's never a guarantee of any future results. Future results will vary. There's going to be winners and losers. We'll show you how to manage both. But the idea here is that, look, what's the red line happening on the chart here? Well, we got in, this is actually pulled out of an hourly chart. So a 60-minute chart example is what we're using on this particular system. So in this system, though, we like to see that first hour of the trading day showing us positive momentum. So FCX, you see, started to launch here in this first green candle. Remember, a candle means that we opened at a certain level, then we close even higher than that. So that's the positive momentum on that particular hour. And notice what the indicators show. The red line is what's called the Williams percent R. Larry Williams developed this, the percent R. That stands for percent range, okay? Percent R, okay? So when you're looking at this percent R, what does that mean? It means that it's measured on a scale. We like to scale from 0 to plus 100, what I call the grade school scale. Larry used a minus 100 up to 0 scale for his trading. So it's going quote unquote overbought into the top few percent of its readings. You would think that overbought means it's bad. It shouldn't be bought. Guess what? You need to retrain yourself, because when and guess what? I'm constantly looking for new angles, new edges, and a lot of times it's unconventional wisdom. It's things that are not what you'd expect. Because the second tool in blue here is called the CCI, the Commodity Channel Index. Both of those are firing together, breaking out on that same hourly close. So at that hourly close right there, I'll put a sideways arrow by it here. The sideways arrow, we're saying buy into that right at the start of that next bar here. So, and you see, we actually were not exact in our timing here. Oh my goodness, I'm admitting we're not exact in our timing because it's a structural thing. The structure says it's breaking out to the upside. The rocket is taking off on not one, but 2 different indicators. But it can also pause. It can also take a little breather. I don't know about you, but when I sprint, sometimes I gotta then take a little breather, walk off a little bit of that big burst that I tried to make. But more importantly, in this case, it is successfully making it. It's taking a breather, and the key is that you don't get shaken out. You don't give up on the trade. So one of our first big rules is we don't, on these cheaper options, notice what we bought, by the way. The stock was trading in the neighborhood of about just under 46. We bought the 47 strike calls about a month ago before their expiration in September 23rd. The expiration was the 3rd Friday in October. These are called the monthly options. So these expire the 3rd Friday of every month. They're the October expiration monthlies. Okay, there are weeklies out there too. There are even dailies on S&P 500 and a few vehicles, but we're focusing on a little more runway than that, about a month out, something that you don't have to sweat that time erosion too much. I mean, every option you buy, these are options you buy, every option you buy has time baked into it. different levels. We're mostly going to buy options that are all time in this approach to get them this cheap, to get them to $1 or less. This is meaning we're paying $100 when it's quoted $1, $100 to control 100 shares of stock on one option contract, right? So if you bought 4 of those, it costs you $400. These examples we show you, we assume you invest $1,000 a trade at most. Okay, so we pay, if you invest $1,000, it'll cost, you get 10 contracts in for $100 a piece. That's $1,000 before commissions. Commissions didn't cost you more than $1 a contract per side, getting in, $1 getting in, $1 getting out at most. And as you get more active, it can be cut to half that. So it's a great way to say you're going to keep the vast majority of what you make. But notice we're getting this pause after we got in, right? As I said, we were not exact in this trade, and we still made very healthy profits over a few days. Notice that as it pulls back, there's not that much of a pullback. We're getting what we call a retest. Especially in the afternoon, there's a little retest back under the overbought thresholds on both the %R and the CCI right into these afternoon lows. Okay, we don't get out there or get worried there if it's coming out of that breakout level. We said that's what we call a key retracement or retest. And what we do is, instead of using a price stop on these cheaper out of the money options, we use what we call a time stop. A time stop means that if it, by the next afternoon after we got in that prior morning, if by the next afternoon we are below where the stock was a subsequent afternoon or any future afternoon, we will say pull the exit ripcord, get out based on the time stop, saying it's not getting the movement that we expected. But we don't do that on the first day of the trade. I always say that one day never makes a trend, right? And here, 1 hour doesn't make a trend, but we look for at least a couple of days of action. You see the next day, of course, look what happens. Big gap up. So target 1 is achieved here for the 100% gain off of the open here, where the stock is now trading up just over 48, right? So it's gone from about 40, just under 46 to 48. It's rallied just over 2 points. So maybe even 2.5 points, and rallied in the neighborhood of about 5% on the stock. We're at a double on those options. What do we do when we get a double on any option pretty much these days at big trends? We say take half of your trade off at a double. That gets you your risk capital back, right? If you invested $1,000, it's now worth $2,000. It's doubled. You sell half those contracts, and now you keep the other half on the table. You now have a risk-free trade. So with that understood, we sell 5 of our 10 contracts at 100%. You get your, and because it's now trading at $2 per contract, you say, okay, guess what? Now we can be financially free and emotionally free to keep riding the rest of our position to our next target. In this case, it gapped beyond our next target. Our next target is typically a 200% profit on half of our remainder. So if you have an odd number of contracts like 5, we would sell slightly more than half. We'd sell 3 of our 5 at 200%. Notice it pauses after that breakout, kind of goes nowhere the rest of those next couple of trading days, right? See how it's called, we call that a flag pattern traditionally in technical analysis, right? You got your flag pole of the big gap up, right? But then you've got remember that pause that refreshes? Notice what the indicators are doing, by the way. %R staying in its relatively overbought area. CCI staying, commodity channel index, staying in its overbought area. We use it for individual stocks too on the CCI. But the point of this is, why is it staying up there? It's going nowhere relatively. It's just kind of catching its breath because you're losing older data that is lower, right? And so you basically are saying, hey, even as it doesn't make more net highs hour after hour after hour, it's saying it's still a higher level than it was a day or 2 or 3 ago. So point being that that's still a positive refreshes. Everything's still all systems go for more upside potential as we stay in that overbought area. And notice, by the way, on the %R, by the way, that's in the top 20% of readings right there, between 80 and 100%. And that's, I always equate that 80-20 rule, Pareto's principle, with the same concepts here, that, we want to trade the top 20% of stocks in the top 20% of their readings that are showing us their best strength, right? You want A+ stocks. You don't want C, D, or F stocks. You want to get, top grades, and you want to stay with those stocks. This method gives you that ability to let the 80-20 rule keep working for you to get the top 20% of your readings, get you in the top 20% of your situations that are probably going to drive 80% or more of your profits, especially as an options buyer. So this is one of the best ways I know to put Pareto's principle, the 80-20 rule, into work in your trading portfolio. So you see, the next day we gap up again and we're beyond our 200% target. So we're selling 3 of our 5 remaining contracts, half of our remaining position that's open. We saw half of that open position at 335% beyond our 200% target when it gaps up to 51. By the time we're getting our alert out, our final target is 300%. We're already beyond it. So we're getting our VIL right off the open. We're firing something else out and it's rallied some more in that first bit of trading. And now we're selling the last piece out at 388%. That's a little bit above our norm, right? We're shooting for 100, 200, 300%. So that's a little atypical. Let's be clear about that. Typically, if we get all 3 targets achieved, 100, 200, 300%, that same kind of allocation, we'd expect to make on $1,000 fully invested. We'd expect to make about $1,750 for all the scaled profits added up when we hit all 3 targets on $1,000 fully invested, before commission, of course. So the idea of this is that, okay, we're generating, in this case, $2,281, a little bit of an outlier. And hey, what if it keeps going up? I don't care. I'm happy in the matter of about 4 trading days to have booked more than triple in the portfolio off the original investment, right? So you can see it's about how you let that trend structure that's telling us that the rocket was taking off. We got on board. We didn't get shaken out in the first trading day or even day and a half of that trade. We'll give it some time into the end of that second day before we would say pull the plug. We don't put a price stop in there initially. We do trail stops after we get the first target of a double. So point being that, look, indicators, okay, the 2 techniques. Commodity Channel Index, developed by Donald Lambert at the start of the 1980s. And when I noticed the indicator showing me this pattern for big name stocks, I went and read some of Lambert's work where he was doing the same thing with the futures markets. But we're focused on big name stocks, right? Because we want to trade the options on those stocks. I think it's a lot easier to move an individual stock than it is to move a whole futures market. And that's what we care about then, is to self-select the best of the best stocks. Or on the downside, we can do this with put options, trading the downside, the worst of the worst stocks, right? The ones that the institutions, who, let's face it, the institutions are the ones driving the market, not you and me as individual traders and investors. The institutions are the ones who are big time accumulating the leaders, or they're big time distributing and selling off the laggards and want that bad stuff out of their portfolio, just like you and I do, right? So we can see where the whales are going. We want to follow along. And then Larry Williams developed a %R range indicator. We put our big trend spin on it to look for these top 20% upside opportunities, bottom 20% downside opportunities. So, but we have to see both of them firing as new breakouts on that same hourly bars close, right? So it's really picky. When you become a subscriber to, we call this portfolio Grand Slam options, we give you full access to the system, settings, rules, everything that you need to know to follow along as a home gamer, but you don't have to do the screen watching. We do that work for you, so you can allow yourself to leverage your time and know that the trades are going to come out just minutes after that first hour close on the entries, the afternoon exits the following day, if we're not firing. Otherwise, we'll tell you how to manage your profit targets along the way as they hit them. So let's look at another example and another one that hit all 3 of its traditional targets. This was MasterCard. MasterCard was fired out in this example back in late August, and we bought the third Friday September monthly 495 calls when MasterCard got both of these things firing together. As we looked at it here, about 472 was the stock price, right? So if you bought 100 shares of stock on MasterCard, it would have, at 472, it cost you over $47,000. This is the joy of options, right? That we can buy for each 100 shares that we want to control an upside play on MasterCard. We paid a whopping $82. That's 82 cents times 100 shares that are in each contract. So $82 to control 100 shares of stock worth $47,000. You can see how the leverage magnifies dramatically. Now here's a really interesting example, because notice that, I mean, I always found it fascinating, all the different patterns. Everything that I do is based on the structure of the indicators, and is this chart pattern a pattern that we want to continue to hold or not, right? So you see, we get the initial breakout on the hourly chart that first day. Start of the second day, we're going the wrong direction midday, right? We're actually briefly down below where we got in, but by that last hour, we've managed to come back to right in line or just a hair above where we got in. So we're saying, look, give it another day. If it still doesn't get going, we'll get out the next afternoon, okay? So we're not panicking and price stopping. Guess what? You would have been down on this trade on day 2 intraday there from where we got in, right? We got off to an okay start. We might have been up 25% or 30%. Then we might have been down 25%. And what I don't want you doing is getting flushed and shaken out by that noise, right? We're giving it a chance to let the trade prove it to us and prove it to you that it deserves to be held. You see, the next day, day 3, we're gapping up, and now we're actually hitting our first target at 100% gain, right? So our 82 bucks a contract's up to 164 bucks a contract. We're selling half of our position. We got into, I think, 12 contracts here, and then we sell 6 of them at the 100% profit target. Now you have the risk-free trade. A couple hours later, it runs on up to 200%. You say, how is it possible that MasterCard started at 472, now it's up into the 480 to 482 range. It's up about 10 points, maybe about 2% on the stock, and we're making a triple on it? How is that possible? It's not to the strike price yet. That's the big fallacy that a lot of people don't understand. We're buying a right to own the stock at 495, and most people are saying, well, that means you've got to get over 495 to make money, right? Only at the expiration is that true. If we can get there well in advance of the expiration, we don't have to get to the strike price. Notice the absolute highest MasterCard got was 486 here, and we were already out at that on that particular hourly bar up into the mid 480s at 300% gained. So you can see that we got almost our full 1,000 and not quite. We made $1,722 in gross profit dollars before commissions, right? If you're in for 12 contracts, your maximum round trip commission is 24 bucks. So you're still up about 1,700 bucks after commission, give or take. But the point of it is, you know, that we were in, we were out in a matter of several trading days, and we never had to get to the strike price. In total, the stock rallied about 3% at most, and it made 300%. That's like 100-to-1 leverage ratio you're generating compared to the underlying stock. The key, too, is that we didn't get shaken out. You've got more staying power with this methodology here. So we're looking for trades that can find these opportunities. Now, Apple, here's one that moved past its final target. You may recall back when Apple announced their own version of AI. We know that AI stands for artificial intelligence, but back in June, Apple joined the fray and said, hey, we're going to have Apple intelligence as our AI is going to be in our next phones and our next devices and the fall launch that, of course, they had, and then the new operating system they have to start incorporating AI features into their ecosystem here. So as you look at it, you see, okay, this is an interesting one, right? Both of the indicators launching together, first hour close. We will never be early, okay? I don't want to be early waiting around hoping for something to happen. I'm looking for evidence, right? Your job as a trader and investor is to see the evidence that the markets are giving you and to respond accordingly. Not to fight the trend, not to fight the momentum, but get aligned with it. Get on the rocket ships as they're just taking off. So first hour close, Apple's gone from the low 190s up to about 200. You say, oh man, you missed it. It's up 5%. No, we did not miss it. This is the start of the launch. So launch phase sequence initiated. We're just over 200, about 201. We're buying almost 10% out of the money. We're buying the 220 strike calls here. June the 11th, we bought the third Friday, July, about 5 weeks ago before the expiration. The very next hour after we got in, because we only paid 65 cents, 65 bucks a contract, guess what? Apple is launching, and this option, it's a stock rallies another couple percent. That very next hour here goes to about 204. We're already selling the first half of our position an hour later at 100% gain. This is why I remind subscribers when you come on board, don't just rely on real-time email. Real-time email is very effective, but we also give you a real-time text alert option where basically you can make sure you see it on your mobile phone if you would happen to miss an email. You got a couple of different streams of how the information flows to you in real time. Say, get on board these Apple options, do it quickly, and make sure you lock in your half out at a double. It pauses for a few hours, and then you see the next day it's launching again. We're getting up to 210 on the second piece. That was our 200% gain. Remember, it's not to the strike price yet, and in fact, it didn't have to get there because that second or the following day on the 12th, that next morning, it's all the way up to 217, and we're selling out at the final piece is up a whopping 553%. That was just the final quarter of our trade, right? So the point of it is it's only a partial positions that we're taking off at different profit targets. But this is how you let winners run and sleep really well at night, because when you sell half at a double, you have no risk in the trade financially anymore, right? You've gotten your risk capital back. That frees you to let it keep running. I see so many traders who are worried about seeing a winner turn into a loss that they take their winners too quickly. This is how you let the rest of your trade keep running to bigger profit opportunities. Look at how beautifully the indicators just stayed in the top few percent of the percent R. How the CCI stayed in that top range, might have gotten close to a retest, but then popped on up, right? So staying overbought is actually bullish. It tells you that the institutions are continuing to hit the pedal to the metal. They want more. And when they want more, you want to keep riding, all right? So that's our objective here. Now, not all trades are going to hit these profit targets, and not all are going to get to their ultimate target. But the idea is that, hey, you can still make a nice profit even when you take part of your gain off the table and then manage the rest accordingly. Here's one with Carvana. Carvana's options are historically fairly expensive. You say, why would you buy expensive options? Because it can move a lot and can move really quickly, right? We got our signal on both of these things taking off together. Carvana is telling us to get in there in about the 146 range, and then it runs on up quickly to about 156, right? So it's up about 10 points in that first wave where we get our double. So 10 points on $146 base, you see it's rallied about what, 6 or 7%. And so we make 100%, right? We paid 90 cents. We had to buy the 190 strike calls out about 5 weeks away from expiration, right? So the options were priced pretty richly, and yet we still got a double on our first half of our trade. Now we had a risk-free trade. Then it got stuck, right? It got stuck going nowheresville, and over those next few days, as it did get stuck, our double turned into our break even actually is where we trail our stop. We even got a little bit of an adverse fill where the second half was closed down 11.1%. And you say, oh man, you gave up all your profit. But see, we didn't, because we took half off at a double. So in this case, when you add the two halves up and the trailing stop gets hit on the rest, 100% take away the 11% of the second half that gave it back. You take that 89% divided by 2, and you make in the neighborhood of about 44.5% on the trade, right? So overall, it made about $490 in gross profit before commission. So the idea of this is we didn't hit our ultimate objectives, and we still made a healthy profit for about a week's work. So it's important to realize that, hey, if you can do that where you focus yourself on not getting too high or low, that's what selling half at a double does for me. It says I'm not going to go all in. I'm not just going to ride everything and hope to the moon and beyond, Buzz Lightyear style. I'm going to say, no, let's be sensible. Let's take our risk capital back, and let's then see if it keeps going, great. If it doesn't keep going, we can, even when it trails out at a break even on the other half of our position, we can still generate a near 50% win for making a double, and then about a break even. In this case, slightly under 50%, still a very healthy result for a week's work. Another one, Best Buy. You can see here, we got into Best Buy as both of them were breaking out here, and then we got stuck in the pause, right? Sometimes you get stuck in that first little retrace, and you see, so we bought it that day at the short-term high, okay? So sometimes we've all been there, right? You say, oh man, I got faked out. Well, not really. You say it's going through this normal little retrace, this normal pause that refreshes. It's kind of tracing back to the support, but then it starts to take back up into day two, and we've come on up very nicely where we're above where we got in, right? So we continue to hold that trade and give it a chance into the next day. The third day, you see the gap up, nice gap up. It goes from about the 80 level, gaps up in near 83. When we bought into this about 79.5, we bought the 84 strike calls. You can see about in this case, 4.5 points out of the money. And then it's rallied up to 83. We've rallied about 3.5 points in our favor, and our 75 bucks a contract has turned into a double, 106% action on the gap up, a little beyond our double target. Then we raise our stop, and we actually got the stop hit later that day when it came back down to 61%. So add those two halves up, divide by 2, and you're up about 84% on that whole trade. $836 in gross profit dollars for again, about 3 days work. So it's important to realize, okay, the structure of these has allowed me, I've showed you now multiple times where we were not right to the exact moment. We didn't see it just completely launch to the upside immediately after we got in. That's a good thing in the sense that, yeah, we want to make sure you got some time to get in the trade. Typically, we want to make sure that, yeah, you're not lollygagging, that, you know, we give you a really clear get in at this price or less. Here's your instruction. Whatever platform you use, fine. We're not platform dependent. Just know that you can follow along, whether through your email and or through your text, to say, okay, I've got a signal here. I need to get into these options. I need to go ahead and say, I'm going to put in X dollars into each new trade, and do that. By the way, don't say I'm going to buy 10 contracts of every trade we call out. Rather see you say, I'm going to put in, whether it's $500 a trade, $1,000 a trade, you know, whatever your comfort level is to get started, to let the system prove it to you. Like I said, you can start with as little as 4 contracts. In this case, it's 75 bucks a piece. That would have cost you a whopping $300 to start if you want to just try 4 contracts, essentially at basically saying, I'll try $400 maximum commitment at a time. So the point of this is that, okay, this is how you do it. This is how you get started. This is how you let the system prove it to you. Don't just take my word for it. Let real trading results, both winners and losers, show you how the upside works, how the stops work, and how you can let this work for you. This is one where Target got our targets. TGT, it's had its more recent challenges, but this is a previous example from early in the year where you saw it have both indicators say breakout, you know, big surge, and then we got stuck in a little pause. Then it started to rally. Then it came back for another kind of a classic retest. This little slam down pullback here was a big time retest, and it was right before a big earnings pop where we said, we think the risk reward is worth holding. I don't usually do that right into earnings. So I said, the structure of this thing is really set up well. And indeed, it went from 150-ish to 170-ish the next morning when it gapped up. We got our first 2 targets, 101 and 200% gain on those 180 calls, still 10 points out of the money, right? And yet these had plenty of time left. Exiting there in early March, I got to the 3rd week of April, and you can see in this case that we're selling the first 2 targets, and then it trails back down, and we get stopped after progressively raising our target to a double. After we got the triple, we were out at 105% of the last piece. That made $1,200 plus gross profit on that trade, right? So it just shows you that there's a number of times where we get off to kind of slowish starts, but the structure is still good, right? If the structure is no good, you don't want to hold it. You never want to justify a trade where the structure is breaking down. You want to say, okay, the structure is not holding, get out. Let's talk about losses and what a loss can look like. Here's one with Fluor, the construction giant. I was kind of viewing like, hey, there's a lot of opportunity for construction money to be spent by our government to rebuild our ailing roads and bridges, right? And yet, okay, so you can have your view on that, but the key is a chart tell the tale. This one was just a touch too slow. Got a retest on the percent I was holding, but we got in here on Fluor in the neighborhood about 34.25, and it started to give it up in that last hour about $34 or so. We said it's just losing that momentum. It's too slow. We stopped out of it for just under a 17% loss, and then it took off the next day. Sometimes that happens too, right? You say, oh man, took it out, then it rallies. But you know what? My view is there's plenty of fish in the sea, right? There's always more opportunities to come. And so I don't want to get stuck on slow trains. I want to be on the express trains that are going to get me and get you to the destination of growth opportunities that much faster. Another trade that hit all 3 of its targets, AMD, Advanced Micro Devices. This is kind of as good as it gets, right? We showed you some that didn't get off to the perfect start. This one did, right? You can see AMD launches on the first hour, saying, okay, we need to be getting in here as we start off this second hour. And it paused a little bit into that subsequent hour, so you had some time to get in. But notice the stair step, right? As they say, stocks take the escalator on the way up, and then they can take the elevator on the way down, right? But you can see it doesn't get more of a classic stair step day one, day two. It's just like higher highs, higher lows. By day three, we're getting our final targets, 200 and 300% as we cash out the last one here, right into those turns out to be short-term highs. We don't claim to pick tops. Sometimes it just works out that way. Sometimes they keep on running. But we're saying, look, it's about how we took money out of the markets over about a 48-hour, 49-hour window, right? So the idea is that you're looking at this and saying, yes, and by the way, look, when we got the signal, both the percent R and the CCI, the big trends way, we trade those. It's different than your typical default settings on those. So don't use default parameters on other platforms. We'll give you the proper settings to use to trade it the big trends way. When you become a subscriber, which will tell you about a great starter special on that in a little bit. But the idea is, look, it's about saying, look at how beautifully they just stay in that overbought threshold, right? That top 20%, the Pareto's principle we just said, yeah, those are going to drive a lot of results for you when you find these kind of patterns where they just stay in that classic overbought threshold. When it comes out of there on both of them, don't want any part of that. You know, by that point, it's like, man, it's breaking down. I have no idea which way this thing's going to go with a big question mark on that gap down, because it's already violated on these other techniques. And guess what? We weren't a part of that anymore. We're already done. So we don't have to play the question mark guessing game. I'm not into coin flips. I'm into looking for things that give me a substantial trend advantage. So I've showed you some individual trades, but what happens if you stack all the trades that we called out? We call it Grand Slam options. We're going all the way back in this portfolio to the beginning of 2017. Okay, so we're looking at a whole lot of different market environments. You know, we've got the pandemic in there. We've got the 2022 bear market in there. Of course, the more recent snapback bull run. My team always does a great job of updating these charts. This includes all closed out trades, everything we've ever called out, win, lose, or draw. And it says, you know what, you started with just a minimum of a $5,000 account, and you were putting in $1,000 a trade. And here's the key: as the account grew, you didn't raise your capital allocation. You stayed with never committing more than $1,000 into every trade. So obviously, you can see this portfolio would have grown from 5,000 over 39,000. So the gross profit before commissions, before subscription investment, just allocating a maximum of $1,000 a time at most, no compounding here, would have been a $34,000 plus gross profit. I mean, that's pretty insane. That results in a 687% gross return on your initial $5,000 starter value, right? As we know, and you know, past performance never guarantees future results. Future results are going to vary. There's going to be times where it's working better than this and times where it's working worse than this. You can't assume that the next 7 or years or whatnot are going to be the same. They won't, right? But the key is that I like to think that in our 25 years here, big trends and counting, now in our 26th year, that we're really focusing on the best of the best. This Sorkin asked about puts. Yes, we trade puts too. It's just that certainly we've seen a lot more bull examples than bear examples in recent times. So we're going to keep you on what we consider to be, as Jesse Livermore in the book Reminiscences of a Stock Traders reported to have said, there's not two sides to the market, the bull and the bear side. There's one side, the right side. Let's get you on the right side with Grand Slam options and the structure of what we're teaching you. Just since the beginning of last year, so in just under 2 years here, you can see it's more than doubled. The 5,000 account be worth 11,361 gross before commissions, before subscription investment. Same $1,000 invested per trade, just in these past couple of years, right? Knowing that past performance won't guarantee what the next 2 years looks like. Next 2 years are going to vary. And I do agree that, I think we're going to see lots of momentum moves in the coming year or two, based on news flow from our new administration coming in, based on, of course, world events. There's a lot of things happening all around the world, and it's going to create a lot of opportunities and a lot of risks for those who don't know what's coming up. We help you manage that risk by hopping in, hopping out quickly. We don't hang around for a long time with these. I don't really like the idea of just buying and holding an expensive market, right? I like the idea of being able to hit in, hit out, like know exactly what your structure is and exactly what you can do to manage your own risk. And as you get better and better at seeing me and how I do this, I give a lot of week-to-week coaching to all my subscribers as well on what we're doing. So you'd learn while you earn with this strategy. You'll get real-time alerts when to get in. You'll never be left hanging. You know exactly when to get in, exactly when to get out. So what have we set up for you today? Let me walk you through a super starter pack special here. And if you came in late, yeah, I know Jeff's recording all of these, James, so you can go back and watch them again and soak it in, because I know I go kind of fast to take 35 years of options trading knowledge into hopefully a meaningful hour or so for you. So what I've done is I've said, you know what, I'm not going to tell you to go buy a whole bunch of time with this. I'm going to say try it for the next 3 months. So basically try it as we finish out this year and look as the kickoff to next year. Try it for these next 90 days. See how it works. See what winners look like. See what losers look like. You know, see how we manage with time stops. See how we trail to protect our profit, but still give it wiggle room. I see way too many traders that are just not giving their trades enough breathing room, and thus they don't have enough staying power to be around for the next big move, the next grand slam, home run type of opportunity. So you're not just going to get trade alerts from us. You're going to get a lot of education. When I founded Big Trends in November of 1999, I said my first goal is to be a credible source of information and to teach people how I do this and how you can do this too. So you get a lot of support. I do weekly video training and coaching for how everything we saw in the Grand Slam options the week before and everything we're looking for in the week ahead. So you know how things are set up. So we analyze each and every trade we call out, win, lose, or draw. We never sweep anything under the rug. So it's real world trading here. You can't be fantasy trading just thinking about your winners. You got to manage the trades that don't fire as well. We do a really nice job of keeping you in that loop to clean up everything, whether it worked or whether it didn't. You also get dedicated email access to me and my analyst team. So if you've got a question related to the trade and whatnot, you know, we can't do this on other trades that we didn't call out, but we explain why we got into the trades we got into. This would be buying it off my website a month at a time would cost you $297 a month. So times 3 months, that'd be $891 you spend for a 90-day access via the Big Trends website. But I'm going to mark it down dramatically for you. Take 3 months of this with the educational support, and I'm going to take it down to trying it out for the next 90 days for only $177. Do the math. 90 days, under $180. That's less than $2 a day when you lock it in today. My thank you back to the Metastock team and to you, because Jeff and the Metastock crew have been so good to me, helping me code my techniques within Metastock. And in a few minutes, I'm going to bring Jeff in to actually show you how our Big Trends toolkit works in there. But let me first show you real quick. I've got a few extra minutes. Let me actually show you first this order page here. And note the order page. It is not a www link. It is members.bigtrends.com/slam. When you become a subscriber, you get a member site access via that members.bigtrends.com. We'll get you like a unique password, username password combination that you can then basically access all the recordings I do for all the training videos over the past year are in there. Even though you're just signing up now, you're going to get a whole lot of other content in addition to the rule sheet, knowing exactly the parameters you should plug in for the indicators that we use for Grand Slam options, and then the support of me and my team. Like I said, 25 years now in our 26th year and counting. I'm blessed to have served tens of thousands of traders all over the globe with cutting edge, unconventional wisdom, as I call it. So when you go to that page, let me just show you that real quick before we hand it back over to Jeff in a few minutes. So there should be no questions. Go to that page, members.bigtrends.com/slam. We've already taken the discounts down, right? So there's no promo code to apply. We've done the work for you. You're getting 3 months, 90 days worth of access, less than $2 a day is what it works out to. $177 to lock in the next 3 months, and let the system of Grand Slam options prove it to you. Now, if I've gone too fast, you actually see my team actually set up something. I wouldn't know where they set up, and even a nice little multi-hour boot camp I did. We call it the Gamma Options Boot Camp. It's basically teaching you the power of how far out of the money you should go, where the leverage points are at their ideal point to get more bang for your buck out of your options purchases with this approach. So Gamma is one of the options Greeks. You learn about the Greeks as part of that system, but more importantly, you learn why it's so powerful. That's just a tack on for only $77 more. It usually be $295. So my team surprised me to throw that in there. That's a nice extra, and you get lifetime access to the boot camp training, right? It's still buying the alert service. You're buying 90 days, right? Because you can then re-up after 90 days once you see how much we can do for you. But you can hit that add to order if you want to add the boot camp in. It'll tack that on there, and you can then make it just $254 if you want to get the lifetime access to that multi-hour training that I walk you through several sessions on how to understand the more in-depth ins and outs for those who really want to learn how they can trade that for a living themselves. But if you just want to get the trade alerts, and we'll call them out for you, when to get in, when to get out, $177, phenomenal value. Go to that page. And by the way, you see, if you've got questions, we've got representatives standing by, happy to help. And that 800 number, if you don't remember it, 800-244-8736 in the top right, just remember 1-800-BIG-TRENDS on your phone. That'll get you to us there, 1-800-BIG-TRENDS. Or you can email my customer service team via clientcare@bigtrends.com. They're also standing by if you've got questions on the Grand Slam option system, want more information on how that works. Now, I'm going to check in with Jeff to see if maybe I need to answer any questions, but I would like Jeff, if he's got time, to show you the Big Trends toolkit as well, because of course it's just such a powerful thing. And of course, we just a reminder, if you came in late, the kind of profit opportunities that are there are dramatic, right? We can't guarantee what the next trade is going to look like, but it's about stacking them up. You can see the more than double over the past 2 years, and of course the longer term 5,000 turning into 39,000. Again, remembering past performance can't guarantee future results, but it's all yours today for only $177 when you go to that special link at the bottom of the page there. Jeff, I'll hand it back over to you to see if we got any questions before we set up for you to talk about our Big Trends toolkit and all the different things that are available for folks that you help code and create for us on the Metastock platform.
We had some questions, but I think you got them all.
Oh, good.
Yeah. In terms of the session being recorded, James, we will actually, it's just youtube.com/metastock. While you're up there, like and subscribe. And we will send you a link about an hour after the session is over with the link up to the channel. So super easy to find. It's available as soon as we're done today. Actually, it's available right now because we're streaming to YouTube right now too. So, but yeah, I think you caught all the other questions, Price.
Great.
Michael says, best of the season to you, and I will reiterate that. Best of the holidays to you.
Happy holidays to you and everybody out there. Thank you so much.
All right, no problem. And I want to spend just a few minutes talking about the toolkit. But before I do, thanks for everything over the years, Bryce. It's been a lot of fun.
Thank you too, Jeff. You take care.
You too. Okay, let's do this. All right. I'm getting there. Okay. So I did run a quick scan. One of the things is, like, with the amount of time that we have, I just, I think we're on quite a few iterations of this. Let me jump back into the slideshow real quick and just kind of talk a little bit about kind of like all the stuff that's included in the Big Trend Toolkit. And one of the things I like about the Big Trend Toolkit from Metastock is that it has all of the methodologies that we've ever created for it over 3 iterations. And so these are all methods that you can use in the system. They're methods that comes from this book, which I believe is Big Trends in Stocks and Options by Price Headley. All of these different methods are methods that you can use. And we're on kind of like our 3rd iteration, as I said. One of the things that we added for our 3rd iteration was a concept that Price Headley called the Big Trend scoring methodology. And I've run this exploration. Like I said, I don't have time to go through all of these systems. It's just no way. But one of the things that I do want to talk about is the scoring methodology, because I thought it was extra cool. So I just ran an exploration. One of the stocks that came up today on a buy signal was Lululemon, and so I've pulled that up. And I just kind of want to give you an idea. Let me go ahead and zoom in a little bit on this chart. So right here, we've kind of got, these are the big trend bands. Yesterday, up here is kind of a combination of all of the indicators that Price likes to look at and whether they're bullish or bearish or neutral. And if you look right here, there's a breakdown. Right now, we're at a perfect 100 score. The score that we require is this 80 value for us to signal an actual trade. But if I wanted to kind of explain to you how the breakdown is done, I'm going to rely a little bit on the commentary because it does a really good job of breaking down the breakdown. So right here, let me just zoom in a little bit here. The big trend breakdown, the breakdown of the indicators that he likes is the current value of the Williams per centaur, which for Lululemon this morning is bullish. The Williams per centaur, which is bullish. The CCI, bullish. Efficiency ratio, acceleration bands, Bollinger Bands, ADX, the directional moving average difference, the moving average, and then the 2-day directional movement. All of those are bullish. Now, when that happens, when all of those indicators score at least 8 out of 10 or 80 or higher, it will generate a setup. And you can see the setup occurred here. What's required after that setup is for the stock to move above the high the next day, which is why we have a buy signal today. And when you're running for scans, I ran for a scan for the trigger, but you can scan for the setup or you can scan for the trigger. Okay. In this particular example, what he's doing is kind of given some pretty good detailed explanations of kind of what's happening with the system. One of the things I like about Price, initially, Price is one of actually the very first person I developed systems with in part of my role as a business development manager. One of the things that I really like and kind of use as an example is kind of how he puts together his commentary. So it tells you kind of all the indicators and whether they're bullish and bearish. It tells you why you're getting a signal and why you're getting a trigger, but it also tells you some really good examples of what you could do if that was a system that you were interested in. So I'm going to use his words. Traders interested in taking advantage of this should look at buying the stock or buying a call option 2 months before expiration. Aggressive traders will look at call options, one strike out of the money or near the money that costs $200 or less. There was a question about what type of deltas you should look and what kind of strategy you should use for options. I love how well this is framed. Traders should look to exit this position when either this happens or this happens. It's all spelled out for you. It's very, very straightforward. And this is just one of the systems. This is the one that we created about a combination of all of the indicators. And just to kind of, and it came up on an exploration today that with another stock, but just to kind of give you an idea of when this actually has scored in the past, here you had a buy signal that exited up here. Here you had a sell signal that exited down here. Another sell signal, another good opportunity. So it looks really good on Lululemon, works really good on the chart. The idea here on this, and one of the things that Price always looks at, is he wants to find those stocks that are really moving. And this is a great example of kind of a chart that has been. We kind of just go back into the PowerPoint. These are, again, all of the methodologies. We just talked about the score, but there's just quite a few of them. And a very, very detailed manual that goes with them as well. All included, there's about 17 explorations, 17 expert advisors. They do have system tests. We had some questions about system testing before. And 18 custom indicators that were added to Metastock as part of the add-on. What we're doing here is part of the Trader Summit. Normally, this is an add-on. It's only a one-time cost. It only costs $699. You pay for that once. It's a 30-day money-back guarantee, and you own it forever. What we're going to do as part of the Traders Summit is we're going to give you $499 as a webinar special. If you don't have Metastock, you'll want to get a free trial with that or an extended trial. But you can take advantage of all that, as well as all of our deals up at metastock.com/summit deal. You can give us a call, 800-882-3040, or you can go online at metastock.com/sales chat. And so there you go. As we kind of move into the next presenter, we're doing okay on time. I could have spent a little bit more time. Anyway, as we go into the next presenter, before we do, I do want to say thank you to Stocks and Commodities. You know, Stocks and Commodities magazine has sponsored the events that we've done since we started doing them. I think we're going on 14 years maybe for conferences and summits like these, and Stocks and Commodities has been a sponsor every step of the way. If you're watching on YouTube and you want to get a free issue of Stocks and Commodities, as well as a bunch of other bonuses that were put together by the speakers, you can go to metastock.com/traders-summit, fill out the registration form. It takes a minute, and just sign up for the bonus offers that you want. metastock.com/traders-summit. Thank you, Stocks and Commodities. We appreciate the work that you've done. So And of course, we are Metastock. We've talked about it already. Metastock has been rated the best software in its price category for 31 years in a row. For me, I think one of the biggest things that is most useful for me is the ability to scan. We've already ran a couple of scans. We've taken a big list to a very small list. I think that's something that you're definitely going to want in a charting platform, is the ability to identify those opportunities that exist in the markets. But in addition to that, that's not all it does. It can help you test trading ideas to see how well they work against one stock or 5 stocks or a basket of stocks. You can use our forecaster, which is patented, to kind of give you an idea of what's statistically likely to happen in the future. And you can get real-time commentary, signals, alerts, everything we've been kind of showing you with these really cool add-ons we've been designing. Pricing on Metastock starts at $75 a month. If you start right now, we'll give you the second and third month for free. So you'll be running into February, probably almost Valentine's Day, where we're at right now. So you can do that by going to metastock.com/summit-deal, metastock.com/saleschat, 800-882-3040. I don't know if you're like me. Maybe you have some downtime between now and the end of the year. Maybe you get some time to kind of focus. It might be a really good time to kind of take a look at Metastock and really learn how it can help you with what you're doing. So you can do that at metastock.com/summit-deal. You can do that by calling us at 800-882-3040 or chat with us. We'd love to hear from you. Metastock.com/saleschat. So there you go. James, I think I answered your question about the session being recorded. Let me just do this. Yeah, okay. We gotcha. Okay, all right. Our next presenter. Oh, okay. And then this is the slide I was expecting to be a little bit earlier. All of the stuff that we're talking about today, which started with TST Trender. We just talked about the Bollinger Band toolkit. We're about to talk about Vora Victory Method. If you just want to get all of it, we've put together an amazing package together. Normally, it includes everything that's on the screen right here. Normally, the cost would be $6,884. Here at the summit today, $2,792 for just a bundle package. So 800-882-3040. You have to do this by chatting online. Metastock.com/saleschat. Either one of those will actually get you that offer. So there you go. All right, very cool. Our next presenter is awesome too. I've been working with Vince for a couple of decades. We've had a lot of fun over the years. We've developed some really, really cool systems, including the one he's going to talk about today. I would say that over the years, we've worked very closely with Vince, and the training that he's done for us and our customers has had a tremendous and positive impact on the trading that I've done. A lot of times, if somebody's just kind of asking for something that's really straightforward, that's easy to understand, that produces really good results, I'm like, well, you should look at Vince's methodologies because they're easy, they're straightforward, they work really well. And I think you'll notice that about him as he's actually talking today too. So without further ado, Vince, let's go ahead and get you started.
Good morning, Jeff. Can you hear me?
I can. You sound great.
Oh, good. I was a little worried about the audio.
Yeah, no, you sound okay to me. Do you?
All right, excellent.
Are you ready for the holidays?
You know what? Not at all, actually. Not at all. I've been traveling the last couple of weeks. Just got in last night, and
you're ready to be ready.
Yeah, I'm ready to be ready. Exactly.
Cool. Let me go ahead and make you the presenter here. Welcome back. Also.
Thank you. I appreciate it. Jeff, if you can keep an eye on the questions and so on. I am working off just my laptop, so I'm going to try to squeeze everything in. If I can, but let's see. Okay. Let me try to move a few things out of the way here. Oh, okay. All right. Let me see. Can you see my screen? My train wind slide?
Yeah, I can see it. I was a little bit. It was kind of small for me, so I had to resize it a little bit. But yeah, it's coming through. It looks great. So.
Okay.
I'll get out of the way.
That's okay. Great. Thank you, and thank you again for having me on. As Jeff was saying, we've been working with Metastock for years. They've been great partners. They've helped us program several of our add-ons, and the most recent one, Victory, which we started in 2019, has now gone to a different version, Victory 2.0. Even that one has seen some improvements. So any of you that may be listening that have been using Victory 2.0 for a while, you may want to go to metastock.com/mydownloads and download the most recent version of it. We've made some upgrades to it, which I'll talk about throughout my presentation. They're great. So let's get started. I am Vince Vora. I'm the head trader here at Trading Winds, and I've been doing this for coming on 4 decades now. And over that time, again, we've created several systems, but some of the most important work we've done is working with students. That's been our focus over the last decade, and it's been fantastic. Met a lot of you through Metastock, and we have a great membership group that I'm going to talk more about throughout our session here today, and I'm going to try to pack as much info in as I can. Please, before I get started, please remember that trading can be risky, so don't trade until you're very comfortable with the system that you're using. And I do want to say what we try to do here at Trading Winds is eliminate as much risk as possible. That was one of the driving forces behind Victory, and I really am anxious to show you that. So I'm trying to, bear with me here for a second, I'm trying to minimize, or let me see if this works. There we go. Okay. You should all be seeing my Metastock platform. I have a chart here of the SPY, the S&P 500. Now, let me see. I see. Okay. So I've lost the question panel. I apologize. Jeff, if you can hear me and keep an eye on questions, interrupt me as we go. That'd be great. But let's get started, and let me tell you about our Victory 2.0. What you're seeing here on the screen, what I'd like to do is first start by explaining what you're seeing on the screen, all these arrows and dots and these green ribbons at the bottom, etc. And then explain my approach and how I trade with Victory 2.0 on a daily basis. So what you're seeing here is a number of things. Now, first of all, obviously, you're going to see some green arrows, some red arrows, etc. You're also going to see some different size arrows. Like this one is a little smaller and lighter in color. This one's a little bigger and darker in color. If you hover over any of these symbols, it will tell you what we're looking at. So for example, this one, as you can see, says long. It's Victory 2.0 is suggesting that this might be a good area to take a long position. Now, we do have specific rules that we wrap around this. So the intent here is not to take every single symbol. The intent is to take the symbols that match our entry and exit criteria, which I will explain in detail as we go through. As you can see, if I hover over this one, it says HPB. What that stands for is high probability buy. So the thicker, bigger, darker arrows carry a little more weight than the other ones, but again, they need to match our criteria. It's some very, very simple rules that you'll be able to memorize in seconds, and you'll quickly, whenever you look at our chart, be able to know which ones are the ones I would take and which ones are the ones I would not take. Okay, so obviously arrows, green meaning long, red meaning short, or sell. Again, doesn't mean we would go short at every one. What you also notice is that after we do get an arrow like this, every bar is colored the same, okay, until we get a change in direction of some kind. We may get several entry opportunities along the same trade. Okay, I'll explain that in a second. But whenever there is a change in color of the bars, We want to exit, at a minimum, exit one position completely. And then if it meets our rules, take the next symbol that is available to us. So green and red arrows, buys, sells, longs, shorts. That's what we're talking about. The dots here, green and red, it means the exact same thing, except that when we're already in a trade, we label it, for example, this was a long, now this is a long re-entry. The reason why it is just a dot and not another arrow, for example, is because we are already in a trade. So all we're highlighting here is that the same algorithm that triggered this has triggered this, meaning if you missed this one, now you can take advantage of this. Or if you are a more aggressive trader and you enter a position here, you can now add to your position here. And what you'll see sometimes is that you'll get several of these along the way. That's what I was explaining earlier. When we enter a position, sometimes the algorithm will tell us we've just hit another great spot to take an entry. Most of the time, it'll be after a minor pullback, such as this. So again, if you're conservative, you enter, you hold until we see a change in color. You're more aggressive, you can add at each new spot. Now, we also have these take profit levels. That's why they're labeled TP. We don't have to take profits there. They're just suggestions of areas where if you're in this trade from the beginning, you may want to take some profits off the table along the way. What many of our members do is enter the position, take some profit. When we get a re-entry, add some back, take some profit, add some back, take some profit, etc. But whenever there is a change in color, we need to exit that trade completely. Okay. We also have this blue line here. Now, if I hover over the blue line, what you're going to notice is that it is a very simple, very common moving average. The 20-period simple moving average based on the close. I've been trading with this my whole career. If I was forced to trade with only one indicator ever, this would be it for me. Reason being, it is a great way to judge the amount of momentum behind any instrument. Okay, so what we're looking for, and the way we want to use this blue line, this 20-period moving average, is to look for slope. Okay, so if we get a buy signal such as this, one of the rules that we want to use is to judge and look at whether or not there is a upward slope on that blue line, that 20-period moving average. Obviously, if we're going short, we want to look for a downward slope. We want momentum in the direction of our trade. Okay. Now, what level of slope are we looking for? Well, in general, eyeballing it, I look for about a 45-degree angle, something like that. To me, I consider that a significant amount of momentum. Okay. A slope such as this, or especially here, which is even greater than this, tells us we have even more momentum in place. And if it's in the direction of our trade, that's exactly what we want to see. Okay, you can certainly trade with a lighter slope. Yes, not a problem. Any slope will do, but the higher the degree of slope in the direction of the trade, the better it is for us. Okay. And lastly, you will see these ribbons at the bottom. Now I'm on a monthly chart here. Let me switch to a daily chart for a second. Okay. And what you'll notice is that we have the weekly and the monthly ribbons here. What this is telling you is it's showing you the color of the bars on the weekly and the monthly time frame. So what we're trying to do when we look for a trade, such as this one here, is confirm that two higher time frames are trading in the same direction as the time frame that we're thinking of taking a long position in. So if the weekly and the monthly already have green candles, meaning they're already in a green or sorry, a long trade there, then by taking a long on the daily, we're trading alongside or in the same direction as the 2 higher time frames. That in and of itself, if you focus on trend, on momentum, meaning slope, and you're trading in the same direction as the trend on the 2 higher time frames, you will do very, very well in this business. And that's what we're trying to do here. We're trying to be as consistent as possible, and we want to trade when we know that we have a strong trend along with strong momentum in our favor, and we want to do so on 3 total time frames, the time frame we're trading on and 2 higher time frames. So if you're going to go to a weekly time frame, then really all you need to look for is the monthly. We don't go any higher than the monthly, okay? So that's why you'll notice that the weekly is grayed out, and now it's showing us what the monthly is. If we go to the monthly time frame here, it's going to show us both monthly. Same thing, it doesn't really matter. If you're trading on the highest time frame, you don't need it. But let's say that we go to a 5-minute chart, right? Now, it's showing us here the weekly and the monthly, and they're blank. Yes, what we want is the 2 higher time frames on the 5-minute chart. So we've created templates for you. If you right click anywhere on the chart, apply template, you have to scroll to the bottom. This is in alphabetical order, so all my indicators, all the Vora ones are down here. Here's the 5-minute layout. So if we were to select the 5-minute layout and apply, and we have a 5-minute chart on the spine, now you'll see the ribbons for the 15-minute and the 30-minute, okay? So you will automatically see the 2 higher time frames. If we go to a 30-minute, you will see, again, 2 higher time frames, hourly, and I believe it's 2 hour, etc. So we have the different templates for the time frames that you are trading, okay? For this presentation, I'm going to focus on the daily time frame, which is the one I trade on the most. But again, this system is based solely on technical analysis and can be used on any time frame, any instrument, meaning stocks, options, futures, forex, crypto, anything you want, any exchange around the world. Okay, it's been tested around the Nifty in India, in Australia, UK, Canada, US, you name it. It's just basic algorithm for a formula that we found over the years to be very, very consistent. Okay, so please, if you want to see a specific symbol, type it into the chat. Jeff will hopefully interrupt me and let me know. If not, we can leave some time near the end. I'll try to leave a few minutes at the end to answer as many questions as possible, okay? But what I'd like to do is go through several examples of the types of trades that we want to take and explain my approach completely. So let's start with that, my approach. What I like to do is take a top-down approach, meaning I start with the highest time frame. So I'll show you a chart of the SPY, which is the ETF for the S&P 500 on a monthly time frame. Now you can see that, and I'll scroll further back, right? And how consistent this is when you're just looking at the colors, right? Green, and you want to be long when you're green, short when you're red, if it matches our rules. Again, I'm going to go through that in a second. If you ever see grayed out, it means that there aren't enough price bars for the algorithm to be able to, run the calculation. Okay, so once the art starts to calculate, and from there on, you will get the symbols. So we can use the highest time frame to say, hey, the market is trending higher. Not only do we have green bars here and we have a trend higher, but we have significant momentum in our favor, right? So based on that, we can say, okay, we're looking at a broad market index, the S&P 500. 500 of the largest companies. We could also look at the Dow 30, right? 30 of the biggest companies in the world. The 100, the NASDAQ 100. 100 of the biggest tech companies in the world, etc. Right? We can look at all of those and say, hey, do we have a consistent trend across that? If so, the majority of our trades in our portfolio right now should be to the long side, right? So Jeff and his team have developed a nice template for that. Again, if you right click anywhere on your screen, click apply template, and we go down here to the Vora templates. And what I want you to look for is the Vora market overview. Now there is also a Vora market overview MTF, which is multiple time frame. I'll explain that in a second. And you also notice that there's one for the Nifty, one for the ASX, right? The Australian market, etc. So let me show you this template. This is what it looks like right here. Now, when you click on that and you add it, you have to give it 30 to 60 seconds to load. It takes a bit of time only because it is bringing in the data for several different instruments. What this is showing you is the ETFs for the Dow Jones, the S&P 500, the Nasdaq 100, and the Russell 2000. So you're capturing the bulk of the US market along with the main sector ETFs. So communications, consumer staples, energy, financials, etc. Okay, what you are looking at in one snapshot here are the colors that would currently show using Victory on these particular charts all in one snapshot. So in an area such as this down here, when you're looking down and you're seeing green, 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 you know, you have one red for energy, but the rest was all green. You have a very strong trend to the upside for pretty much the whole market except the energy sector, right? And when it's mostly all red, it means just about everything is selling off. So you get a very quick snapshot of where we are right now by looking at this one chart, okay? So right now, if you look at this, the equity indices here, the Dow, S&P, Nasdaq, et cetera, all green, right? And then you have a mixed picture here with the different sectors. Communications, consumer staples still green. Now you start seeing some red on energy. And then you have another 4 down here, right? With red, and another one down here, utility. So although the indices are all still very green and still trending, we're starting to see a rollover in several different sectors, which means we may be coming to an end of this trend, we may not. But again, in one quick snapshot, you get a nice quick picture. Then what I do is I come down and I start looking for stocks. Now, this add-on comes with a great scanner, which I'll show you near the end, etc. But once we run the scan, then I start looking through the results of that scan, and I start looking for the signals that match my rules. So let's go through the rules. I'm going to switch. Actually, let's just use the monthly time frame for now, and then we'll switch to daily and go through several examples. Okay. So let's look at this buy here, and let's not focus right now on whether it is a high probability buy or a regular long. Let's just go with a green arrow. Okay. So some very simple rules. First thing we need, obviously, is a Vora, a Victory 2.0 signal. So we have the green arrow. Then what we're looking for is a bar that is close to the 20. Okay, we want that bar that arrow is pointing to be close to this blue line. Why is it? Well, whenever we move farther away from that blue line, we tend to snap back. It's not just true for the 20-period moving average, it's true for all moving averages. Okay, as you get a strong push, you get some sort of retracement. The last thing we want to do is end up buying away from it here and immediately experience that pullback against us and end up in a hole right off the start. We want to avoid that. So that's reason one. Reason two is that the exits have a lot to do with this 20-period moving average. Oops, it looks like my system has crashed. Let me try to open it again. I apologize. Jeff, if you are there and we have questions, this may be a good time to go through a few while I launch my Metastock platform again.
Yeah, and just to be clear, it only crashes when you're demoing.
Yeah, doesn't it?
Yeah.
No, I'm
Kevin
kidding
says,
aside. It's been so solid. Go ahead.
yeah, me too. Kevin says you have some other MS systems like winning momentum and veracity. How do these differ?
There are slight differences. Those are strategies that I developed many years ago, and as I gained more experience and saw changes happening in the market overall, I adapted those changes to the newer systems. So back in 2019, which was just before the pandemic, and it had nothing to do with the pandemic, but I had noticed differences in the market and noticed an increase in volatility. And I thought that volatility, would continue for the next little while. So I was looking for a system that would be a little more responsive to changes in the market, would alert me a little sooner to changes. And so we developed Victory. Little did I know that the pandemic would hit a few months later, and then volatility would go through the roof. So it was a great thing that we developed it when we did. It was just lucky timing. So yeah, the main difference is that Victory will respond a little more quickly to changes in the market. It'll be a little more responsive than the other systems. The other systems are still very valid, very good, very reliable, but this one's a little more responsive. It looks like I have my chart back. Let me bring up the SPY chart where we were. If there's anything else you think I should answer now, Jeff, let me know. If not, I'll continue.
Yep, just a few things. Sirkin wants to know, is the entry and bar coloring populated at the end of the day or during the day?
It is populated during the day, but please understand that it can change throughout the day if that bar is open. Okay, so it depends on what time frame you're at. For example, if you're on a 5-minute time frame, within that 5-minute period, you may see an arrow appear, you may see it disappear, and so on. Once that bar has closed, if there is a signal there, it will stay there for life. So there's no repainting or anything like that. But while the bar is live, those symbols may appear, may disappear, depending on where we're at on the bar. So yes, you will see them live. Absolutely.
All right. And then when you get to it, when you have a second, Govind would like to look at Nifty 50. Michael would like to look at GLD. That's all. We're caught up.
Excellent. Awesome. Okay, perfect. So let's focus on the rules quickly again, and then we'll start looking through as many charts as we can. So what I was going to say is the exit has a lot to do with the 20 as well. So when we're buying near the 20, if it turns around on us immediately, we will get an exit very quickly, which means our loss will be very small. What we are trying to do here for consistently is not only find strong trending trades with great momentum behind this, but what we're trying to do is have more winning trades than losing trades. But what we really want is that our winners are much bigger than our losers. Okay, so that's why you'll notice when trades don't work out, like in here, for example, you take this arrow, it goes against us, it gets us out immediately. Okay, losses are normally very small with this, and that was intentional when we programmed this. We intentionally want to keep losses small and then allow us to stay in the trade long enough to have our winners be much bigger than our losses. That's another reason why all the bars are painted the same color. It's to help you remain disciplined and not get scared out of a trade. It's happened to all of us, certainly happened to me many times where I got in, started to go my way, and as soon as I saw 1 or 2 red bars, I'd start to panic, start to think I'm going to give back all these profits. I don't want it to turn into a loser. I sell it, grab a small profit, only to watch this thing skyrocket later, right? So that's why we programmed it this way. So getting back to the rules, you need a symbol. You need the bar to be near the 20. That individual bar, what you ideally want to see is that the close on that bar is in the top quarter of the bar, right? The top portion for longs. If we're looking at a short, we want the the close of that bar to be in the bottom quarter. And the closer it is to the low, the better. The closer it is to the high here, the better. Okay. And then, of course, we want to see slope on that 20 in the direction of the trade. Okay, we want to see slope. Now, you may see some trades that had a negative slope here that worked out pretty well. I'll address those in a second. Okay, there are some rules to wrap around that. But ideally, what we want is a signal, a bar close to the 20 MA here, a close in the top quarter of the bar. We want the slope on the 20, and then we want to look at the ribbons. I apologize for the phone in the background. We want to look at the ribbons, and we want to make sure that we see the same color, green and green. So if you have a green arrow, right, green bar, green ribbons, you have slope on the 20, off you go. It is so consistent, and once you memorize those few little things, it's just looking for the same thing over and over and over again. It's just rinse and repeat. Okay. Now, I will show you many charts where when you are looking at a strong trend with strong slope, you can buy pretty much anywhere along that line and make money, right? The algorithm is pinpointing certain areas that give you an edge, that get you in at a spot where you're most likely to come out of it with a profit. Okay, and then if you follow the rules, off you go. So again, say we entered here, okay, and you see this green dot. That means the same formula that came together here has come together here again. It's just that we're already in a trade, so it highlights this as a re-entry. So at this point, we can either add to our trade, or we can use it as just further confidence that we should remain in this trade, okay? Again, you see it take profit, you can take some off the table. We've already had a substantial run. You have a real big profit, take some off. I like to do it in thirds myself, okay? Take off a third, if I get a re-entry, add a third. Take off another third, add a third, etc. If you're most aggressive, you will ignore these. You're just add, change of color, you clear it all out, okay? And those are the basic rules. And I will show you similar for a short. In this case, we do not have slope, right? Slope on the 20 is flat, maybe even slightly higher. It's not sloping in the direction that we want to trade, okay? So in this case, we took for two other things. That is the only way that would allow us to take this trade, okay? Otherwise, the easy thing to do, and if you're just going to be starting out with Victory 2.0, I really, at the start, want you to focus only on the trades with slope in your direction. Those are the easy ones. Those are the ones with the most consistency. And those are the ones that are going to give you a great start with it, make you a believer, and then you can go on to the next one, which I will describe now. So let's look at this buy signal here, and then we'll look at this short. Two great examples. We have a green signal. Okay, we even have green ribbons. And we have a bar that's close to the 20. It even closes in the top quarter of the bar, but we have negative slope on the 20, right? So this is one that if you're just starting out, you should ignore, walk away, okay? But once you get a little more comfortable with it, these trades, the only way we can take these trades is if they meet one of two criteria. Criteria number one is a close above a prior high, a prior pivot high, okay? Which this one did not have. Or a retest, a successful retest of the 20. What I mean by a retest is we cross it from below to above, and then we come back and retest it, okay? And if we bounce off it like this, we hold it and bounce, that is a successful retest. If we just broke back below, that would be a failed retest, okay? This arrow here did not meet that criteria. So I would not have opened a long position here. But when I get the re-entry, right, I then reassess the whole trade again, meaning I'm looking for a bar close to the 20, closing in the top quarter of the bar, right, with green ribbons, etc. And I'm looking for slope. But do I have slope here on the 20? I do not, right? Did it close above a prior pivot high? No, it did not. But do we have a successful retest of the 20? Yes, it's right there. So this was a valid one, and off it went, okay? These rules are not by accident here. We don't see these moves coming off those positions as a fluke. This is decades of study, okay? That's where this has come from. And so they're very, very simple. We've made it very simple for you, but if you follow it over and over and over again religiously, what you should see, like I said earlier, way more winners than losers, and winners being bigger than the losers. That's how we stay consistent and profitable in this business. Now, to the short side, right? We get a sell here. Again, the slope is not in the direction of our order. So we either need a close here below a pivot low. A minor pivot like this doesn't count. It for me, it would have to be this one here. We didn't have it. Or we need a retest of the 20. So again, on this arrow, would not have been a valid trade for me. This one he would have. And again, off it goes. Okay. Now let's look at some of those charts. Someone had asked for the Nikkei or the Nifty. My apologies, the Nifty 50, and then we'll look at GLD and a bunch of others. And when you're looking at these charts, I'm going to go back to the daily. We'll flip through different time frames as well. Okay, we're on the monthly here on the Nifty. I'll show you what the monthly has been. This has been one of the strongest indices or stock markets around the world for a while, and the past couple of years has been incredible for the Nifty. And these are the trades we would have focused on. So again, here's a great example of one. Not only do we get an arrow, we get a bar close to 20, closing in the top quarter of the bar, green ribbons, right? Great slope on that 20. And we're also breaking into new all-time highs. So the other thing I want you to look for when we're looking for a trade is look to your left, and what you're hopefully going to see is blank space, right? So for example, this one, if you look to your left, you had these bars in the way, okay? Where there's activity, it means there's going to be some resistance. Now, these bars alone, not enough to worry about, okay? But if it's something that has been moving lower for quite some time and then starts to recover, that's where you're going to have a lot of resistance in your way. But if you're making new highs like this, you have absolutely no resistance, and there's an easier path ahead for this instrument, right? And that's what we see here. That's what we've been seeing along the way. Okay, if I go down to the daily time frame, you're looking for the exact same criteria. Okay, you're looking for here's a great example, right? We had a downdraft, right? Now we start to recover. Anything we're looking at now, when we look to our left, there's activity in the way, isn't there? So it's not as clear of a path as, say, it was here. Okay. And again, whatever time frame you're looking at, I'll be honest, I've never looked at a 5-minute on the Nifty, but hey, it just depends on volume. Okay. So here the market that wasn't doing much. A lot of these symbols are not going to qualify. Okay. Reason why I want you to focus on slope and not the ones with no slope is because that is where most traders lose their money. That is where you get these sideways consolidation moves, right? The chop, we call it. Most traders lose their money on the chop. If you buy here, you get stopped. You sell here, you get stopped. You buy here, you get stopped. And you're just giving your broker commissions, and you're losing a little bit on every trade. And your account is going lower, lower, lower. You want to avoid these areas and only focus on the areas with trend. See, getting in on something like this near the 20, right? Closing in the top quarter. You look to your left, mostly blank, okay? I don't have the 5-minute template here, so we can't see what the ribbons were. Most likely they were green, all right? You have significant slope. So in other words, you have trend, you have momentum, you have higher time frames on your side. You're giving yourself an edge when you're trading. That is what we're trying to do day in and day out. When you're trading with an edge, you're going to be right more often than you're wrong, and your winners are going to be much greater than your losers. That is what we're looking for. Let's go to GLD. Okay. And GLD, by the way, is the ETF for gold. I can show you the gold futures chart as well. I'm on the 5-minute here. I'll switch off in a second. Okay. But what you'd be looking for is something like this. Okay. Where you have been dropping. Again, I don't have the template for the ribbons, apologize. But you have some slope lower. You get a bar closing near the low of the day, or that 5-minute bar, that is, with some slope, not a lot of slope. And if you're ever wondering, you know, this doesn't seem like a lot of slope. Should I take it? Ignore it. Move on to the next chart. In reality, what you're going to find when you run a scan is you're going to have several candidates, right? Trade candidates, and you're going to compare one to the other. With this add-on, we'll send you a couple of training classes that we've done that you get to watch ahead of time. And we show you exactly how we compare one trade to the other. So in all likelihood, this might not make the cut because there'd be another trade with a more significant slope on the 20. But regardless, there is slope on the 20. It matches all criteria, and off you go. Let's go back to the daily here for gold, so you can see what it's looked like recently. Here it is. It's been trending very nicely. So of course, hindsight's 2020. When I look back, I could say, "Oh, that was a great trade. Yeah, this was a great trade," and so on. But in reality, when you watch those training classes, and if you want to go back and look at every single trade that was suggested and look at whether it meets our rules or not, what you're going to find out is that 90 to 100% of these symbols here, you would eliminate. You would not be taking because they do not match the rules, set of rules. And in here, certainly the red ones would not match the rules. The green ones will. And so you'll get some trades that end up being a very small loss, and others that end up being the kind that make your week, your month, your year, etc. That's the way this works over and over and over again. That's what we're doing here. So let's look at a few others. Again, please type in symbols if you want, and we'll try to get to them. I'll show you a few that, you know, I certainly have followed either in the past or recently. And again, the scanner that comes with this, I'll show you in a second, will save you a ton of time and so on. Here's Costco. Costco has been trending for a very long time in a very clean fashion. The other tip I'm going to give you today is that when you have a strong trend in place, the bars are all a very similar size. Okay, so look at this strip here. And then when things get volatile or start to consolidate, right, like this mess in here, the bars suddenly start to be some bigger, some smaller, like all different sizes, all kind of wacky looking. Okay, so in general, if you just ask yourself, is this market that I'm looking at, whether it's a stock, a futures contract, or anything, is it trending, right? If it's got all sorts of different size bars and so on, you can't really tell what the trend is, that's your red flag. That's what should tell you I should not be trading this instrument at all. So if you look, I believe the chart of Zoom has been a messy one recently. Okay. If you look at Zoom, or you run across any chart that looks like Zoom, and actually it's been trending recently, back in here, this is what it was. Look at this. Do you want to trade a chart like this? You know, believe it or not, with our rules, you could pull out some good trades in here. But overall, this spells risk. If you see a messy chart like this where you can't really judge what the current trend is in a split second, you're taking a lot of risk. Notice when it's trending, Bars are all similar sizes, okay? Those are the kind of charts you want to look for. Here's one, Walmart. I'm sure you're all familiar with Walmart. Nice, allow this to update. Just a nice, slow, steady performer, okay? Not sure why this got to be my setup here, but have a look. Bottom left to top right. That's exactly what you want to see here, right? You already know by looking at that you should be trading to the long side, right? Then on top of that, you have Victory telling you exactly where the best opportunities to enter are. And with a few simple rules, you can confirm whether this is a trade that's giving you an edge or not. Okay? Is it near the 20? Has it closed in the top quarter of the bar? Is the 20 sloping? Are the ribbons the same color? If I look to my left, do I see blank space? If the answer is yes, 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 boom, there it is. And you go over and over and over again. All right? Very simple. It works the same in both directions. Okay? You want to look at a short. With our members, we've been talking a lot about Biogen recently. It's been selling off real hard. We took this trade here. It's another opportunity a few days ago. Okay? But this one has been awful for a very long time. Okay? And there's some great trades to the short side. The scanner will highlight many of these for you. So let's look at a few others here. Oops, I think it's a K here. Okay, the direction doesn't matter. What matters is there a trend or is there not, right? Have a look at Targa, okay? You go through your consolidation periods as well. Guess what? These are opportunities. When you see a channel like this happening, okay, and I call it a channel because if we mark the highs of this, highs are all similar, at a similar price level, okay? I drew it too far actually, but that's okay. And then you mark the lows, okay? You can tell that this has been trading within two price levels, right? Back and forth, back and forth, back and forth, right? All you need to know that you're in a channel is three of these points, one on one side and two on the other, right? So if you had this one and this one and this one here, you have two on one side, one on the other, and you know you're already in a channel. What you don't know at that time is how long this channel is going to last. Now, most traders get frustrated with these channels. Why? Because they try to trade from one side to the other, or they try to pinpoint an area in here where they believe it's finally going to break out and take off, only to get stopped out again, and they lose all their money in here. So with our rules would not allow us to take any of these trade symbols, but this one here's a different story. Why? First of all, we broke out of the channel, right? You close outside of it, okay? And then you come back and you prove that it's holding. Now that level that used to be resistance is now support, and you get a bounce. In addition to that, it matches our criteria, doesn't it? Because you have a bar that's close to the 20 sloping, right? Ribbons green, all that good stuff. You look to your left, it's nothing but blank space. It's breaking out of a channel, and there's your great trade, right? And from there, you just follow it. And so, again, if you are looking, even this trade here, okay, if you didn't take profits anywhere, you got in, suddenly, boom, it gets whacked, you're out at a loss. Is it a big loss? No. And that is just as important as a win, keeping the losses small. You then get in to another one that matches that criteria, you quickly more than make that up, right? That's what this is all about. Now, let me quickly show you a couple of other parts of this, and then we'll try to answer as many questions as possible. If you go to the top left, click on View, and click on Expert Commentary. Now, I don't know if it went, there it is. It will bring up this box that will tell you a bit more about Trading Winds and myself and Vora, and Victory 2.0 in general. But more importantly, one of the ways you can use this is to trail an order, okay? This is super important if you are working full time or cannot be in front of your screen, you know, all the time. So there's a little triangle here that will default on the most recent bar, regardless of the time frame you're on, okay? You can move this by either clicking above any bar or by using the arrows up here in the top left of the expert commentary panel, okay? Now, what this is going to do for you is it is going to highlight what's happening on the screen. So I put my green arrow right here, right now, okay? And we're in a trade. Let me move it forward a couple of spots here to the next opportunity. There it is. I want to show you that when it's on a bar that has a symbol, it's going to add some text in here alerting you to that new opportunity. And the text will be colored the same as the direction of that opportunity. So for a long, it'll be green. If it was a sell or a short, it would be red, okay? And it's telling you what the opportunity is. So we've got an opportunity to the long side. Now, as we move forward from bar to bar, okay, you're going to notice that it's giving you a suggestion of where to exit, an actual price level, okay? If you're not here to watch it and see that color change or that exit flag appear, okay, you won't know. So if you have to walk away, you can set a stop loss order at that level. And as the trade progresses, you'll notice that it changes. It updates from bar to bar, okay? And so you can trail your stop using this, okay? Very important. The other thing this will do when it highlights a new trade, if you prefer to trade with options, it'll give you some direction as to what type of expiry, what kind of delta you want to look for in an option. So very, very helpful. The other thing that's very helpful, if you go to the top left to your power console here, this letter P, and you go third tab on the left, Explore. This is the scanner. So you have all the different formulas that you can scan for. Again, you'd have to scroll to the bottom for the Vora ones, or you can right click and save them as favorites, and then you have this favorites tab. So these are the ones where I like to search for. The Vora Victory and the Vora Victory Reentry, which is we're searching for the arrows, any new arrows or any new of those dots, right? Now, we also have ones that are called filtered. So Vora Victory Filtered, Vora Victory Reentry Filtered. What that means is they're already filtered for slope. So it will only find you those new trade setups that have slope. Okay, ones with a flat slope, it will ignore. Okay, you then come down here and you look for the markets you want to search. So if it's a Nifty 50, you select that. If it's a New York Stock Exchange, and so on. I like to search all stocks that are optional. I like to trade with options here. Okay, and then you go to the right and you select your time frame. I'll leave it to daily for now, and so on. And then you click on Start Exploration. Okay, and this box will pop up showing you how many instruments you've selected. We've selected over 5,600. We're not going to wait for this to search through all 5,600. Okay, but it only takes a couple minutes, searches through all of that, and then when it's done, this will light up showing you it's complete, and you will have your search results down here. I'm going to stop this for now, okay, and see, there we go. So out of the 445 charts that it had already looked through, it found these three. Now, you're going to find different columns here. Main one being slope, right? You'll notice here that since we use the filter, it's only 5 and upwards. So it's not 5 degrees, it's a formula we came up with, but anything with a slope of 5 or greater, or in cases of a short, a -5 or greater, That's what we consider a significant slope. So you'll see one here, 5, another 15, 9, etc. By clicking here, you can sort them in ascending or descending order, whatever you want. It automatically tells you whether you have the positive or negative trend on the weekly or monthly. So even before you open this chart, you can look at this and say, yeah, we have the right slope. Do we have a positive number on the weekly? Yes. It's a negative number on the monthly. Forget it. We don't have all 3 time frames aligned. We'll move that aside, right? If they were both positive, then we would have exactly what we need. Now, you have the close column here, and you have the symbol. There's now a new column for volume as well. I've been traveling and haven't updated it. Again, when you get your version, it'll have the volume on here as well. So what you can do also to preview them very, very quickly is just highlight one, click on this little chart icon, and over here, you're going to see, there it is, okay? You're going to see what it looks like. Now you can then make a list, go and look at them in detail, go through the rules that we want, and identify the ones that match and don't match, okay? But again, this has been something we've been trading with since 2019, and it has been very, very consistent for us. We also have a membership. Very quickly, I know I'm out of time here. We have a membership that will come with this. What we do with our members is I send them emails 5 times a week, every Sunday to Thursday, okay, for the next day's market, where I talk about, you know, what happened in the market today, where I see things going this week, etc. And I share trade ideas. They're not recommendations. They're trade ideas to reinforce the rules. So I highlight several trades that I am looking and I am thinking of taking. We also meet live with our members 3 times a week over Zoom. I'm going to get off this presentation and get right on with my members. We meet every Monday at 1 p.m. Eastern, every Wednesday at 10 a.m. Eastern, and every Friday at 1 p.m. Eastern. Minimum 1 hour. Sometimes we go well over an hour. And we share trade ideas. The whole point of that hour is to answer any trading related questions you may have and look for trading opportunities. That's what we do. All the sessions are recorded. If you can't join us live, but you have a question, you email it ahead of time. We'll answer it during the session, and then you watch the recording afterwards at your leisure and get your answers, okay? I'm going to ask Jeff to come back on, hand it back to him. If there's any questions, I'll stay on. If not, Jeff will tell you exactly how you can get a copy of this for yourself. Jeff?
We got 3, and I'm ready.
Awesome.
So
All
number
right, let's
one
go.
is if a stock starts to go vertical, so if you're in a position, it starts to go vertical, are you always going to wait till it crosses below the 20 SMA to exit?
No. So so there are the take profit levels that you can start to scale out at. You can scale out anytime you want. I mean, what you're comfortable with. But what I say here's an example. In Walmart, we went parabolic, right? We went straight up. So no, we're not going to wait back down here below the 20. If we did that, we would give up, you know, a good portion of those profits, which we don't want to do. What I would suggest here is that you tighten up the moving average. You can put a 5 EMA or an 8 EMA, and on any cross of that, you can get out, or a close below a prior low. So if you look at today's candle on here, let me see if I can zoom in just a little bit here. There it is. You'll see that if this were the close, let's say it's 4 p.m. and we close like this, this will be the first time we've closed below prior low in a very long time. That is usually a signal that we are about to retest that 20. So you can use that as an exit. The whole purpose for us getting together live with our clients 3 times a week is to go over all these different little technical analysis tidbits that we've learned over the years, and share those with each other. So great question, but the reason why we say if you can stick with the trade until you get a change in color is because a lot of times we will find very good reasons to exit the trade only to watch it continue. And so a trade like this, one trade like this, can make your month or your year. And so when you're starting out, yeah, we want you to look for these little things and we will teach you those. But if you can just stick to the color change, in the long run, you'd be much better off.
Okay, very quickly, Kenneth says, does it detect overbought, oversold conditions, and is that important?
No, it does not specifically detect overbought, oversold conditions, but that the strict exit criteria that we have in there gets us out before things can affect us negatively based on whether we're buying in an oversold area or an overbought area, etc. That eliminates a lot of the issues, and you'll learn a lot more about that in the training sessions that we send you. But we also avoid a lot of that based on the location of our trade. Meaning, for example, that's why we look for the blank space. Whether we're oversold, say we were by traditional measures already oversold here. If we're heading into an all-time high area, the road is wide open. We can remain oversold for many, many days, if not weeks. So with the rules that we wrap around it, we automatically avoid those oversold and overbought areas. I hope that helps.
Yeah, I think it does. And then a question on whether or not the scanner adjusts for lower time frames. And of course, you can use it on any time frame that you want. You just tell it what time frame you want to use it on.
Exactly. Yeah. No, it works for all time frames, and I use it for different time frames. So I will use it on the monthly to look for some of longer term positions that I want to hold, and I use it on very short time frames for trades that I just want to scalp or get in and out of very quickly. It's very cool. Convenient.
You're late, Vince. You're late.
All right.
Yeah. For your next for your member session. But in any case, yes, we're done. We're caught up with the questions. Want to say thank you for joining us today. I'm going to talk a little bit about all the stuff that's actually included with this and kind of what the offer is. Thank you for coming in.
Thank you so much, Jeff. I appreciate it.
All right. No problem. Thank you. All right. Let me do this. And we'll go ahead and just make me the presenter real quick. And there's a lot to actually kind of go through. Let me make sure I share the right screen. Okay. I'm going to go ahead and kind of just jump into the slideshow right here. And we'll talk about everything. Obviously, this is the second version of Vora Victory Method. This was our best-selling add-on of 2020 and has just been really, really good in terms of the draw for it and kind of the pull into it, all that kind of stuff. It took us a while to kind of figure out what we wanted to add to kind of even make it better because it's just so simple, it's so straightforward, and it just helps you kind of identify those good entry options. So some of the things that we added for version 2, if you bought version 1, was the high probability buy setups, the take profits, those dashboard views that show the daily, the 5 minutes, the 30 minutes. What that means is if when you open up a daily, it'll show you what the weekly's doing, as well as what the monthly's doing. It's in that ribbon in the chart. And then the market dashboard. We actually put together a market dashboard for the US. This is a little bit of an older version of it, but the only real difference is the change. These will work in any time frame. You can apply them to daily, weekly, monthly, intraday, just to see what sectors are moving and what indexes are moving. But then in addition to that, based on customer requests, we actually put together some for India, and we put together one for Australia as well. So if those are markets you're interested in and that you're trading, we did create a market overview for that. So we've seen plenty of examples of the charts. Here's the take profit suggestions, the setups, the multiple time frame view. Those are all really, really cool additions to this. And In addition, you've got the scanning where you can scan for the filtered, the re-entries, the entries, the setups, all that kind of stuff is put together. And I do like how well the Vora Victory explorations and scanning is put together. The expert advisor is also great in terms of the way that the expert commentary is kind of laid out. With the expert commentary, it's really cool that it kind of helps you understand what's going on. And Vince also kind of talks a lot about kind of like what types of trades you could kind of look to do if you're looking at options and that kind of stuff. So, and also gives you a exit position every single day. We kind of go in here. It does include system testing. You can go in and test this to see how it works on different markets. And when we put together Victory 2, somebody had a question earlier about kind of how does this compare to his veracity system, his winning momentum strategies. Those were very, very popular systems and strategies that we created as well. And we've decided that as part of the Victory 2 package, you can just get these. They're complete experts, they're complete systems, they're top selling add-ons that are available, and they're just included for free. In addition to that, we're going to include a year of the Trading Wins consulting service that includes daily trading ideas, 3 live weekly sessions, on-demand technical analysis training videos, option trading ideas, and very, very good. One of the things that I like about so many of the offers, and this one included, this is a service you can subscribe to on his website. It would cost $97 a month. It's just included for free, and it's a great way. I've learned so much from Vince over the years in terms of, things that I like to look for in a trade and all that kind of stuff. We do record a bootcamp session. In that bootcamp session, it's available immediately. So all of that stuff is going to be included. You get Vora Victory 2, you get veracity, you get winning momentum, you get the year of membership. The total price on this would be $56.57. Our launch price was $9.97, and that's the price that we kind of stuck. But what we're going to do here as part of the summit offer is we're going to actually do $9.97. So you pay $9.97, you get all of that stuff that's included, the bootcamp class, the service, all of that kind of stuff. And to take advantage of that, you can give us a call at 800-882-3040. You can go to metastock.com/saleschat. You can go to metastock.com/conf promo as well. So there you go. Very, very successful add-on. If you haven't tried it out, you should. If you bought Victory 1 and you want to get Victory 2, you can get that for half off by calling 800-882-3040 or going to metastock.com/saleschat. So I do have this as well. If you want, we do have a package that includes all of the add-ons that we're going to talk about today. The TST Trender, Victory 2, the SuperTrend Bullseye, JBXC Complete, the Trendlines training that we put together with Oscar Carboni, 3 months of Learn Metastock. Normally the cost of all of that would be $6,884, but as a bundle offer, $2,792. You can call 800-882-3040, or you can go online at metastock.com/saleschat for that offer. So as we kind of transition, we're going to do it real quick because we're running a little late, which is fine. I want to thank our sponsor of the Traders Forum. You can go to the www.thetradersforum.com and sign up and become a member of the forum for no cost. You can live market chat with other traders. You can watch lessons. It's a community of traders designed to kind of just talk about the markets, hang out, chat. Very, very cool. Thetradersforum.com. So, and something's out of order here. Oh, okay. Our next presenter is actually Jake Bernstein and Brian Latta. Jake is a guy that I've worked with for a number of years. Very, very good friend of Metastock. He's going to be talking about with Brian Latta about the expansion contraction indicator methodologies that we put together with him. And this was something that he worked on and Brian Latta also worked on. Jake brings a huge history of trading. He's written dozens and dozens of books on the subject. I like kind of the methodology that he comes along with when he talks about trading, the setup, trigger, follow through type of methodology. Jake, let's go ahead and get you and Brian started. How are you doing? I can see your mic's on.
Doing okay, Jeff. How about you?
I'm doing great. Let me go ahead and get, let's see, I think we're going to be using Brian's screens today. I'm going to make him the presenter. All right, there we go. Hey, Brian, how are you?
I'm fantastic, thank you.
All right, we can see you. We can see the screen. We can hear you. We can hear Jake. I'll let you get started. Sorry we're a little bit late, but it's your turn.
Okay, you want me to start, Brian?
Go ahead.
Okay, good. So it is really a pleasure and an honor to be here, in spite of the fact that I'm losing my voice today. Jeff, you are the most laid-back person in the business. Never stress out. Always make people understand what you're talking about. Do so very clearly. What Brian and I have for you today is very simple. We believe in simplicity. Since I made my first trade in the summer of 1967, I have learned that the more complicated things get, the less effective they get. So we focus on simplicity and what I call green light, red light. If the indicator is red, you're short or you're out. If the indicator is green, you're long or you're buying support. It's very simple. And so what Brian was able to do was to take my methodologies and convert them into something visual so that you could see exactly what you're doing. If you go to the internet, your browser, and you type in, teach me how to trade, you will get, and I kid you not, several 100 million hits. That's very confusing to people because they don't know what to do. I've learned more about traders than I've learned about trading. And the thing about traders is this. They're always wanting to make things more complicated, get bigger computers, faster computers, more indicators, more signals, more trades. It's not about that. It's about quality and about specificity. So we use a very clear model. And if you don't have the right model, which Jeff so correctly stated, setup, trigger, and follow through, you won't make money. Brian and I do not want you to depend on us. We want you to make your decisions based on solid, factual methodologies that Brian has had the intelligence and the creativity to develop out of my methods. So that's what we're going to offer you today. It's important to remember this. It's simple. We don't want to foster dependency. We want you to become an independent trader. And the thing about the methodology, which Metastock has so brilliantly programmed into their platform, is that it's green light, red light, and it will work in any time frame. You can use options with it. You don't need to make decisions. The decisions are made for you with the expert advisor. So Brian, I'll let you get started, and then I'll jump in when I have something to say.
Well, thanks for that, Jake. And of course, on the title slide, you can see what expansion contraction will identify, and I'm not going to read it word for word. So we're just going to get right into the disclosure. Absolutely necessary to run through is going to provide some evidence from back-tested and or continually traded results. So again, we need to run through the disclosure here to make sure that of course, there is no guarantee. Anything can happen, but personally, I'd rather take the data from the past, back testing or individual databases, and use something that's been proven to be consistently positive outcome. And as you can see in here, of course, there's a whole lot of research that went into expansion contraction. We're not going to go into that. It is available on most platforms, major platforms, for no cost. As just a basic indicator, of course, with Metastock and the advisor, it's got some extra bells and whistles, which are great. And again, you want to study what's going on from the past, know your rules. Expansion contraction rules are 100% objective based on Jake's setup, trigger, follow through, as Jeff mentioned earlier. Basically rules to get in, rules to get out at a loss, rules for taking profit. There isn't any guess about what to do. Go ahead, Jake.
Anytime you have a trading strategy and you have to think about what to do, or in other words, you don't know the trend, you don't know whether to buy or sell, you're not sure what to do, there's a problem. That will not happen with expansion contraction. You always know what to do. Whether you do it or not, that's up to you. But you always know what to do, and that's super important. Back to you, Brian.
Thanks for that, Jake. And of course, I'm just going to pop up some of your background and my background briefly in case those of you that aren't familiar. Hopefully most of you are familiar with Jake, been around for a long time, I think a couple of centuries now.
Yeah.
And, and has had services that are used by major institutions all over the world. And I would have to say for an individual service, the seasonaltrader.com is one of the best for finding trades in advance that are high probability. So if you're not familiar with Jake's services, definitely check those out because they can help you with your process of being consistently positive outcome. Again, just a little background on me. I have spent most of my time coaching other traders as well as developing trading systems. I did write a PDF book on the book on trading quite some time ago, and I've been updating that. That is available for free on expansioncontraction.com, where you can learn more about both Jake and I if you're not familiar yet. But basically, I've just taken Jake's processes and applied them into defining and designing clearly defined systems that are 100% objective and of course meet our objectives of growth, win more often, make more than they lose on average. And of course, at least between both Jake and I, he covers options. Sorry, I cover options and the currency markets, and Jake's specialties, of course, are futures and stocks. And we do group coaching together. And that's, again, at least a benefit of that. Now, briefly here, I am going to just kind of run temporarily into a few challenges that people have with typical indicators. This is MACD, and of course, I've just got a plain old bar chart with MACD. If we were to take a look at just defining some entries and exits, I did program out here some default MACD settings, sell setups, buy setups on the crossovers, just to quickly get in here to see, are there bigger winners? Does this win more often? Are there few consecutive losers? When you're developing trading systems, obviously you want to win more often. Jake's minimum 60% win to loss, and preferably the profit to loss ratio is positive. But as you can see with most systems, we may have many trades and consecutive losses and poor performance on that over time. The second chart I'm just going to show briefly here is utilizing RSI on this one, which is just, again, a basic above 50, below 50 kind of trigger. And once again, too many trades. We've gone from 14 trades out of MACD to 24 here, and we did manage to get some bigger winners that will say this is up positive, but again, too many consecutive losers in choppy markets as buy sell. So our challenge obviously is to identify trading systems that help us with that win more often and make more than we lose. So getting to expansion contraction really quickly here, it is different from most indicators. Most indicators lag. They require many bars to plot one current bar value, and expansion contraction is either non-lagging. It takes data from every bar or candle. It's defining how fast price is moving up and down through Jake's moving average channel. And that momentum, quote unquote, is what it's defined as, showing us both short term, and it adds the second filter in the second paragraph as a trend filter.
Might be a good idea to show a chart, Brian.
Go ahead, Jake.
Might be a good idea to show one of the charts.
Yep, that's coming up next. Okay.
Sorry to barge in.
Right. I just wanted to get through here, and at least so if people are taking screenshots or whatever, they've got the clear definition. So as Jake had mentioned earlier, we do have dark green bars are going to identify a strong bullish position. Light green bars are telling us the trend is still up, but currently the price is dropping. So a downswing and an uptrend would help us with either light green or dark green bars to show us we're bullish. Weak down patterns will be light red bars, and strong down are dark red. And basically that just helps us with identifying reality at the right edge of the chart. Where strong up or strong down, we might be weak up, we might be weak down, but ideally whatever system we're using clearly identifies exactly where you are right now, so you don't have to guess. It also will show you clear buy and sell setups marked on there on the chart. So as I mentioned, red light, green light. And if I pop right over to an example chart on here, looking at the Qs over last year plus, we can see where there are light green or darker green bars, a uptrend On that, we'll see Bs for buy triggers. Currently, the expert advisor is just highlighted with the triangle above the buy setup here back in November of last year on that one. And of course, we had a multi-month trend up, a brief downtrend, followed by, again, another significant move higher. So this example chart was merely meant to show you uptrending, stronger week will be green. Downtrending, stronger week will be red or lighter red bars in order to just make this clear and simple. Although this is a chart that doesn't show up to current date, as the time of this, we were up week on that current pattern on the cues. And of course, that, like I said before, we do want to have some type of reality at the right edge of the chart.
May I jump in, Brian?
Go ahead.
The thing that you always want to ask yourself about your trading strategy is this. Is it getting the big moves? Did it get the big moves? So on this chart, you can see at the bottom of the screen what we call the cone. And when it turned green back in October of 23, you'll notice it stayed green for a long time and caught the major move. If you're not catching the major moves, you will never make money. It's that simple. It's a fact that we have seen time and time again. The small moves down take away some of your money, but the big moves is where it's at. You've got to get the big moves, and they have to be very definitive. So when the bottom indicator, which we call the cone, turns green for 2 consecutive bars, I am long the market. And I stay long until I get 2 consecutive red below, and that turns me bearish. Then when I get 2 consecutive green again, I turn bullish again. And it's that simple for me. And believe me, if there's a trading strategy, a trading system, a method, an indicator, a technique, an approach, I have tested it, I've traded it, and I've tried it, and I've rejected most of them until we finally came up with expansion contraction, which is a brilliant piece of work, so beautifully programmed by Metastock. Go ahead, Brian. Sorry to barge in.
Oh, jump in anytime. Of course, always appreciate that. And of course, as Jake was mentioning, clear buy setups. There'll be a B for expansion contraction going long-term, short-term bullish. We'll show a B. If you have the expert advisor, it'll tell you if it's a strong buy or what, along with what's going on all the additional information on the right edge. So, of course, we do want to pop right back over to showing some examples in here. And I just showing the same chart, but this time, at least with what Jake mentioned, the long-term trend, you've got to get the big moves. Ideally, you know you're in a big move type pattern. It's identified by design to keep you in. And of course, the current red arrows that are dropping on here are showing where short-term, the expansion contraction lines were contracting or coming back together. That will show you some type of correction. In this case, uptrend pattern off of a buy, made a bear correction. We had a continuation. We had a correction. We had a continuation, and so on and so on. And I kind of just marked out the rest of this and labeled with the cloud or the cone, as Jake calls it. Long-term trends are the colored cone and the background, red downtrend, green uptrend. It's as simple as that. There are some lines that go across the indicator at the bottom. They're also measuring over 500 periods. What's normal? Basically, it's standard deviation, but we'll just stick with what's normal. And that way, if we can see that the cloud is above what it might consider normal in its range over the last 500 bars, we can quantify that as a strong up in this particular case. So we have strong up, weak up. We have weak down and strong down. We have weak up and then strong up back on the charts. Ideally, as I said, reality at the right edge of the chart will help most traders realize that, they just know what it is. As I mentioned before, when we have contraction or markets going sideways, we'll have a trend, right? We will have some type of sideways or bear market, which will be showing some contraction, and just marking out on the bottom half of the chart again with the cone in the background, we're generally expanding and getting wider or taller with the cone. And of course, as you can see, the trend continued up, made a new high, pulled back, made a new high, pulled back, and then we popped up and made a new high again. And of course, you can see the cloud will either be narrower in this case than it was before, showing a bit of divergence, or it might be wider as it was here based on before, which is showing continued strength. So ultimately, we can see where we started to contract over time. The cone in the background got narrower and narrower, just marked with the green arrows as we consolidated sideways, bouncing around in the range here, getting plenty of potential continuation buy setups for some quick profits out of there. So as I was mentioning before, the name it's called expansion contraction because just clearly expanding markets are the strongest bullish or bearish markets. Contracting are either consolidating or correcting. And at least in this case, that's just starting to become clearly defined, hopefully. As I mentioned before, over time, when we're seeing the cone contracting and we're seeing price making new highs, the classic divergence, new highs in price, the indicator below not making new highs, something was different, and helps us identify potential divergence trade prior to a correction lower and then a brief downtrend here on that particular chart. So let's pop over to the next slide. As I mentioned before, with the bullish divergence on this particular slide, we looked at bearish divergence on the previous. Price was making new lows, literally here in the end of the first week in April. That was just a few cents less than the March low, so price made new lows. Again, the indicator is contracting, suggesting the downtrend momentum here is weakening, and identified a pattern here just prior to the reversal and a big move up. If you missed the divergence, you had the opportunity for the big move up. I will say, based on Jake rules, the divergence here, as price did correct lower into the third week of April, missed a stop out value of Jake's calculations by 10 or 13 cents, and then continued higher after that. So again, I'm a mindset to take whatever triggers next on these particular trade setups. This chart I had done before. Jake, did you have a comment?
Yeah, I did want to say one thing. Remember, folks, for me, it's very simple. I don't think about divergence with these charts. I don't think about supply and demand. I don't think about overbought, oversold. I simply look at the green and the red. That's it for me, because I know in the long run, if I've got the patience to stay with the green or stay with the long-term red move, it's going to make me a lot of money. And by the way, I am a real trader. I really trade practically every day. I'm not a theoretical trader like most of these people are. Back to you, Brian.
Great, thanks for that, Jake, on that. So I did mark up on this chart with the blue arrow, the actual entry. That was a market on close on a strong buy. The calculated stop that's also included in here, the red arrow would have been where your initial risk was. Take some profit. I have marked with the additional arrows on here. Plus, if price trades up to an extreme resistance, we have some diamonds on here for alternative profit targets. So clearly, when to get in, clearly marked on the charts with the BS or buys and sells on that, on of course, and then with the rules that we'll include a little bit here in the slides, where to get out at a loss, when to take profit, how to manage the trade out, when to add the winning positions, at what price, with what stop, where to take some profit, let the trade play out. So literally this big winner went from beginning of November of 2023 all the way till mid-April of 2024. And as Jake said, a big winner. Go ahead, Jake.
The computer, the expert advisor, is always going to tell you what to do and where you are in the trend. Whether you do it or not, that's up to you. But I think if you go through history and look at it repeatedly, you will gain confidence with the methodology and see that it really does know what to do, and it's right a good majority of the time. So the burden comes to you, which is why we can't guarantee anything, because we don't know what you're going to do with the good information. I've seen many traders take great trading strategies and turn them into worthless junk. It's just a question of following the rules and having the patience to stay with the big trade, because that's where the big money is made. Remember, 80% of your money is going to be made on 20% of your trades. So if you're constantly gaining out of trades at a small profit, you're never going to be there for the big one. That's my little sage advice.
Great. And, you know, from coaching thousands of traders over the last 20 plus years, those that I've seen that actually make it, they get it, they have strong trend definitions, or at least rules to just get in now without second guessing. No yeah, but, no what if. It's just take the trade. And of course, they track absolutely everything. You've got spreadsheet analysis to know and verify the results. and ideally have back tested their rules or these rules in order to have proven it to themselves. It's usually those indications from individuals that do that work. They have a tendency to get this whole trading thing. How to be consistent is do the same thing the same way all the time. How to get better entries, have a clear system that's marked out and been back tested, and how to get better exits. The system also defines that. So I did show this chart on the yen futures last time with all of the basic trade results from the JBXC buys or sells, another JBXC sell on here with some of the results on T1, T2, T3. So you could get this. I wanted to show it briefly because it's basically the same chart here that I'm bringing up now, which is just showing once again at the right edge of the chart, current setup on this that has popped up and hit a profit target and is still sitting at sorry, that one actually did get stopped out at the original entry price on the buys. It hit a target, went to break even, and stopped out. So that's why I don't have the open parts on that. But on the previous slide that you'll have, T3 finally popped out on a divergence again, price making new lows. The indicator not making new lows, and divergence, of course, is an excellent way to either exit out of the trade prior to a potential reversal. Jake's said many times, divergence is one of the best ways of identifying a potential trend reversal, and we get out of danger pretty quick with that trade. So in essence, though, of course, I took a look at the risk on that futures market, and it exceeded, if you'll notice, there's no more than $5,000 at risk on any of these trades. So if the stop is too big, technically it's not take the trade. But we do want to show some examples. And as I was saying before, if you're going to keep track of things, you're going to want to keep track of what the date is where you got in and the triggers of the type of trade setups. And of course, you can read through most of this, as this has got some yen data in here from the last several years. I'm not showing all of it. I'm just showing an example. You need to track what you're doing on this. I've used spreadsheet data before to go through and say, what if, and change some rules and rerun the same data to see if it makes any kind of improvement. So again, what I like about what we do, it's back tested, it's forward traded, it's third party verified, and it is what it is. So, and like I said, if we have reality from data, a huge amount of research, as Jake has said so many times, then that, of course, should help in the long run to just take the trades, manage whatever you get by following the rules. And I will have to admit that has still always been the hardest part for me, following the rules, even though you know the results and you know you should. Life gets in the way sometimes. Now, I did pop up a bond chart on here. Jake, you did ask me to put up some bond charts on the S&P. This is a 15-minute chart. I did just pop up, so I'm going to show some basic rules. The open vertical line here closed, so we can see the day session. I did just put up the 24-hour market, but
these are intraday. Right?
Sorry?
This is an intraday chart, right?
15-minute. Now I'm going to show some blank charts in a second, but if we're going to look at any type of a systematic process, we should have clear sells or buys on these trades so that we could even go back and say, well, I haven't taken this trade, but this is where I got in, that's where I got out at a gain or a loss, and what were the results. I will still back test even markets that I don't trade in order to identify if there are consistent positive outcomes in these alternative trading strategies for people that want to pursue day trading.
So Brian, these buys and sells were generated by the expert advisor, correct?
Correct. Again, the programming right out of here, although this is Trade Navigator charts that I originally programmed expansion contraction on, it still has the B's for buy setups, or in this case, in the overnight market, expansion contraction shows price drop below the moving average channel quickly and trigger to sell. Some will follow through, some won't. And so we do know at least what we might have in here as I just popped up the T-bonds on the 30-minute chart on here with the same buy-sell setups and some potential stops, red markers, profit targets in advance. Again, you want to know where to get in, when to get out at a loss, when to take a profit in advance, back tested.
Will we be able to show some intraday charts on Metastock expansion contraction?
I did pop up here on this as I did put up. So here's the 15-minute E-mini with the moving average channel. on this, showing the day session only.
Yes.
Just a blank chart with the moving average channel, expansion, contraction, will AD. So that's why I think when you said bring up these intraday charts, I figured you wanted to see this format.
Right. I just wanted to show people we can use expansion, contraction in any time frame because it's very specific and clear. Always tells you what to do. Go ahead, Brian.
Well, and I'd say in this case, because Jake's 15-minute opening range strategy is proven to, if you are day trading, comment Jake's made before, do not trade against the 15-minute opening range bar strategy. I'm assuming that's still true, Jake?
Absolutely.
Excellent. So that was a 15-minute chart. I did pop the same market up day only to 30-minute charts. You can see there are times during the day it was bullish or bearish, very clearly red light, green light. Go ahead, Jake.
That's for majority of this entire chart. The indicator at the bottom of the screen is green most of the time, and that's consistent with what the trend has been for the last few days. Trading from the long side has been the key to this whole thing, and the indicator at the bottom of the screen kept us long most of the time.
Right, it basically showed a trigger here at the beginning of the 28th, a buy trigger with a B set up on here, and did stay bullish, dark green to light green bars, did give opportunities to buy the lower band, which is Jake's swing trade. There's a second opportunity to add to, and a third opportunity to add to. Trend continues, a fourth opportunity to add and trade the range. So ultimately in here, even intraday, I've lasted 6 days on that and showed many opportunities to take an initial position and add to that trade on that. Very stable even here on intraday charts. I have also taken it down to tick charts as well as range bar charts, and still shows out well. So I've got the bonds up here, 30-year on the 30 minutes, Jake.
Right, exactly. Basically the same thing. We're looking at the big moves and we're buying at support, which is the bottom of the channel. We're long when the indicator at the bottom of the screen is green. We're short when it's red. It's really very simple. It's not rocket science.
Green light, red light.
That's all it is for me.
So I did pop up some of the swing trade examples on that on the 30-minute chart. And again, when the S's popped up, sell resistance, exit at support, or the buy setups, Jake was mentioning buy support, get back out at resistance. And we do want to have trades that are basically breakouts that could get big winners. And you want to trade the range when we're not trending. On the last slides or last session, so I also put up what this small basket here had done, 6 stocks and 6 currencies on that one. And so I've just popped up on here where we were on the last conference, and just the difference on here. I'm not going to show all the charts because I did last time, but we are up a little more on Apple, a little up more on Amazon, down in Microsoft, although there's a current trade here that's recovering a bit of that. Up slightly, as you can see, flat on Tesla still, but in a winning trade. And on the 6 currencies and the basket all trade on the currencies, they're also showing for the most part that they're up from the previous session. So I don't mind sharing the results on that.
Why are those minus signs, Brian?
Sorry, Jake?
So what do those minus signs mean? Like, $100 million US dollar minus 11.4. What does that mean?
Last month we did a session and I showed the results for the year in Apple. So this is year to date, and Apple went from 1241 last month up to 1307 with the trade results. So that's just a change in the previous session till today to show some are up, some are down.
Okay.
Partly because we want to track results and be completely clear. So I am going to pop up the results, or sorry, the actual trade setups. Strong buys. I'm not going to read through this. Ideally, if you've got the ability to take a screenshot, I'd say take a screenshot. Although we've released these slides, this is not a black box. This is open, and both Jake and I are also available for taking email questions answered and or some screen sharing time if you've got problems. So the main thing is everything that's been shown has a clear set of rules, where to get in. There's a buy stop limit type order, blah, blah, right? Where to get out using the moving average channel stop, the Jake's calculations, clear rules. T1, T2, and some alternate exits, depending on whether or not you're conservative, moderately aggressive, or aggressive. And so again, I'm not going to reread these. These are the bear setups, and they're pretty much the same type of rules on here. And the weak buy or sell type setups I have defined on there, and I'm more than willing to show on the charts. There's also swing buys. I do have slightly different swing buy than Jake's, although this at the top you can see is Jake's swing buy. So when we talked about buy and support, buy limit order at yesterday's 8-period simple moving average of the low, you need to have that in the period before on that one with the clear exit and profit targets T1, T2, and then obviously T3 goes out on a reversal. Maybe I shouldn't say obviously, but this to me after trading these for years. And then the swing sell setup. And then I also have some swing trade setups where I am really just using the 20-period simple moving average. So in a strong uptrend or defined uptrend, I'm waiting for price to come back to yesterday's 20 simple moving average, place a buy limit order there. And that one is, of course, looking for bigger stops and are using bigger stops and bigger targets. Go ahead, Jake.
Are these all covered in the expert advisor?
I don't think they're in the expert advisor exactly. That's why I'm kind of going through these long enough for people to take screenshots. Okay. Or if you really want them, email us and they're free.
The expert advisor gives the basic buys and sells. Is that correct?
That's correct.
Okay, good.
It also gives support and resistance and some other data. But I did want to plot the rules that were from the examples so that you can see that it is rules-based 100%. The examples on the chart are following the rules. The rules have been back-tested and again, forward traded and third-party verified. So just wanted to run it that way.
Okay.
So here's the last one, just briefly. Again, there's swing buys or swing sells. Again, when I'm trading, it's basically whatever triggers next. So recently I've been gotten out for some medical reasons and I'm scaling back in. I'm waiting for the next trigger. And sometimes that takes a little bit of time. So when I'm scaling back in and being patient, waiting for the next trigger, as this slide pops up here and says the expert advisor benefits are showing the BS on the charts, the clearly defined entries, and the trigger to get in with B's for buys and S for sells. Rules to get in, we showed that. Rules for when to get out at a loss and rules for taking profit. And again, I'm a big fan of adding to winning trades in a strong trend or when you're up a lot, if you're aggressive, adding to a trending market will give you the opportunity to multiply a big winner, making it bigger. And of course, one thing I learned from Jake, what's the worst that could happen? You miss the big winner for whatever excuse or reason. So it's not losing, it's not consecutive losses, it's missing the big winners, hopefully because you violated the rules. I mean, you got to have rules for when you're in a big winner, and expansion contraction does that. So on this slide here again, I just popped back up towards the end to show the expert advisor on that. And again, some of the actual back-tested results from the JBXC buy setups with the markings on here, where to get in, where to get out, at a gain or a loss with those rules. So I just wanted to pop this back up to see the indicators very clear. It's green light when the cone or the cloud in the background is bullish and the green line is above the red line. It really is that simple. And to make it visually obvious, green bar is bullish until there's red bars bearish on that. And that's why we just wanted to pop this out. Now, also on the platform in here, of course, we've got the expert advisor that's available and can be used in the power console. And of course, the system tests with the stop and reverse or stop and reverse with the reentry are all back testable in the platform. So Jake, I know you had to go early from a previous engagement, so I did want to try to wrap this up in time for you to make any final comments or answer any final questions on this. And this is how you can reach us.
Yeah, I'm happy to answer questions anytime. Just send me an email. There's my email address up there. In addition to that, I'm having my annual forecast next week. If you want information on that, go to my website, jakebernstein.com. And remember, these rules for the expansion contraction came after a good many years of experience and actual trading. So these are not willy-nilly rules. They're not the typical kind of trades that you get. They're designed to capture the big moves, and we believe we can do that if you do your part, which is to follow through. And I want to thank you, Brian, for doing a great presentation. And of course, Jeff, as always, I appreciate the opportunity to be here.
Oh, yeah. Love having you. We do have one question, if Brian or Jake's available to answer it.
Still here.
Yeah. This is from me, T, on the basically GoToWebinar. Hi, Jake and Brian. I just started using Seasonal Trader, and Brian, I've read your book and recently added JBXC to my charts. Can you expand on how you identify the strongest support and resistance on JBXC using the cloud and clone? I will try Jake's trade strategy as well.
Great, that's a great question on here. I'm going to point back to the example chart in Metastock on here in July to August, where the cone or the cloud was at its maximum width. And notice we're back to looking at either large dashed horizontal lines or smaller dash dot, or there are some small dash lines on there. That is identifying the normal range for the cloud or the cone. And when it is above the large dash lines, that is the green cone, it is greater than the large dash lines. It's considered to be overbought or overextended, and we would anticipate some type of a correction. Or as Jake said, when his moving average channel gets narrow, it's more likely we may have a move back towards support. So that's generally seen in the maximum width of the cone.
Okay, there you go. Shine asks another question, how can I get the indicator? I'll talk a little bit about that. Actually, if you have Metastock 19, it's already in your Metastock, but you'll also want to get the scanning and the expert advisor and all the stuff that helps you put it together. Those are the end of the questions, though, Jake and Brian. So unless you have something else, I'd like to kind of talk a little bit about how to get the indicators.
Go right ahead. And thank you for the opportunity for me to speak. I love teaching.
Brian, did you want to go a little longer? I don't want to cut you out, but thank you, Jake.
Thank you. Thank you.
Go ahead, Jeff.
Oh, okay. Sounds good. Let me go ahead and jump over here. I'll go ahead and make me the presenter here. And I really do like the box. So I'm going to go ahead and make this my monitor. You should be able to see the right screen. I'm just going to make sure that it's on the right one because I may have misclicked. It doesn't look like I did. Okay, very good. Me, you're welcome. Thanks for the question. Thanks for asking the question, all that kind of stuff. So this is the add-on. It's called the JBXC Complete. It features all of the stuff that they talked about. I like, when I talk about the expansion contraction, I call it, and nobody else has picked this up, but I call it the Swiss Army knife of indicators because it's so useful in terms of the stuff that you can use it for, in terms of identifying not only the long-term trend, but the strength of that long-term trend, the short-term swing and swing strength, the range expansion, whether it's expanding, whether it's contraction, where support and resistance are. You can use it to identify divergences, short-term breakouts, all of that stuff is kind of initially and put into the program. So one of the things when we were kind of developing this out, I'm not going to kind of go through exactly kind of what those are. Brian and Jake did a really good job of kind of talking about how these different works. But what I kind of want to point out is when we designed this out, I thought it would be really good to kind of call out exactly how the signals or what the different things we're saying that in terms of long-term strength, short-term strength, range, whether there's a breakout, what major support is, what minor support is, whether it's overbought or oversold, or whether there's divergence. And you can see that's kind of all written right into here. So if you're in a position, it's going to give you stop losses, profit targets, conservative profit targets. All of that is completely written down. It's completely written into the system. So it does a really, really good job of identifying that. I love the expert advisor and kind of the way that it kind of helps kind of just point out the obvious sometimes, and it's obvious if you've been using it for a while, but when you're learning, it's not necessarily so obvious. So to have it kind of highlighted for you is really, really beneficial. And of course, we've talked about how I love scanning. I love the ability to go in and just kind of go through a big list of securities, get rid of all the trash, the ones that don't have an opportunity, and find the ones that do. And so with this, you'd be able to find a number of different conditions, whether it's bullish divergence or bearish divergence. You can find the buy signals, the sell signals. You can identify if it's in a long-term trend, bullish trend, bearish trend. All of these are scans that are already put together. They're easy to run. You can run them against one of any of 200 to 300 different exchanges. You can use them here in the US if you're interested. If you're from India, we've had a number of Indian viewers today. You can use them in Indian stocks. You can use them in Australia, Singapore, London, whatever kind of exchange you're interested in and whatever kind of market you're interested in. So very, very cool to power this with all the data that we get from London Stock Exchange Group and the pedigree of the data that they have. So with it also includes system test. Here's a little bit of a performance summary. I ran this against all the S&P 500, I think, and that's how well it worked against the S&P 500. So you can run that. You can run it against any market that you want. Very, very good methodology to kind of help you out. When we did release this, like all the other products, we created a boot camp for it. In the first part, Jake and Brian sit down, they talk about JBXC, how to use it, how to identify signals, and they did a terrific job. That's available to you as soon as you order the add-on. In addition to that, I did a pretty good job of going in and showing how to use Metastock to help you find charts, find opportunities, run the scanner, the system tester, all that stuff in there. So that's a two-part training that's included. There's no additional charge for it. And JBXC is a one-time purchase. So it's normally $5.99. As part of the summit offer, we're going to do it for $347 today. That's one time. You purchase it, you own it forever. It includes, like all of our one-time non-training products, a 30-day money-back guarantee and a trial to Metastock if you need it. So there's a number of different ways you can get this. If you want, you can just go fill out an order form at metastock.com/summit deal. You can call 800-882-3040. You can also go to metastock.com/saleschat, and that'll help you kind of get started as well. So there you go. Give me just a second here. It is part of the Trader Summit Action Pack. We've put together a package that includes TST Trender, Vora Victory, Big Trend Toolkit, JBXC Complete, SuperTrend Bullseye. I was kind of thinking, I wonder if you kind of share my ideas here, but just in terms of the session that we have today, we have so many great speakers, and so many good, well-received add-ons that people have liked. And if you really haven't gotten any of these yet, this might be a really good opportunity. These are some of the most powerful, popular add-ons that we've created. Normally the cost on all of them, if you just bought them separately on the website, would be $6,884. At the summit, you can actually buy them all for $2,792, but you have to call in or chat in to get this. So 800-882-3040 to do that. Metastock.com/saleschat. They can help you get set up. If you have questions, they're really good. They're very, very well trained in all of the products. Get in touch with us. So looking over here to see if we have questions. Me, you're welcome. And then I think I answered the questions on how to get that indicator. So I'm gonna go ahead and kind of get that over here. Answer both of those. So I only show the unanswered chats over here. So anyway, let's see. Questions about the recording. If you're watching on GoToWebinar, you can view all the recordings at youtube.com/Metastock. We're streaming all day. It'll be available as soon as we actually get done today. You can go watch the whole thing if you want. In addition to that, about an hour after we're done, we'll send you the link to it since you're registered. So there's that. If you're on GoToWebinar, or if you're watching us on YouTube and you haven't registered yet, you should. If you go to metastock.com/traders-summit, and that link is at the top of the chat. It's the pinned comment, so you can click on that. If you just click on the registration button, it'll allow you to go in and register for the conference, and that'll allow you to be part of the event. So there you go. Anyway, or that'll allow you to get a free, there's free stocks and actually, here, hold on. They'll allow you to get a free stocks and commodities magazine. There also, all the presenters have put together special bonus offers that you can sign up to get for free. To get those and all of the bonuses, if you want to get some of those bonus offers, you just have to register. It doesn't cost you anything. Metastock.com/traders-summit. So there you go. All right. Of course, we are Metastock. We actually went from running a little bit behind on time to running a little bit ahead on time. So that's great. Just to kind of give you a little, we're going to go ahead and give away a prize. I thought it might be fun. Let's do a prize. Before I do that, I want to say we're Metastock. Metastock's been rated the best software in its price category. It's been rated that way for 31 years in a row by the readers of Stocks and Commodities magazine. We've talked about scanning, testing trading ideas, our patent. Well, we didn't talk about our patented forecaster, but we have a patent on it. It helps you statistically analyze different price patterns to see how likely they are to be indicative of what might happen in the future. Gives you real-time commentary. I've talked about commentary, alerts. You can get pop-up alerts. You can get email alerts, all kinds of different signals. Pricing's just $75 a month. If you buy a month, we'll give you the second and third month for free. That brings your cost down to $25 a month. You should try it out. There is a reason it's been rated #1 for 31 years in a row. So metastock.com/summit deal. Metastock.com/saleschat or 800-882-3040. Greg, I'm going to have you help me for a minute because we have a few minutes. I decided it might be fun to give away a prize. So are you with me?
I'm here.
Okay, cool. Let's see. I think what we'll do, maybe we might do this a little bit later on too. But I think what we're going to do is we're going to look at basically everybody that's had a question or a comment today. I'm going to kind of open up the list so all of the questions and comments are showing up. And what I'm going to have you do is just tell me, I'm at the very top of this list. I'm starting. Our very first comment today was from Neil. He said, we have some icy roads here on Ontario. When we're ready,
yes,
I'm just going to scroll down this list and have you tell me when to stop, and we'll give whoever that person is a book. Actually, we'll give them a number of books. So, do you want to know what books? I'll tell you what books. All right. So we've got a couple of books here. We've got, these are both written by Steve Bigelow. Steve Bigelow was an awesome technician. He was a big friend of Metastock. We miss him a lot. But I've got a couple of his books. I've got the High Profit Candlestick Patterns right here. I've got the Eliminating Emotions as well. And I'm even going to throw in a mouse pad. So this one lists all the major patterns and kind of how they form. Those three, I'm going to personally go to the post office and drop them off. So, and I'll pack them up. It depends. We might do them by FedEx. Sometimes we do one. Anyway, Greg, are you ready?
I am ready.
Okay, I'm going to just kind of point this way and look at, to the programmers for a second. Just stare a little bit. Maybe make some uncomfortable eye contact with them. Tell me when to stop.
Stop.
Okay. Here's the comment. It's from Ethel. I'm going to send it to the chat here. It was just a couple symbol requests. So Ethel, congratulations. I will make sure before I send this out that I have a good address from you and a good phone number. But you just want some books. If you're still here, let us know in the chat. So anyway, either way, thanks for being here.
Hey, Jeff.
Yes, sir.
Would you like to know the results of our today's YouTube survey?
Sure. Yeah.
Thus far?
We asked if the survey was, just to
Yes.
kind of start at the top, the survey was, do you expect a Santa Claus rally? Right?
Right.
And then the answers
responses were ho, 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 or bah humbug.
What's the result?
Currently, 74% are expecting a rally, assuming
Okay.
that they answered ho, 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 and 26% answered bah humbug, presuming they don't think there's going to be a rally.
Oh, very cool. Okay. What do you think, Greg? Do you have an opinion?
I'm always up on Santa Claus. And
You're
rallies.
always just going to vote for ho, 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 because that's the right, nobody wants to vote for bah humbug.
No,
So.
no. And also, I'm also, up on.
I thought it was interesting at the very start, if you missed it, Serge showed a seasonal chart for the seasonal tendencies for S&P over 30 years. I thought that was pretty cool.
I did too.
Yeah. Anyway, okay, and
Yes.
to talk about what he said, generally there's a little bit of a consolidation that happens till about midway in the month, and then there usually is Santa Claus Valley. At least that's the best way I remember it.
Do you require any further assistance from the
No,
behind
I
the
think
scenes?
we're good.
guy?
Thank you for the
All right.
assist. All right.
All right.
All right.
Hang on.
All right. Metastock.com/summit deal to order any of the stuff that we've talked about today. Metastock.com/sales-chat, 800-882-3040. Big thanks to Technical Analysis of Stocks and Commodities and the Traders Forum for being sponsors of today's events. And I think with that, I actually already showed this. I already talked about this. And I think with that, we are on time. Our next guest is Daniel Sinnig. Daniel has been working with Metastock for a number of years. His website is called tradingindicators.com. One of the things that I find very unique about Daniel, I was going to say it's very smart. I'm not sure that that's unique, but he does a really good job in terms of taking ideas and then kind of creating systems that are very optimized to kind of look at kind of historical data. Very, very talented person, very, very gifted programmer, also a very, very good presenter as well. So kind of the trifecta there. Daniel, you ready to go?
Trifecta, yeah. Thank you, Jeffrey.
I do think I'd called you the trifecta after I listed about 4 or 5 positive qualities as well. So anyway.
Perfect. Thanks, Jeffrey, for the nice introduction. And how is everyone doing today? Are you guys enjoying this awesome conference?
I'm doing great.
Yeah, it's always a treat to be here with the Metastock people and, of course, the awesome users of Metastock. And I'm, Jeffrey, honored to be joining you guys month after month, I should say, at every major event. So thank you so much for having me also this time.
Absolutely.
Right, so I'm gonna go ahead and share my screen. There
I see. Oh, yeah. Okay.
Should be good now.
Perfect.
Okay, awesome. Well, welcome everyone. Also from my side, my name is Daniel Sinnig, as Jeffrey had mentioned before, and today we are going to talk about SuperTrend. You have probably heard about the SuperTrend indicator. It is available for most trading platforms, and perhaps most importantly, it is one of the classic indicators out there. It's been developed, I don't know how many years ago, perhaps 20 years ago, and it has become, over the years, one of the most influential trend trading indicators out there, period. While this all remains true, this is an old indicator, oldish indicator, and with modern technology, for example, available with the latest version of Metastock, it is possible to even improve this indicator further. And this talk is exactly about this, a new version of SuperTrend, and we call it SuperTrend on steroids, which, as you will see, is an auto-optimizing version of SuperTrend. All right, now before we get into this, let me guys propose something to you. So I did some research before this talk, and a couple of hours ago, I found a very interesting symbol, Arch Capital, a symbol in the S&P 500 in the financial sector, which I believe has a very unique opportunity to potentially enter into this uptrend, which you can see here. So this is a long-term bullish symbol. It's very easy to see. If you scroll out or zoom out even a little bit more, you can see this symbol has been moving in the bullish direction for quite some time. So it's in a bullish trend. All right, that's nice. Also, what we've seen is that SuperTrend, or in this case, SuperTrend Bullseye, this new indicator or this new version of SuperTrend, has shown us a long entry signal. You can see it here. All right, so we see these entry signals along the way, but as of late, a couple of days or weeks ago, we once again had a long entry signal. And typically these signals are, they work out quite nicely, especially for this particular symbol. You can see it here or here. So these tend to work out quite nicely. But what made this really interesting to me is that after an initial move into the bullish direction, we had a bit of a correction, so to say. What happened here is that price went down a little bit. We're still long, but now and this is what makes it so interesting, is we are actually quite near our trading stop, our stop loss. Meaning the stop is not very far away, at least compared to the initial entry of the signal. And this in turn means that we do have a really great reward to risk ratio. Okay, this is good. But in addition to all this, and we're going to see this in this webinar, in this talk, is our projected win rate, or let's say the odds that this uptrend is going to continue from here on, are actually quite in our favor. And this is why I have picked this trade as my trade of today. You can see the entries and exits that I proposed. I'm going to get to this a bit later, with an amazing reward to risk ratio. So I really like this trade. And in this presentation, I'm going to show you guys how I picked this trade and why I picked it. And most importantly, after this presentation, at least this is my hope, is that everyone can reproduce these steps, which I have taken to find setups like this. So that's the objective of today. All right. So, but we have to build up to this. And I think the very first thing which I should be doing is to properly introduce myself. All right. So my name is Daniel Sinnig, and as Jeffrey had mentioned, I'm with tradingindicators.com. We have been out there for almost 10 years. In fact, we're about to celebrate our 10 years anniversary very soon. And over the years, we have built almost 1,000 trading indicators for clients all over the world. So this is really what we do, what we specialize in. We've built quite a bit of expertise in this area, and we built indicators for Metastock, of course, for TradingView, NinjaTrader, and other platforms. All right, but perhaps what is maybe a little bit different about me from other trading educators that you may see on this conference is that I didn't always start out this way. In fact, for the longest time of my career, I wanted to become a professor in software engineering. So I went through all the levels. I did my master's, my PhD, my postdoc. I started teaching at various universities in and around Montreal, where we are based from. But you know what? During all these years, I was always fascinated by the world of trading and finance. So I started trading on the side. But as many of you may know, when you start out trading, you tend to make all kinds of mistakes. So did I. So I overtraded. I traded when market conditions were not right. I took too much risk. I revenge traded even. All not very good. And after donating quite a bit of money to the markets, I came to the hard realization, oh man, trading is not as straightforward as I thought, and I need help. And for me, needing help, for me being a software engineer, needing help meant I need better trading tools or indicators, which will help me make better trading decisions. And this is really how the story behind tradingindicators.com started. And one such indicator, which really has helped me to make better trading decisions and to find interesting symbols to trade where the odds are in our favor, I'm going to show you guys today. But before we get into this, I need to remind you that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this presentation should not be construed as trade advice. These are for educational purposes only. All right, so now with this out of the way, back to the topic at hand. How did I find this particular trade? Arch Capital, a trade in the long direction where we have a really great reward to risk ratio. And in fact, a reward to risk ratio of 6.5, which is quite something, because it means if we are right, we're going to win 6.5 times as much as we would lose if this trade does not work out. So it's really in the favor of the reward. So how did I find this trade? Well, to answer this question, we need to back up a little bit. So let's talk about this classic indicator, which I had mentioned in the beginning, which is called SuperTrend. So SuperTrend is one of the most influential trend following indicators out there. As mentioned in the beginning, it is available for most trading platforms, like built in. And I believe thousands of traders have used this indicator. And in fact, the author, Oliver Seban, a French guy, a French trader, even wrote an entire book about this indicator. So it's really popular. And what this indicator specialized in, back in the day when it was developed, it specialized in the early detection of trend reversals. And it signaled these by these sell or buy entry signals. So that was something. But in addition to all this, this indicator was also equipped with what is called a trailing stop, which basically allows you to ride the trend for as much as possible while locking in profits. And back in the day, this was quite influential. All right, and we call this indicator a stop and reverse indicator. Why that is, we see on this slide here. So it basically means that, let's say we go long here, you can see this long entry signal right here, this green arrow in the upside direction. We go long, and we're gonna ride this uptrend for as long as humanly, in quotes, of course, possible. But how long do we ride it? Well, as long as our trailing stop, this line in green here, is not being triggered. So we ride it up all the way up until this point here, and here we reverse our position. So from long, we go short. Then we ride down the short trend while locking in profits with this red trading stop. And eventually, this stop loss will then be triggered as well, and we're gonna go long again. And these signals, these are always alternating. From long, we go short, from short, we go long, and so forth and so forth. All right, so this is how SuperTrend works. And you probably can see right off the bat, just by looking at this chart, is that the quality of these signals, they really depend on the distance of the trading stop to price. And there's a sweet spot, because if this trading stop were too tight, we would get stopped out too early, like from a normal correction within a trend, for example. We don't want this. And if it's too wide, then we would give away too much profits when we actually get stopped out. So what is this sweet spot? How can we adjust this trading stop? Well, in the original version of SuperTrend, there are two parameters which you can use to adjust this trading stop. One is called the ATR period, and one is called the multiplier. And basically, both parameters, they do one thing, or they aim at one thing. First of all, they look at they try to determine what is the current volatility of the market. How many bars should we go back to figure out what is the current volatility? Because the idea is, and this was another influential idea of the SuperTrend indicator, the more volatile the market is, the bigger the candles are, the further away the stop loss should be. So that was built in. Now, these two parameters are used to control how many bars back we should examine, or the indicator should examine, to figure out the volatility. And once we know what the volatility is, we are going to use a multiplier to adjust how far the trading stop should be away based on the current volatility. So the ATR period and the multiplier parameter, I should say, are these two key parameters to adjust the stop loss. But, and you probably already got a bit lost when I said this right now, man, finding these parameters manually, especially finding the best parameters for the ATR period and the multiplier, that seems tedious and complicated. And you know what? When it comes to trading, anything tedious is not a good thing, because when the trader, or you or me perhaps, needs to manually adjust these parameters, you will not be able to focus on what really matters in trading, which is actually executing the final trading decision, making up your mind whether you should take the trade or perhaps stay on the sidelines. This is where you should spend your effort and energy on, not on tediously adjusting these parameters. So this was one problem. And the second problem was that how do we even know if the signals of SuperTrend are actually working well? How do we know whether they are profitable or they have the chance of being profitable? Well, back in the day, what we needed to do is to, manually analyze the signals from buy to sell, from sell to buy, and so forth, to see if overall these would have been potentially profitable. Yet another tedious task, which is also error prone. So we thought, there needs to be something better than this. There needs to be a way to address these problems so the trader doesn't have to do them. Well, introducing SuperTrend Bullseye, our brand new SuperTrend indicator, which does all this work for you. It will, first of all, find out what the best parameters are for the multiplier and the ATR period, so you don't have to do it. Find this automatically for you. And secondly, it will tell you directly on the chart, or in case of Metastock, directly in the expert commentary, how well the signals have been performing. So we're super happy that this indicator is now also available for Metastock. So it's been quite a great introduction when we first unveiled it, and it was very well received, I should say. And I'm super excited to present to you right now how this indicator works on Metastock. So without further ado, let's switch over to the Metastock platform. And by the way, guys, one more thing before I forget, if you have any questions, please, by all means, don't be shy. Put them into the questions box of your webinar tool, and Nicholas or Jeffrey, they're gonna look out for these questions and bring them to my attention as they see fit. So please don't hold back. Okay, now let me switch over to Metastock. Just gonna drag it in real quick. All right, there we go. So here we have a Metastock chart, and in fact, it's a chart that everybody knows. It's Tesla on the daily time frame. So the daily time frame of Tesla. And I went ahead and I have applied our SuperTrend bullseye indicator to this chart. And the first thing that you can see are the entry signals. They're quite easy to spot. These are either these big red arrows here to the downside, which is a sell entry signal, or this big green arrow to the upside, which is a buy entry signal. And you can see these signals, these are always alternating. So from sell, we're going to go to buy, to sell, to buy, to sell, to buy, and so forth. So this is how this indicator works. We are always alternating our position. Okay, great. The second thing, and which is just as important that you can see, is the stop loss. Knowing where your stop loss is, especially when you first enter this position, is absolutely crucial for any type of trade that you're taking. Why? Well, this goes back to risk management. You must be able to calculate how much could I possibly lose on this trade. And with this information, you can then adjust your position size. Yeah, because whatever you do in trading, you need to make sure that you always stay within your risk tolerance. Let's say we're taking this long trade here, this long entry trade. Okay, we're going to enter at this level here. Our stop loss is all the way down here. With this two pieces of information, our entry price and our stop loss price, we can calculate our position size so that if we get stopped out, we will not lose more than our risk tolerance tells us. So super crucial to have this stop loss. And as you can see here, this is a true trading stop. So it's always tightened. So for a buy signal, this stop loss only goes up. And for a sell signal, this stop loss only goes down. All right, now, for most of you, perhaps this is already old news. You have seen the SuperTrend indicator before, and you're gonna say now, hey, Daniel, what's the new stuff? Where is this new stuff? All right, guys, let me show you where this innovative stuff comes in. So for this, I'm gonna open up the expert commentary of Metastock. So right click on your chart, you're gonna go to Expert Advisor, and you will go to Commentary here. All right, this will open up a sub panel. Most of the time below the price chart, depending on how you configure Metastock, or sometimes also on the left-hand side. So in this case, we can see our expert commentary here. And the first thing that this expert commentary is going to tell you is that, hey, we are on Tesla on the daily time frame. We can also see that currently we are in a long position as far as this indicator is concerned. Our entry price back in the day was at 260. You can see it here. This was at 260. And currently our stop loss is at 352. So had we taken this trade, we would have locked in already quite a bit of money because our stop loss is way above our entry price already for this long position. All right, that's good. But now let's go to the exciting part. Let's have a look at the settings used. All right, this is where it gets interesting. You see these two parameters here, the multiplier and the ATR period. They have two values, 3 and 100. Now, these are not the default values of SuperTrend. They're a bit different. No, these values have been automatically chosen by the indicator as deemed to be the best ones for this particular symbol and time frame. But how does the indicator know what the best ones are? Well, this is where the second part comes in, the performance, because the indicator has chosen these two parameters so that the performance is ideal. We can see it here in this case, the profit factor for this particular symbol and time frame is 1.72. And this was possible by choosing the best parameters, which happen to be 3 and 100. All right. We can also see that our win rate here, 35% for the long side and 50% to the short side. Then you may say, that doesn't sound very good. Only 35% wins for the long side. That doesn't sound too good. Well, at first glance, maybe not. But this goes back to the very nature of SuperTrend. SuperTrend is an indicator which rides the trend as far as possible. And as such, winners tend to be much, much bigger than losers. So even with a relatively small win rate of 35% in one direction and perhaps 50% to the other direction, we can still be very profitable. And a profit factor of 1.72, that's quite good. So anything above 1 is deemed to be profitable. 1.5 and above is deemed to be very profitable. So that's pretty good. And this was possible because SuperTrend is riding these trends very nicely. All right. Now, so this is cool, but guess what? Whenever we change symbol or whenever we change time frame, the indicator does a complete recalculation of everything in the re-optimization. So let me demo this to you. So let's say I'm going to switch over from the daily time frame of Tesla to the 5-minute time frame. Let's observe what happens to our settings here and to our win rates and profit factor. Okay, so I'm going to switch over from the daily to the 5-minute. It's recalculating. You can see it here. After a couple of seconds, the new signals are on our chart. And if I scroll down now here, we can see that our new best settings for the 5-minute time frame of Tesla are 4.0 for the multiplier and 80 for the ATR period. Our win rate has changed too. 80% to the long side were winners and 33% to the short side were winners. And our profit factor, a whopping 4.68 in this case. So you can see with this kind of information, it makes it very easy for you to find the symbol and time frame where the indicator works best, because you get this instant feedback. Imagine having to do this all manually, almost impossible, way too tedious. Okay, so this was Tesla on the 5-minute time frame. Let's change it up. Let's go to another very popular stock, Microsoft. So I'm going to switch over here, and once again, we're going to stay with the daily time frame. All right, so we have it here. Once again, we see our SuperTrend bullseye indicator applied to the chart. And if we scroll down, we can see Microsoft right now is in a short trend here. If we scroll down here, the best settings used are 6 and 20 for the period, and our profit factor at 4.12. We have pretty good win rates. All right, so same thing for Microsoft. And the beauty is whenever you apply the indicator to a new chart, it will re-optimize itself. It will find the best settings automatically for you. Another example, Google. All right, another super popular stock. Here we are currently in a long trade. You can see it here. We held onto it. You can see how well the stop loss was chosen so that we didn't get stopped out at this particular point here. We're still in this long trade. And if we scroll down here, in this case, 4.5 and 20 were used as the best parameters, with a win rate of 57% and 28% to the short side. Profit factor 1.43. So this brings up another important point. As a trader, we are always interested in trading when the odds are in our favor and perhaps staying on the sidelines when the odds are not. So let's have a look at this particular win rate percentage here. 57% of our long signals have worked out nicely. Only 28% of the short signals worked out. So how could we use this information as traders? Well, a very easy and straightforward conclusion would be we will only trade the long signals of SuperTrend and we're going to ignore the short ones. Why? Because the long signals, we can see it right here, are working out better than the short signals. I think it's a very logical conclusion. And now with these performance statistics displayed to you directly in the expert commentary, you now have hard evidence of when you should perhaps trade and when you should perhaps stay on the sidelines. All right, one more example, Bitcoin. Wow, Bitcoin. I don't know if you guys have heard, I bet you, most of you have heard, Bitcoin made an historical high recently, last week, I believe. You can see it here. This is the 5-minute chart, by the way. 5-minute Bitcoin, we went all the way up to 103,400, and I think even a bit higher. Let me just go back a little bit. No, I guess that was the highest. Okay, so around more than 100,000, but then of course, and this was very predictable, we have seen some retracement in Bitcoin. I believe many people have booked profits after this huge rise up. We don't see more price action here, but this was a huge move up, and then, you know, Bitcoin has been consolidating ever since. But even when Bitcoin is consolidating, especially on the lower time frames, there are plenty of trading opportunities, because Bitcoin is so volatile that even a consolidation has some nice trending moves. You can see it here to the downside, to the upside, and so forth. So 5-minute Bitcoin, if we scroll down to our information here, 3.0 and 20 for the best parameters. In fact, you as traders, you don't even need to know these values. I'm just telling you, just showing this to you to give you some evidence that the indicator will find the best parameters automatically for you. But in fact, knowing what these best ones are, it's actually not so important. What's more important is our profit factor, 1.91, and this is just for Bitcoin, the 5-minute chart, with an almost equal win rate between long trades and short trades. And if you look at the latest price action here, let me just make this a bit, actually, let me hide the expert commentary real quick, just for 1 second. All right, make this a little bit bigger. We can see we would have had some 2 very nice trades here. One long trade, Bitcoin, which rode up the trend quite nicely. And now, since then, we are in a short trade as per SuperTrend bullseye with Bitcoin. All right, and we're still on this short trade. Okay, and one more example, and we're going to go back to the slides, the S&P 500. So here we have the ES contract, the S&P 500 E-mini futures, and once again, we have SuperTrend bullseye applied to this chart. And I should also say this is the 10-minute chart. And if I open up back my expert commentary, just one more time, we can see that also for this particular symbol and time frame, we do have a great profit factor, but look at, once again, the big skew between long trades and short trades. So 60% of all long signals have been successful and only 27% of the short signals. And once again, this is key information to you guys to decide, okay, should I take action on a short signal or perhaps not? Or should I take action on the long signal or perhaps not? I guess in this case, it is quite clear what you should do and which signals have been working out better. All right, now with this, let me see if there are any questions. Nicholas or Jeffrey, do we have any questions at this point?
Daniel, we have a question from Serge, and he wanted to know, how do you make sure that you're not overfitting?
Yeah, great question, and we get this question all the time. Now, overfitting means that, you know, we fitted these signals so they give us perfect performance on historical data, but perhaps not so good on them moving forward to the future data. And it's a concern. Any sort of optimization has this this drawback. But one thing that makes us very confident that we're not overfitting is that we are only looking back around 1,000 bars on average. So this can be customized by the user setting, but we're only going back 1,000 bars. So overfitting or curve fitting really becomes an issue if you look back for like 10,000, 20,000 bars, because then you can really find the ideal curve, which would have worked perfectly across those bars, but would not work moving forward. We don't do this. We restrict ourselves to a limited data set of signals. And of course, we've also traded our own signals quite a lot. We've taken our trades of the day, which I presented in MetaStock here many, many times, and they tend to work out quite, at least to us, when we book them, quite nicely. So we have some anecdotal evidence from our own trading. We have evidence from our traders who give us great feedback. And of course, we believe that the way we optimize is not so prone to curve fitting.
Thanks, Daniel. And one more question from Gerald. He wanted to know why not a separate profit factor for the long side and short side. And I was thinking maybe this is a good time to also mention the trading style, trading
Absolutely.
direction.
So yes, great idea. And in fact, this is already somehow possible through the configuration options of SuperTrend Bullseye. And great segue. In fact, I'm going to go back to my slides because this is the next topic I would like to discuss. So heading back to my slides. So what did we see so far? Well, first of all, we have seen key features of SuperTrend Bullseye. We have seen the auto optimization feature, which will find the best parameters automatically for you. That's great. We've also seen the performance statistics, which will show you directly in the expert commentary how well or perhaps how poorly the indicator has been performing. Key input to you to make an informed trading decision. But there are additional features, which I didn't show yet. We have built in 2 reversal modes to our indicator. One is called on close and the other one on touch. Let me quickly show you what that means. And you can choose which mode the indicator should use in the settings. So real quick, so back to Metastock, and let me find you, I think I saw a really good example of this for our original Tesla example. Let me just go back to the daily, and I apologize for jumping around, but I believe I saw a very good example here. There, okay, yes. Look at this one here. Can you see that this candle, these 2 candles indeed, they are wicking below the trading stop. You can see it. It's a bit hard to see, but it is clearly below our trading stop. And you may say, why is that? Shouldn't we get reversed at this point? Because technically we have hit the trading stop. Yes, this would have been correct. And here's another example. This would have been correct if the trading mode, if the reversal policy would be set to on touch. Then the indicator would reverse exactly in this situation. But by default, our trading mode is set to be on close, which will only reverse if the candle closes below this trading stop. Wicking below it is not sufficient. But you as a trader, you can choose. This is a setting in the parameters of the indicator. All right. And then, and this is where the question or the answer to Jeffrey, I believe, comes in. You can also set the trading style. So in which direction would we like to trade? By default, SuperTrend Bullseye optimizes its settings for both the long and short direction, so that the entry signals for longs and shorts in combination are optimal. And this is about trading styles where you don't have a bias into which trading direction you would like to trade. But you can change this. You can change the settings so that the indicator will be long only. Perhaps you're trading stocks and you only want to trade stocks to the long side. There are many good reasons for this because stocks tend to have an upside bias. So you could configure the indicator to be long only, meaning it will optimize its settings or its parameters to get us the best possible long entry signals, and we'll ignore all the short ones because we would not trade short anyway. And the same thing can also be done for the short only one. And once we do long only, and this is now really the answer to the question, the profit factor will be displayed only for the long trades. So I hope this answers this. Nicholas, any other questions that we can answer right now? And if not, I'm going to move on.
Daniel, we had a question from James. He just wanted to know if lots of traders use this indicator, do you think it'll skew performance of the market? And I said, no, it's going to be a drop in the ocean.
Yeah. Well, I don't know how many big institutional whales are using our indicators. You never know. But no, I believe this would not be one of these self-fulfilling prophecy indicators where everybody's following the same direction and then it will, basically be in charge of its own fate of some sort. No, let me say this again. No, I don't think it will be the case.
Perfect. And from Gerald, wanted to know, can this be automated in Metastock or any other platform?
Yes, you can use, for example, the scanner in Metastock to find automatically the symbols which have entry signals. You can also run back tests in Metastock using the system tests that are built in to get more information about the performance data of SuperTrend Bullseye. And if you are on platforms like Wave or NinjaTrader, you can fully automate this within the trading system. And in fact, we've done this many times and showcased how this can be done in our weekly trading sessions. So I'm going to talk about these in just a few minutes.
Perfect, Daniel, go ahead. That's all the questions.
All right. Okay, so let's move on because there's still 2 more super exciting topics to come. So the next question that we should ask ourselves is, how can we find symbols which currently have setups? And the answer to this is, of course, we are Metastock. Let's use the Metastock scanner or explorer. And I see this every single time I come onto the Metastock event. One of my favorite features of Metastock is the powerfulness, or is how powerful the scanner of Metastock is. It allows you to scan through literally thousands or tens of thousands of symbols within minutes and to see which ones of these symbols currently have setups or entry signals. So it is really powerful, and we're going to leverage this feature right now. And in fact, to show you guys how powerful it is, it allows us to run what is called a Generation 3 scan. So what do we mean by this? Let me explain. So Generation 1 is your plain old scanning. You basically scan through a set of symbols to see which ones have, let's say, buy and sell signals. It stops there. We have no intel as to how profitable or what the performance of these signals were, nor did we use any specialized parameters on a per symbol basis. That's Generation 1. Generation 2 takes this one level further. In Gen 2 scanning, we will see directly in the scan results how profitable these signals have been historically speaking. This is the key feature because oftentimes you get a real host of hits. We can't go through all of these. I guess you could, but it would be tedious again. By seeing what is the win rate and what is the profit factor associated with these signals, you can then rank your signals from best to not so bad, not so good. So a huge time saver. But there's one more level, Generation 3 scanning. Does all of this what we had in Generation 2, but it will use optimized parameters on a per symbol basis. Meaning, for example, for Tesla, it will use the optimized parameters for Tesla. For IBM, it will use different parameters. For NVIDIA, it will use different parameters. For other symbols, it will use the best parameters for that particular symbol. So it will do an instant optimization on a per symbol basis. Wow, that may seem super complicated, but in fact, with Metastock, it is super straightforward. So let's check it out right now. So back to Metastock. There we go. And I'm going to open up the Power Console right here. And the scanner in Metastock is called the Explorer. So this is this tab here. I'm going to click on it. And once clicked on it, and once you have our SuperTrend Bullseye indicator, you will get 2 predefined explorations. And the first one is of interest right now, which is called the SuperTrend Bullseye, STBE, Buy Sell Scanner, which basically scans for symbols which currently have buy or sell signals using the Generation 3 scanning approach. Okay, so you're going to select this one. And the second thing you're going to do is you're going to select through which symbols would you like to scan. So in this case, let's take all of the S&P 500s, 600s, 400s, mid caps, and 100s, our NASDAQ 100, and perhaps the Dow. Okay, so I selected all these lists of symbols, and then I can click Start. I'm not going to run the scan right now because it takes about 8 minutes to finish. We don't want to waste 8 minutes right now. Let's just look at the report. So I'm going to go here, right click, and open up Report. And this will open up a new tab right here. There we go. And we can see, I hope that's the right one. Yes, that seems good. All right, that's the report here. And we can see our scan results. We can see 23 symbols currently have either a buy entry signal or a sell entry signal. And for example, we can see the ones which have a buy entry signal by sorting this buy column here. And we can see, well, in this case, only 4 signals have buy entries, and the whole much more currently have sell entries. But let's focus on the buy ones, just to keep it simple. So these 4 symbols here have currently buy entry signals. Okay, that's great. But now how do we now find, let's imagine these were like, I don't know, 20 symbols that have signals right now. How can we find the ones which currently have the best performing signals? Well, for this, we're going to move over a little bit here to this column here, profit factor. And I sorted them already by profit factor. You can see the best one of these four is indeed the first one here, with a profit factor of 5.45. Second best, this one down here, 2.59, and this one 2.19, and this one 2.05. You can see this makes it very easy to focus on the symbol which has the best possibility or probability. So this one here. So let's open it up. I'm gonna here open it up on my chart. All right, I click on it, and with any luck, it's gonna open up on our MetaStock chart, boot.k, boot barn hold. And indeed, we can see, if I make this a little bit bigger here, that this symbol indeed did have a buy entry signal on the last completed bar. And we can see it right here. Perfect, so that scan worked out. And if we look down here, we can see that the profit factor, 5.46, is indeed the same profit factor as shown for us in the scan results. And honestly, just by looking at this chart, this could have been this is in fact is a very interesting trade idea. Look at how nice this uptrend is defined. It's a fairly young symbol, but it's in a nice uptrend. And we currently had a correction. You can see it here, this sell entry signal, which in fact did not work out too great. And now this has been replaced by a buy entry signal. And if you go down here, we can see that even the win rate for our buy entry signals is very optimistic. It's confirming that if you wanted to take this trade, this could perhaps be a good idea. It's at 100%, meaning every single buy signal was positive, resulted in a positive trade in our look back period. So yeah, this could have been, or this definitely is an interesting trade idea. So perhaps keep an eye on this one to see how this one pans out in the near future. All right, so this is how you can scan for entry signals. But there's one more thing. So I know I talk a lot, and we're going to get to questions very soon, but there's one more really important thing I need to show you, because then everything will come together. So one more time, for the last time, back to my slides. So we've seen how we can scan for entry signals. Now, one more question. Let's optimize SuperTrend Bullseye. You may now scratch your head. Oh boy, how can I possibly optimize an auto-optimizing indicator? Isn't that a contradiction of some sort? Does it even make sense? Well, as it turns out, yes. There are a few more things that you can do to even further improve the performance. So let's see what these things are. So one thing you can do is you can tweak. We're not going to get into this today. We have a whole boot camp dedicated to this topic, but you can tweak how exhaustive or how, I guess, loose or fast the optimizer operates, meaning how many combinations of parameters should be tested. So this is one thing we could do. You can also adjust your trading style to match your desired trade direction. So, and this ties back to the question we had earlier. What if I only wanted to trade long? Shouldn't I configure SuperTrend Bullseye to optimize its parameters only for the long entry signals? And the answer is absolutely yes, we should do this. We're going to do this in a second. I'll show you how this works. So yes, and one more thing you can do is you can combine SuperTrend Bullseye with another indicator of ours, which is called Trend Radar. So Trend Radar is an indicator which looks like this one here. It's like this green and red heat map displayed directly under your price chart. It's a great indicator for seeing at a glance what is my short-term trend doing, my medium-term trend, and my long-term trend. You can see these rows here. Each of these rows presents one particular trend. If the color is green, it means it's an uptrend. And if it's reddish, it means it's a downtrend. And for example, one thing that this indicator is really, really good at is to find what we call healthy pullbacks within a longer term trend. So let's look at the symbol here. Clearly, this is an uptrend. But if you're a trend trader, and we talked about trend trading today, not every trend entry is equally good. Timing matters. And as a trend trader, you want to enter into a trend trade when there is what we call a healthy pullback. When price drops a little bit, gets a bit cheaper, then you want to enter on a dip, on this correction. You don't want to enter up here where everything is overextended, you want to enter on a dip. And this indicator allows you very nicely to see when these dips are happening and when these the continuation is happening after a dip. See these little red patches here? These are these little corrections within an overarching long trend. A great opportunity to enter into a long trade. Okay, but now why do I even say this right now? Well, because we are going to combine Trend Radar with our Super Trend indicator. So this is the idea that we have. Super Trend Bullseye will determine the overall trend direction, long or short, depending on what the current signal of Trend Radar is. And then we're going to use Trend Radar to find healthy pullbacks within that trend to get an even better entry price. And we're going to use the scanner, the Metastock scanner, to find exactly these combinations. So a healthy pullback combined with a directional entry by Super Trend Bullseye. All right, now sounds complicated, but once again with Metastock, it's actually very, very easy. So one more time, I'm going to go back to Metastock. And the first thing I'm going to do is because, let's make it one assumption. Let's assume we only want to trade in the long direction. Now, the stock market has been going up a lot. All the indexes are overextended and are bullish. So let's keep the bullish outlook. Let's trade long only. So for this, I'm going to configure, first off, our Super Trend Bullseye indicator. There are settings for this to only look for long entry signals and to only optimize for long entry signals. And in Metastock, every platform is a bit different, but in Metastock, the way to do it is to simply go to the settings and enter a number 1 here as trading style. You can see this one here. So 1 means long only. That's the only change I'm going to do. There are other settings which you can tweak, and we have documentation for this, but that's the only change I'm going to do right now. So I'm going to say, okay, all right, that's done. Great. I'm going to close this up. And now I'm going to go to our scanner. Okay, so back to our Power Console here. And in this case, we are going to run a different scan. And in this case, in fact, we're going to run this scan live. I'm not going to show you the predefined results. Let's do this live. All right, so I'm going to deselect our SuperTrend buy sell scan, and instead, I will use this scan here, SuperTrend Bullseye Trades, which will show you directly in the scan results whether SuperTrend Bullseye is currently long or short and what the profit factor is overall. So that's we're going to choose this one, and then we're going to choose this one here, Trend Radar Level 4 Pullback. So what does this mean? That's a scan which will show us all the symbols which are currently in a 4-level correction. It's a quick example of this on my slides here. Look at this one here. This here would be a level 4 correction. See this little patch here? 4 levels down, 1, 2, 3, 4. This is a level 4 correction. So we are overall bullish, but we dove down 4 levels as part of this correction. So we're looking for kind of these scenarios, these deeper corrections. Okay, so I selected this one. All right, I'm gonna, remove a couple of symbols from our scan universe because I want to finish the scan in a minute or so. So we're only gonna scan through the S&P 500s, and I'm gonna configure Metastock so that the results of our pullback scan will be used as inputs to our SuperTrend Bullseye scan. So you can use this here. These are these 2 scans selected, and you're going to say use the results from the preceding exploration as input to the next one. Perfect. All right. So this is all done. I'm going to close down my other window. So this one should then start. I'm going to say start exploration. All right. So once clicked, I'm going to drag this window in here. Our scan now is starting, and hopefully this will not take more than a few seconds to complete. And while I'm waiting, Niklas, are there any questions which I can address at the
James? He wanted to know, can it be used on futures trading and Forex trading?
Yes, no doubt about this. In fact, we had some futures chart early on today on Metastock and FX charts as well, so no problem. Yeah.
Perfect. And we have also some symbol requests, but I guess we'll leave them to the end when we go to charts.
Yeah, that's right. Okay, perfect. So you can see this goes reasonably fast. And you may say, oh, this doesn't seem that fast. Well, there's one main reason for this. And I don't know why, but whenever I do screen sharing on my PC, everything seems to slow down. So this worked a little bit faster when I ran the scan prior to this webinar. As you can see, we're almost there. We're already halfway through. So this should be done within the next couple of seconds. Perfect. And one more thing is, you know, I mentioned this before, but the scanner of Metastock is, I believe, the most powerful scanner in the market. And it is what we use all the time to find key setups of interest to us, especially since you can mix and match your scans. You can use the results of one scan as input to the next one and so forth. So this gives you a lot of flexibility to find exactly what you are looking for. All right, so we are almost done, 430 out of 503. So bear with me just for a couple of more seconds. All right, almost. And you'll see now that this will give us probably a few results. And these results will now be fed into the second scan. So here we have, how many results did we have? 62 results. And these are now input to our next scan. So this is running now. You can see it here. We're almost there. And then we're going to see which of these have currently a level 4 pullback in the long direction. All right, so almost there. And this is completing now. And there we go. Perfect. Our scan is complete. And I'm going to select the second one here. And now let's see, what do we see? Okay, so first of all, one thing that you can see right off the bat is that every single symbol here is currently in a long trade. There are no short trades. Why? Because we configured our SuperTrend bullseye indicator to scan for long only. Perfect. And you will see also now in a second that every single one here is currently in a level 4 pullback, exactly what we're looking for as per trend radar. So let's open up, let's go through these ones here. Abbott Labs, profit factor of 1.3, perhaps not so good. Armo Intel Group, 3.24 profit factor, all right, not bad. And this one here, Arch Capital Group, profit factor 6.4. So let's open up this one. So we're gonna go here and open this up on the price chart. Give me 1 second. Let's have a look what the symbol looks like. And then I'm going to explain to you right afterwards how you can take advantage of our great SuperTrend bullseye indicator. Let me just quickly apply a template. There we go, which also has trend radar on it. Of course, this can be set by default. This one here. Okay, apply. And once applied, you will see that actually you're going to see a couple of things. So the first thing you're going to see is that as soon as this loads, we can see trend radar down here, and we can see SuperTrend bullseye on the chart. Perfect. All right, we can see that also this symbol, Arch Capital, is currently long, but it is experiencing a pullback. Great. And if you count down the rows here of trend radar, for a level 4 pullback, 1, 2, 3, 4. So this is a level 4 pullback. And I really like these kind of trades because, you know, our stop loss now is fairly nearby. We do have a great win rate for our long trades, 100%. All of our long trades have been working out. So great win rates. So if we are right, and this will become a winning trade, we're going to see some upside actions moving forwards. And now we can place our stop very nearby, giving us a great reward to risk ratio. So to me, these are prime trades. Of course, they're risky with tight stop loss, but if you are right, you might, you know, be in for a very big winner as compared to your risk on the table. This is exactly why I have picked this trade as my trade of the day. So Arch Capital, long entry around 96. You can see it here. Why? Because SuperTrend bullseye is long. There's a great win rate and profit factor for all long trades. The overall trend direction of this symbol is also bullish. So it's going up in, you know, over time. And this gives us a great reward to risk ratio because our anticipation is, hey, this trend is going to continue in the upside direction. And trend radar shows us a healthy pullback, level 4 pullback, while the long-term trend direction is still green. So if we are right, yeah, this can be a great trade with a 6.5 reward to risk ratio. Stop loss just below this candle here at 94 at the SuperTrend trading stop, and our target at 109, just below the all-time high here. There might be some resistance as we go to the absolute all-time high. So just below this one at 109, your profit target, giving you a great reward to risk ratio of 6.5. All right, Now, quickly, and I know I talk so much, who are these indicators for? Like SuperTrend, Bullseye, and Trend Radar. Well, it doesn't matter whether you're a day trader, a scalper, a swing trader, or investor, you can use these indicators because they will work on all time frames and chart types. No questions asked. Also, it doesn't matter what you trade, whether you trade stocks or FX or futures or cryptos, it doesn't matter. These indicators will work on all asset classes and symbols. Of course, they work great on Metastock, but we also have these indicators on other platforms. MT4, NinjaTrader, TradingView, TOS, Model Wave, and so forth. So they exist for other platforms as well. And if you are a little bit like me, like an engineer, and you believe that tools can make your life easier, and good trading tools can make your trading life easier, then these indicators are absolutely for you because they will do most of the heavy lifting for you. And it saves you a lot of time so that you as a trader can focus on what really matters, making an informed trading decision. All right, now let me quickly explain to you how you can get a hold of these two indicators because we have prepared something really special for you. Celebrating the arrival of SuperTrend Bullseye at Metastock, we decided to put a special bundle offer together. And Nicholas or Jeffrey, please put this link into the chat box if you can. This goes to the Metastock page, tradingindicators.com/597. Why 597? Let me explain. Typically, SuperTrend Bullseye alone is sold for $797. This is for life, of course, no problem. And this includes the SuperTrend Bullseye indicator, the auto optimization feature, and the performance statistics that you get with it. And of course, for life. That's the typical price. But as a special offer for you guys today, we decided to throw in, first of all, a couple of bonuses. And bonus number one is an exclusive invitation to our members only trading sessions, which happen every Tuesday, like tomorrow at 12 p.m. Eastern. It's an exclusive community. There's a price normally associated with it, but you will get this complimentary if you come on board today. Bonus number two is we are going to throw in for life as well our Trend Radar indicator. And bonus number three is you're going to get an ebook on how to trade with the Trend Radar indicator called Mastering Trends with Patterns. But there's one more thing. To celebrate the arrival of SuperTrend Bullseye at Metastock, we're going to slash down this price to be only $597. This also explains this URL here, tradingindicators.com/597 to take advantage of this very special offer. All right, before we get to some charts, if there's time, two quick words is one thing about our members sessions every Tuesday at 12 p.m. The next one is tomorrow at 12. In those sessions, we are going to show you tips and tricks. You can ask questions. We're going to analyze the markets. And it's a really nice community where all our traders are coming together to exchange ideas and, I guess, to learn from one another. You will also get access to our Discord channel, by the way, as well. So that's included. And of course, Trend Radar, this heat map-like indicator directly underneath your price chart, is also included in this special offer that we have prepared for you today. So guys, think about it, tradingindicators.com/597. All right, Niklas, do we have some symbol requests perhaps? In my last 2 minutes.
Yeah, Daniel, we have IBM and NVIDIA.
Okay, let's have a look. So let me go back to quickly to Metastock, if I can find it. There we go, let me minimize this. Okay, IBM. Okay, so back to my Power Console here. I believe IBM is just IBM. All right, as the symbol, open chart, and I believe it's a daily time frame. So let me just open this one up. Okay, so here we have IBM on, come on. Oh, there we go. Okay, so this is just SuperTrend Bullseye, but let me quickly load our template on it, which also has Trend Radar. This is 1 second. Okay, there we go. Of course, these templates and all these explorations and system tests, they will come with the package as well. So don't worry about creating them yourself. All of these will come automatically. Okay, perfect. So What do we see here? Yeah, we have quite a few long and short entry signals, but as of late, let's focus on the latest price action. Yeah, clearly, and IBM seems to be in an uptrend. You can see trend radar is predominantly green, but there are opportunities along the way. See these patches here? These are healthy pullbacks before the trend resumes. This is exactly what we're looking for. So, and if these coincides, for example, with a SuperTrend bullseye entry signal, this gives you some extra confirmation. Or vice versa. Look at this short entry signal here. It came within this big green patch. Maybe there's a reason why this doesn't work out that nicely. So you can use trend radar here as well as a filter for your entry signals. If you go down to the win rates here, what do we have? We have 6.47 profit factor to the long side. And oh, by the way, this is configured now for long only. This is why you don't see anything for the short side here. So I can remember when I configured trend radar, it was configured for long only. And real quick, NVIDIA and Jeffrey, my apologies for going over a little bit. NVIDIA.O, I believe. 4-letter symbols always with .O at the end, I was told, and better stock. And let's just have a quick look here. What do we have? And I don't want to go over too much. Yeah, pretty much the same thing. Big move upwards. We had this correction here. SuperTrend bullseye did give you a short entry signal here, which didn't work out. But once again, perhaps not so surprising because our win rate, actually, in fact, we don't know it because it's long only. But more encouraging, we did have a long entry signal. It seems to me that perhaps NVIDIA now is on the verge of breaking out again above its all-time high. So yeah, but once again, an interesting symbol, and SuperTrend bullseye works on this symbol as well. All right, now real quick, just to wrap up, if you want to take advantage of this offer, tradingindicators.com/597. It's really a super special, which we have put together. And if there was a question, I know I talk a lot, that I've overlooked that Nicholas couldn't bring to my attention, you can always reach out to me and to us via our homepage, tradingindicators.com. Go to the main menu, click on the contact item. This opens up a form, put your question there, and this question will go straight to my inbox, and I'd be happy to get back to you as soon as possible. All right, Jeffrey, I think I'm pretty much done here. I know my time is up. Would you like to take over?
Yeah, all good. You did such a great job. Hey, I just love the comment you have on the scanner every time you come in.
Yeah, I mean, it is really an amazing feature of Metastock. Yeah.
Oh, awesome, for sure. And you certainly, with the technology you've done with the automatic optimization, really even takes it to the next level. So great job.
Thanks, guys. Enjoy the rest of your conference. Bye, Jeffrey.
Bye. All right. Thank you, Daniel. Appreciate it. All right. Let me go ahead and turn on this. And we'll go ahead and do this. And this. All right. Daniel did a really good job about talking about that. $797, $597 for the introductory offer. That includes the trend radar, the weekly lunch and learn sessions. The includes a 30-day money-back guarantee. If you don't have it, you want to get a free trial to Metastock, you can do that. I'd recommend the extended trial where you buy a month, you get the second and third month for free. So bunch of ways to do that. If you want, you can go to metastock.com/summit deal. You can scan the QR code with your phone. You can call 800-882-3040 or go to metastock.com/saleschat. So there you go. It is part of the Traders Action Pack where you can get all of the add-ons that we've talked about today. And we just finished all of them. So there's TST Trender, the Victory Method, Daniel Sinnig's SuperTrend Bullseye, Price Headley's Big Trend Toolkit, JBXC Complete, a training that we did with Oscar Carboni. He's going to come in and talk a lot about the markets. He does a great job, but he did some training called identifying trend lines and patterns. It was a chart markup class. He did a great job with it. And then you'll also get 3 months of Learn Metastock for free with that, or included with that price. And then in addition to that, you'll get Unleash the Power of Metastock at no additional cost. So the total value for that is $6,884 at the summit, at the Trader Summit today. You can get all of that for $2,792, huge discount. 800-882-3040, metastock.com/SalesTrend. So take advantage of it. It's a great offer. As we transition to the next speaker, I do want to say thank you to our sponsors, Stocks and Commodities Magazine. I remember, it's been 13 or 14 years now, but they've supported us since day one. I remember calling them up and talking to them about this new event we were going to start running. Was one of the first, and they've supported it all the time, ever since the first one. If you're watching on YouTube and you haven't registered for today's event, you need to do this today, but you can get a free issue of Stocks and Commodities, and all of the presenters have given away something for free, like a free ebook or maybe a free month of their service or something along those lines. You can sign up for anything of interest to you or all of the offers. It won't cost you anything except for a little bit of time while you go to metastock.com/traders-summit and just fill out the registration form and sign up for it. So there you go. All right. We are Metastock. Metastock's been rated the best software in its price category for 31 years in a row. I'm going to talk a little bit more, or a lot more, about this right now, actually, but it'll allow you to scan markets. It'll allow you to test trading ideas, forecast probable price movements, get real-time alerts, commentary, signals. It starts at $75 a month, and you can get a buy one, get two free, where if you sign up for a month, you get the second and third month for free. You can do that at metastock.com/summit deal, or here, metastock.com/traders-summit. So in any case, Greg, before we go to the next slide, I'm feeling kind of like in a holiday spirit right now. I think we should give away some more books.
Stuff away.
Yeah, I think we did it the same way we did it earlier, and it's going to be the same prize. We've got, they're great books, and we have quite a few of them. We're going to give away Steve Bigelow's Candlestick Profits, Eliminating Emotions.
Great book.
We're going to give his. Have you got a copy of these, Greg?
I have at my desk in Utah. I have a lot of that stuff, but in my office, I do not.
Okay. High Profit Candlestick Patterns. You can get that as well. And then also we'll throw in this handy mouse pad.
I love that mouse pad. That is also on my desk in Utah. Yes.
this one's a little dirty. I'm going to send you a clean one though. So let's do it the same way we did it last time, Greg.
All right.
I'm going to show all the answered questions. I'm going to start at the bottom though this time, just to kind of have a little bit more fun with it and go up. So let's do that. Okay. I'm going to look at Corey, our programmer, right here. We're going to make some uncomfortable contact.
Stop.
And now I'm going to start.
Oh, okay.
All right. Tell me when to stop.
Stop.
Okay. This one was from Michael. He asked a question during Vince's presentation. Hey, Mr. Voracious, does the scanner adjust for lower time frames? And because of that question, he just won 2 books and a mouse pad. So there you go. All right, Greg, that's all.
I appreciate. I can use all the holiday spirit I can get. Like I mentioned before, it's 84 degrees outside, so
yeah,
it's not very Christmas.
Does it make you feel less? Because I know you're used to probably a little bit chillier weather than that, right?
I grew up in Las Vegas, but also I lived for 30 years in Utah, so I do enjoy a nice white Christmas.
All right, very cool. Well, thank you for the assist. I appreciate it.
You're welcome. I'm always here for you. And break a leg on your presentation.
Oh, will do. All right, very cool. If you have any questions as we go through, let me know. We may or may not give away more books. It depends. Anyway, today I'm going to talk next. Before I do so, today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information provided in connection with this presentation should be construed as investment advice or the solicitation to buy a security. So hope you enjoyed that. Well, before I forget, I actually want to start. Want to copy that email address for Michael off into my into my clipboard, so I remembered to fulfill a prize to him. In any case, let me introduce myself. My name, I've been here obviously all day. My name's Jeff Gibby, and I've been working at Metastock. Gosh, I think like it's a number of years now. I think it's 23, 24. To be honest, if I want to know an exact number, I go and check on LinkedIn. So, that's usually the only time I'm actually up on LinkedIn anyway. But I do want to, let's see, a couple things. So when I started here, I started in inside sales. And so if you had questions about trading, I knew nothing about the market too. I came in very, very green. But if you had questions about kind of how we could help you with your trading, or kind of if you're looking to improve your trading, if you think there is something you do, there's a good chance you might be calling me back then. This was several years ago. I think I started in '97. So I did that for a number of years. It's a lot of fun. I've talked to thousands and thousands and thousands of traders, and I think it goes without saying, with me knowing nothing, I learned a lot. I learned what a stock was, what a future was, what technical analysis was, and that was a great journey for me. I enjoyed it. It was fun to talk to traders. I enjoyed talking to traders. And after that, I moved over into kind of what is our BD, what they call our BD team. And right now, my actual title is the director of sales. But I do a lot of things here. But as part of the BD, I've worked with a lot of the partners that we've had present today, worked with some really, really smart people, and I've learned a lot in this role too. It's been a great place to work. It's been a great opportunity. One of the things, and I love it. So it's been it's one of the reasons I've stuck around. It's like a lot, it's a very supportive environment. The software is great. It really helps people with their trades. I use it for my own trading. And one of the things I'm actually super like about our company, so to speak, is the people. And one of the things that we like to brag about, aside from like the 31-year history, is a lot of times if you call support, you're going to talk to somebody right here in our office. It's not an outsourced support. You're going to get an answer. And they track the survey responses for people that come back into support. And it's not uncommon for us to get like 100% satisfaction ratings out of those. So they do a really good job. We keep more people in our support desk than we keep in sales and marketing put together. They just do a really, really good job. Same with the sales team. They're very, very good at understanding the products, talking to people about how they can be beneficial. They're very knowledgeable. Anyway, so there you go. Hopefully you've read this slide, because I'm not going to. Metastock has been around since 1982. I'm going to talk a lot about different trading methodologies today, how they work. I'm going to get my YouTube chat visible so I can see if you have questions for YouTube. Couple of things before we start. Again, I'm very, very proud of Metastock. I love the fact that it's been rated #1. And it's not like 1 year, 2 year, or 5 years. It's 31 years straight this year, and hopefully 32 years next year. We'll see. But best software in its price category, and it's been rated for so long. Very, very, very cool award to win. Today, I'm going to talk about this. We're going to talk about the importance of trading with a plan, understanding trading plans. I'm going to basically kind of teach a lot about kind of an indicator called MACD. You've probably heard of it. You may be familiar with it. You may not be familiar with it. We're going to go through how it's constructed and really kind of some of the most common uses of MACD. MACD was developed by Gerald Appel. We're going to kind of compare it to other systems by doing some system tests. I'm going to show you how system test works in Metastock. And then we'll talk a lot about scanning too, which Daniel just said is the best software, or we do the best job of actually doing scanning. So my goal here is I hope you learned something. I spend a lot of time actually kind of going through kind of just talking about MACD and kind of explaining how it works and kind of how you can use it and the uses. And, hopefully that'll be beneficial for you. My other goal is, with the software, we've talked about a lot about how it's been rated #1 for 30 years in a row, 31 years in a row. What we're going to do, or what we're doing as an offer today is like, if you just pay $75, you can get an extended trial where you're using Metastock for 3 months, which breaks down to about $25 a month. my goal is that you'll actually give it a go, because for me, I run scans twice a day usually. Probably I'm going to miss market close today, so I'm not going to do twice today, but just give it a go. If it's something that is of interest to you, there is a reason it's been rated the #1 software in its program for 31 years in a row. So let's get going. As we go, every time I look in this direction, I'm looking to see if you're asking questions. So if you have questions, make sure you ask them. Might even get rewarded with a prize later on, who knows, in any case. This is Richard Dennis. If you're not familiar with Richard Dennis was called Prince of the Pit. And I don't have like the whole biography of him, but he was pretty impressive. He's a very, very famous futures traders back in the days, and I think the days would be like the 70s or 80s. I should have looked. But he, if you don't know the backstory of him, it's actually pretty cool. He was Richard Dennis was a friend with Bill Eckert, who was also another famous futures pit trader back in the day. And they were both very, very successful. They're friends. Richard said, I bet we could teach people how to trade. And Bill Eckert said, I bet we couldn't. I think there's a lot of genetics that are involved. So they did a test where they kind of got a bunch of traders together. They ran some advertisements. I think a bunch, just to qualify that, I believe the number is 18. I could be wrong on that just because I haven't looked just now. There's a great Wikipedia on it. If you just do Richard Dennis on Wikipedia, it'll tell you the whole story. But they brought in a bunch of traders, and long story short, basically what they did is they taught them the trading methodology. They trained them exactly how to use, and they ended up running probably the most successful trading experiment in trading history. And one of the things that kind of came out of this is the quote, this quote that's on the screen. You've probably read 4 times by now, but it says, I always say you could publish the rules, my rules, in a newspaper and nobody would follow them. The key to trading is consistency and discipline. So, and I think that's important. I have a question for you guys though, and I do want you to kind of answer. What do you think is the best profession for trading? And I've given some answers here, just based on a lot of the answers that we've gotten, or that I've gotten from doing live classes over the years. What do you think is the best profession for trading? Is it A, a teacher or an educator? Is it B, an engineer or an architect? C, is it a psychologist or a psychiatrist? D, is it a pilot? Or E, a performer? F, an artist or a musician? I think this is an interesting question, so I'm going to give you some time to actually kind of say what you think it is. And I'm going to think of all the people that I kind of know over the years that kind of fit any of these categories. If I want to talk a little bit about psychologist or psychiatrist, you remember Jake was in here a few years ago, a few sessions ago. He was the session before the last one. He actually started as a psychologist. Another person that I know that's psychologist would be Dr. Alexander Elder. In terms of pilot, there's a gentleman by the name of Chuck Hughes. He does a really, really good job. He's got a methodology that's put into Metastock. Also, Greg Morris, a good friend of Metastock, always comes in. He's retired now, but he always comes in, and we take him to lunch when he's in town. He comes in, he likes Park City, Utah. He is also a pilot. He was a literal Top Gun. So what do you think is the answer? We're getting a couple answers. Neil says pilot. And maybe I kind of gave away the answer already. Penny also says pilot. And the answer actually is pilot. And I think it comes back to this quote. Maybe I gave it away with this quote, discipline. With a pilot, they're very, very disciplined in their approach to trading. They have a background where when they go to take off, they have an exact checklist. When they go to land, they have an exact checklist. They're very, very disciplined about the approach that they use. So yeah, absolutely, it's pilot. So let's go ahead and kind of talk a little bit about the MACD. One of the things that I find that helps me kind of with discipline personally is a trading plan. I always know exactly where I'm going to buy a stock, why I'm going to buy a stock, and where I'm going to pull the plug if it gets out, if it goes against me, where I'm going to pull the plug if it goes up. I have a particular trading plan. And, really when it comes to trading indicators and that kind of stuff, a lot of them like MACD are designed to kind of help you understand what the market is doing. And they can be used to help construct that business plan. I like to talk about business plan because I think it's important. If you've ever started a business, I'm sure that before you kind of invested money into it, you kind of created a business plan. You kind of decided on what you wanted to do for your business, what your product was going to be. Probably did some work into kind of determining what your overhead and margins, operating costs, and all that kind of stuff was going to be. And I think that's important when you're doing a business. What surprises me is with trading, it's a lot more simple. You can actually go in and kind of create a trading plan. Metastock has a bunch of them, a couple hundred that you can kind of use. But you can also kind of go in and kind of evaluate, well, how did this methodology work if it was a bull market or a bear market and that kind of stuff. So the reason I kind of want to talk about MACD and explain it to you, and I'm going to do so in a bit of detail, is I think it's important to understand how these indicators work. And I think when you understand how the indicators work, you more understand objectively kind of how what their blind spots might be, why they work, when they work. And I think just that knowledge is going to help you understand and be more disciplined and take those stop losses when you need to. And so let's go ahead and get started. MACD was developed by Gerald Appel over 40 years ago. Gerald Appel wrote 17 books on investments and 5 books on photography. I bet Greg didn't know that. He published a newsletter that he wrote for over 46 years. Systems and Forecasts was the name of that newsletter. So Gerald Appel, obviously, if you've ever heard of MACD, he's the original creator of it. There's been some people that have kind of used it, kind of created some additional things with them. But Gerald Appel is basically the person that created it. There's some advantages of MACD. It's objective. It's pretty easy to interpret, and it helps traders trade in the overall trend. So I call these advantages of MACD. Objective, I also like to refer to when I talk about technical analysis in general. The reason that all of the experts today can put buy signals on a chart is not because they're typing them in, because they're looking for a set of circumstances to occur. Whether that has to do with momentum or trend or a combination of those things, overbought, oversold, volume, they're all going to be objective if they're putting an actual signal on a chart. Okay, the MACD is really easy to interpret, and it's going to help you understand what the overall trend is. Okay, some disadvantages: when you go sideways, MACD can be prone to whipsaw. It's also what they consider a lagging indicator. So let's kind of talk a little bit about how it's calculated. So in any case, the MACD is calculated by subtracting the value of a 0.075 exponential moving average from a 0.15 moving averages. These numbers do not line up with whole numbers, but the closest would be a 26 and a 12. So let's go ahead. I'm just going to open up my Metastock. I'm not sure what chart I'm looking at. Oh, this is Amazon. I was actually making this chart for Melissa Armo. She needed me to send her a chart real quick. I was like, sure. Let's go ahead and use Amazon. So I'm going to go ahead and take those moving averages here. I'll just type in moving average here. And I just want a normal moving average. We're going to grab it. With Metastock, all I had to do, this is an indicator quick list. If I click on it, it's going to list all of the indicators. I can quickly now find the one that I want just by typing in the indicator quick list. And when I want to apply it to a chart, I'm just going to drag it. I'm going to drop it on the chart. What I want to do is I want to do a 12 period exponential moving average based on the close. Okay, and then I'm going to actually go back into this. I want to make it a little bit more bold so you can see it better on the chart. I'm going to double click on it, go into color and style, and I'm going to weight that and just fatten it up so you can see it. I think you can agree that that's more visible. Okay, I'm also going to do the 12 period exponential moving average. So we'll go ahead and do that. 12, I'm going to take a look at the time. I'm actually going a little slow. Okay, we've got the 12 period exponential moving average. I'm going to make that a little bit different color. We'll make it blue, and I'm going to fatten that one up too so we can see it on the chart. Oh, looks like one of them is the 12. I actually already did the 12. So let me go back in here, and I'll just make this red one the 26. And if you make a mistake, welcome to my world. I'm just going to go ahead and double click on the chart, click OK. And now I've got both moving averages on the chart. Just made a slight change to it. Okay. I'm also going to do the MACD since we're going to be talking about that. The MACD that I like to use in Metastock is called the MACD with histogram. All right, let's throw this on the chart. Okay. We'll go ahead and click OK. All right. This one doesn't have the histogram on it. That's okay. There is one that's called the MACD histogram, and I'm not sure. I just didn't find it on the list. That's fine. I can come in here. I'm going to actually make this, the color of this, a little bit different and a little bit more visible for you. You can see it's pretty easy to kind of manipulate here. Oh, there we go. Okay. Now, just to kind of talk to you about how this is calculated, right now what we're talking about is primarily the purple line. If I was to take the value of this 12-period exponential moving average and subtract it from the red, 26 longer term moving average, the difference between those two moving averages would be the value plotted here. So if I take this value minus this value, I'm going to get a value that's close to. Remember, he used 0.75 and 0.15. They're not exactly the same, but it's going to be pretty close, 26 to 12. Okay. So right now, I can tell you that we're looking at two moving averages. I also want to kind of back up because I don't think it's in this slide, but MACD is a trend and a momentum indicator. And so the fact that we're looking at the difference between two moving averages is going to help us understand kind of what's going on. So if Amazon is going up in price, as you can kind of see here, the difference between, and you can see here too, the difference between the shorter term moving average, the blue line, and the red line is going to be bigger. Okay, so when that happens, right here, you're going to have a bigger MACD. Okay, here we have a bit of a bigger MACD as well. If we're in an area where there isn't a lot of trading, MACD is going to have a more shallow value, as you can see right here. The difference between your moving averages is less. And the same thing, if we can find a little bit of where Amazon went down, if we're kind of trending down in the market, your MACD is going to drop down below zero. And the faster that it's trending down, the more below zero it's going to get. So by understanding kind of the calculation of just the MACD line, forget about the signal line for now, just by talking about the difference, the MACD, and understanding how that's calculated, you can kind of see it's going to kind of help you understand where you're at and how the market is trending. Because you're comparing the two moving averages, the faster it's going up, the bigger your MACD is. Well, that's a way to help understand kind of the momentum under the market. And that's why MACD is a trend indicator, but it's also helpful in identifying momentum as well. Okay, let's go ahead and kind of zoom back in here a little bit, just to kind of get a little bit of a narrower view. Okay. And there you go. If you have questions on MACD, let me know. I'll keep looking over here just to make sure we don't. So let's talk a little bit about this other line that's on the chart. This one right here. This dotted histogram, this dotted line, it's not really half the histogram, is what Gerald Appel called the signal line. Okay. And what I'm going to do here is I'm just going to kind of make that a little thicker so you can see it. I've put it in blue, which is the default. I'm going to just make it bigger so you can see it a little clearer. This is the MACD signal line. The reason that Gerald Appel called it the signal line is you can use it as a signal to go long or short. Okay. The calculation of the MACD signal line is simply a 9-period exponential moving average of the purple line. So what you're looking at is just the moving average of this. Okay. Now, the way that you read it, the reason it's called a signal line is when the MACD starts trading above its signal line, it enters a bullish phase. Okay. When that happens, you can use that as a buy signal. That is a MACD buy signal. Okay. And what I'm going to do to kind of help illustrate kind of when the stock is bullish or bearish is I'm going to apply an expert advisor. In Metastock, we call it an expert advisor. We've been showing them all day. They have the commentary and all that kind of stuff. But what I'm going to do is I'm just going to come in here to the expert advisor. I'm going to go to MACD and just apply MACD by Metastock. I'll go ahead and click attach here. I'll go ahead and click on close. And I'm going to go ahead and just move this trend ribbon down a little bit because I like it better down there. Okay. So you see right here, with the MACD crossed up above its signal line, it generated a buy signal on the chart. If we're following the MACD, that would be a signal we could take. Okay. And this is, again, objective because I know if I bought here, I know exactly why. We were just crossing up above our signal line. The MACD turned bullish, okay? I also like it because I know if I bought right here because I got a MACD buy signal, I know that I'm currently profitable, okay? If I would have sold here when the MACD went down below its signal line, entered a bearish phase, I wouldn't have been profitable there. But because I'm looking at an objective method, I can see where all of these buy signals came in. This one was pretty good. This one wasn't. I can see exactly kind of how MACD performs on Amazon or other stocks and kind of see how it is a benchmark. So the first way you can kind of use MACD is to determine whether it's bullish or above its signal line or bearish, and then you can use it as a way to look at momentum. Is that clear? Any questions so far? Okay. Before I go on, actually, I'm going to switch this to the MACD histogram chart real quick, just so I can talk about what the histogram is. So let me just apply the MACD histogram template. That'll give me the indicator that I actually want to use. It's actually black, so that's interesting. Now, I will point out that the moving averages have gone away, but just imagine those are still on there. I could add them back to the chart if I want to, but we are looking at a black chart. So we're talking about the purple line. That would be this yellow line now, just based on the color of the template. The signal line is yellow. This right here is called the MACD histogram. Okay, the MACD histogram very simply is if I took the signal line and subtracted it from the actual MACD, that would give us the difference or the histogram. That's all it is. So you can use that if you cross up above your histogram. Obviously, your value is going to go from being negative to being positive. That tells you when the crosses happen. And it's also going to help you understand kind of where momentum is looking at in the chart. But it's already just, that's what's called the MACD histogram. So there you go. Okay. So we've talked about kind of how all of the lines are actually calculated. We've talked about the first of 3 different methods that you can use to look at the MACD. The next one I want to talk about is momentum. Okay, and overbought, oversold conditions. So we talked about how you can use it to identify the changes between the shifts between bullishness and bearishness on a chart. Now you can also use it as a reversion to the mean type of an indicator. And whenever you use reversion to the means, you're looking to see if something's overbought and oversold, because when it is, there's a tendency, or there can be a tendency, for stocks to kind of revert to the mean. Not always, and that's important. I always think that if you're going to use overbought, oversold indicators, you could use them to kind of tighten up your stops. You could use them in conjunction with some other indicators to verify. But if you've ever seen a really raging bull market, those markets can stay bullish for much longer than you can stay solvent. And so if something's moving up really, really fast, I'd wait for it to hesitate before you kind of decide to kind of go in an opposite direction of the trend. It's the same old adage that everybody uses, the trend is your friend, right? So we are actually entering right now. You can see right here how the bar is highlighted blue. Based on the calculations of Metastock, it's indicating right now that we're actually overbought, okay? Yes, overbought. I was trying to, sometimes I mess up the words in my head, overbought versus oversold. You can see where that happened before. Here, the stock was overbought. It reached MACD reached a peak. It started to head down. That started to paint this out, and there was a bit of a pullback. But you want to be careful with that. So here we got into an oversold area, and that was at a point where the market started to recruit. So if I come to the expert advisor, I actually think, I didn't word this, but the person that worded it, I think said it in a very, very good way. So let me go ahead and kind of show you the expert advisor here. And the thing I like about the expert advisor is it does help you understand the signals. So right now I opened up this expert advisor. There's a little arrow that goes right above this chart that just tells us this is the day that we're looking at. And it's going to say the MACD is currently bullish, okay, because it's trading above its signal line. That's where we got the buy signal back here 6 bars ago. Since then, it's gone up about 7% and has ranged from this to this, okay? Right now, the MACD is in an overbought range. It's telling us that by highlighting it. Prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. Again, once things start to move in a trend direction, you can trade with overbought, oversold conditions, but you want to For me, if something looks like it's starting to get overbought or oversold, I might get a little bit more protective about it. I generally will try, as a personal preference, to trade in conjunction with the overall trend. So that's the second of 3 different ways you can use the MACD as an overbought, oversold indicator. The third one I want to talk about is divergence. And one of the things you can see right here is it's also looking for divergence on the chart. But divergence is one thing. A good friend of mine, a gentleman by the name of Alexander Elder, you're probably familiar with it. If not, he wrote some really good books. Come Into My Trading Room is definitely, I think, required reading. I'm blanking on this other name, on the other book of his that I've read. He's also written some other books I just learned about, but he's a very, very good author. One of the things that he said, a very, very good trader too, I actually mentioned him a little bit earlier, but one of the things that he's said to me, talking about divergence, is, and he says this in a lot of the events that we do together when we have him in here, but he called MACD divergence the most powerful signal in all of technical analysis. So let me identify how this powerful signal can kind of be identified and located on a chart and what it is exactly. So no questions. If you have questions, let me know. Maybe it's too basic, but in any case, hopefully not. Okay. If I want to look at MACD divergence the way Alexander Elder teaches, he'll look at it from the histogram, and he wants some very specific things to happen. He wants it to cross down. If we're looking for divergence looking at the peaks, he wants it to cross down to 0 and make another peak. So this is actually a good example of that. I'm going to grab my trend line right here. Here we had a peak. That peak was a little bit lower, so I'm going to use this one. I'm going to go to this peak right here. Okay. And I'd say there's a bit of a slight uptrend. Not a huge uptrend right there, but I'd say the value of this is this peak is a little bit higher than the value of this peak. So and I think that's objective. I think you'd all agree with me. Okay. If I want to look at where price actually peaked during the same time, let me go ahead and kind of just draw it here. We've got a peak right here, and we've got a peak up here. Okay. So these lines are kind of pointing in the same direction. They're both pointing upward. So you've got an upward slope on this one and an upward slope on this one. That's not a sign of divergence. Okay. That's convergent. It's not divergence. Now, if we got, and this happens frequently, there's actually, you can scan for this in Metastock, but if we had a new peak in price, but our MACD divergence was pointed down, basically like, okay, so here we came up to a price, MACD set a peak up here, price came back down, set a peak up here. That MACD was not supported with a new high. In other words, the high was back here, this high is down here. It's called a bearish divergence. Okay, and that's what Dr. Alexander Elder calls the most powerful signal of all of technical analysis. It doesn't happen on Amazon. If we put this line back to where it should be, which is like right about there, but my goal is to kind of help you understand how to use it. Okay, if it was here, or if Metastock sees divergence, it'll say that there's been a divergence pattern. It hasn't seen divergence in the last 5 periods. So there you go. All right. So let's just kind of recap a little bit. I'm going to go back to my PowerPoint. We talked about how MACD was calculated. We talked about how the signal line can get buy and sells. It also gives an indication of whether a stock is bullish or bearish. The MACD histogram, this line underneath, was developed by Thomas Asprey. And there you go. So we talked about trend identification, how to determine if it's overbought, oversold, et cetera, et cetera, et cetera. So I'm just using this to kind of catch up to kind of where we're at. So there we go. All right, here's the exact quote from Dr. Elder. I forgot I put this in here. In his book, The New Trading for, hold on. Little error correction on the fly here. In his book, The New Trading for a Living, Alexander Elder states divergences are the most powerful signals in technical analysis. There you go. That's the exact quote. So anyway, a couple of takeaways from that, because I hope that was helpful for you. If you use MACD, I hope you understand what it kind of does. The reason I like technical analysis is because everything that we did, everything I talked about there, I would argue is objective. In other words, if you understand the rules for MACD, how it's calculated, why you're getting buy and sell signals, you can come to the same conclusions about why a buy and sell signal exists on a chart. Okay, and if we take a look at this chart, I'm gonna go ahead and close the commentary window. Because it's objective, I can understand, okay, well, if we bought here and we're still long, is that a good trade for us? Yeah, absolutely. We did this a little bit before, right? If I sold here short and went long here, that was break even at best, but it probably lost us money, right? If we bought here and sold here, this is all objective. Because it's objective, we can actually say, well, how well does this work on Amazon? How well, and we could go in, I'm not going to do it here, but we could go in and take every single buy signal and say, how well has the MACD indicator performed on Amazon? And if it's great, that's going to help us understand kind of maybe how the performance does. It's going to help us with our discipline. But the other thing we can do is say, okay, well, MACD is one of a few hundred indicators in Metastock. How does it compare to maybe like some of the other methodologies? How does it compare to kind of some of the other things that we can use? And because it's objective, we can actually ask that question. And to ask that question, we use system testing. So let me kind of jump into that. I'm going to go ahead and open up what we call our Power Console in Metastock. And we call it the Power Console because that's what we called it when we named it. And we've talked a lot about we worked a lot with the charting. We've talked a lot about scanning. I'm going to jump down here to the system tester. We're just going to run a system test. So let me see if I have not made a list of favorites. Usually what I'll do is I'll go build a lot of add-ons come with system tests. You can create your own system tests. But I'd like to kind of, when I go in and demo it, show systems that actually are available that you can test right out of the box when you start your trial. Later today, maybe. So let me go to all system tests here. All of these ACT systems, these were developed by John Ehlers. They're included in the program. I'm going to select them all. The Bollinger Bands, expert system is included. These Big Trend toolkits are not part of Metastock. They're part of the Big Trend toolkit. We could test those. But I want to make sure that you're getting, that we're just going to test some of the ones that are included. I've got a few of those here. I know there's a large selection that were put together by Robert Gedman. They're called performance systems, so I'm going to grab those. I'm just going to search for PS. I'm just going to grab the whole list of them. Actually, these Ichimokis are part of 922, so we'll grab those too. There are other systems that are not going to be included. Just because there's a couple hundred. For the purpose of just showing you how this works, I've selected 96. I'm happy with that number. So we're going to go ahead and do that. And we're going to go ahead, we're going to define a universe. Now, I'm going to, just for the purpose of testing, I'm going to do Amazon because that's what we were looking at, right? Let's see. If you have symbols you want me to throw in here, throw them in there. Let's do, trying to think of, let's see. NVIDIA, NVDA.o. Let's do, it doesn't matter. I've got J&J up. Lululemon has come up a few times today. Let's go ahead and throw that. And what I'm going to do is I'm going to take all of these 96 systems. I'm going to test them against these 4 stocks. That's all. Okay. I'm going to go back. And what I'm going to do is instead of going back, you can go back to the 1980s if you're testing on dailies. But that takes a little bit more time. I'm going to limit it to about 250 records. That's about a year of trading days. So we're going to go ahead and do that. I'm going to use a daily time frame. You can change that if you want right there. And what I'm going to say is every time it gets a buy signal, I'm going to give it specific instructions on what to do during the simulation. So I'm going to have it start with 100,000. I could have it trade a number of units. I'm going to actually change this to % of available equity. I'm going to have a trade, let's say 25%. So we're going to be really conservative here. We're going to see 75% of our trading account not invested at all times. Okay. In terms of broker, I'm going to leave it at 0 commissions. For trade execution, what I'm going to do is I'm going to say use realistic market prices. And what that's going to do, I'm going to go ahead and explain what it does while I start the system test, just so it'll be ready when I'm ready. But what that means is basically for realistic market prices, is since we might get the MACD, it's almost done anyway, signal at the end of the day, it's going to wait till the beginning of the day the next day. And since it's going to wait till the beginning of the bar, it's going to wait till the bar closes. It's going to make sure that that MACD buy signal or whatever signal is generating that shows up. It stays through the close. Since the bar is closed, it buys at the open. That's what we call realistic. Okay, I've got a report done. Okay, so again, just to recap what we did, we took 96 methodologies and we tested them against like 4 or 5 random stocks that I just pulled out of the air. All right. Here's kind of what it tells us, okay? We had talked a lot about Bollinger Bands, but this basically, because we did a basket, my basket was 5 stocks. You could do the S&P 500, you could do the optional stocks, you could do the NASDAQ, you could do whatever basket that you want, but this is going to give us our average trade profit. It went back to the beginning of, well, 250 bars ago. It took every buy signal, every sell signal, and what it's looking to do is kind of just tell us how well it worked. So if we kind of look here, I've sorted it by average net profit. So these indicators here outperform these indicators over here on my basket. So if we have a negative basket based on those 5 stocks, it's probably not going to work well for those 5 stocks. For the 5 stocks that we randomly picked, we've got kind of average numbers, because remember, it's a basket that we're looking at, not just one stock. So our best system was actually one of John Eller's. It was based on the adaptive exponential moving average. It made about 11% last year on average on those 5 stocks, with the best profit being 20,736, the worst profit being 2,400, and traded at an average of 11 times. The wins versus losses, on average, it had 5 wins for every 6.8 losses it had. But its average profit versus average loss. So every time it lost $1, it got about $3.61, which is why you can have a negative loss. The next system hardly traded at all. It was the Stark Band system. It traded 1 time. So on average, okay. Our next best system was the linear regression, and then you have the fractal. The turtle trader breakout system. Oh, I talked a little bit about those earlier. You've got the mother of all moving averages, the father of all moving averages. And all of those, you actually have average trades, average profit, average losses, etc. So I'm actually going to look at, just because I know the fractal system better than the adaptive EMA, I'm going to say it traded about 7 times, had on average about 10% profit. The adaptive EMA actually outperformed it. But we had a better profit-loss ratio here. Well, actually, no, we didn't. We had a better win-loss ratio. Let's go ahead and just take a look at it, because what I want you to kind of understand is how you should use this as a tool to help you understand what works. And then you can use that as a shortcut to bypass to learn about the indicators that you're trading and the indicators that work. Never bypass your trading. I think it's important to do good training and understand why you're trading. So if I click into this is a fractal trading system. It worked best on NVIDIA. NVIDIA had a crazy year last year. One of my favorite stocks most of the year last year. But you've got NVIDIA. Over the course of the year, it made about 29%, traded about 7 times. After that, you've got Lululemon, Amazon, Johnson & Johnson. It didn't perform well for. So NVIDIA is probably our best performer here. If I want to kind of take a bit of a closer look, I just looked at my watch. We're not going to go very close, but if I'm kind of looking at a methodology, I'd want to understand some specific things. So I'm going to go ahead and plot this on the chart, but I'm also going to view it, okay? And if I come in here, I can see exactly what my performance looked like, what that was annualized, how that compared to buy and hold, what my profitable trades are, what my unprofitable trades were, our maximum loss, our maximum gains, all kinds of different stuff. There's all kinds of stuff in here that you can look at. If you don't understand what they mean, Metastock has a help file. It used to be like 600 pages long. There's so much information on how different indicators work. A lot of times, if I have a question about an indicator, I'm getting ready for a class on the money flow index. And I used the Metastock manual to help me get it ready. So very, very cool in terms of kind of all the stuff that's in here. But this breaks down kind of all of the different indicators or the different numbers on this chart. We can take a look at the equity curve and kind of see how that performed over the course of the last year, all that kind of stuff. I've already plotted on the chart, so that opened up NVIDIA. And what I want to do is just kind of jump back to that expert advisor. So you got a buy signal here, you had a sell signal here, had a buy that didn't make money here, you had a buy signal here, an exit here. Kind of get an idea just looking at where this performance is coming from when we're long and short. If I want to understand how the fractal system works, this is the fractal system number 2. If I want a better understanding of how that works, I can attach the matching expert, just like we did with MACD. I'm gonna go ahead and go to the expert advisor. I'm gonna go to fractal. And I love all the search that they've started adding because it makes it so easy to navigate this thing. I'm gonna go ahead and click on attach. I'm gonna click on OK. Now, every time we're long, it's gonna be green. If we're short or out of a trade, it'll be green or red, but it's color coded. And now if I want to understand what's in there, I go to View, Expert Commentary. I'm going to jump back to our buy signal. I got to get it out of locked mode. So here we had a buy signal, okay, right here. I think we should kind of zoom in a little bit on where I'm at so you can just see what I'm talking about earlier. Right here we had a buy signal based on the fractal system number 2. Because of that, it's going to tell us to enter long with a market on close order or on or at the market price on the open tomorrow. And then it's going to explain what a fractal is. So the fractal was developed by Bill Williams. Okay, this is minor version of the type defined by Williams and his chaos back. According to Bill Williams, the up fractal is defined as a middle bar with 2 lower highs. Boom, 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 boom. The sound effects are free. So that's an up fractal. A down fractal would be exactly the opposite. You'd have a down bar followed by 2 lower downs. Okay, this system is based on a small fraction of Bill Williams' complete trading system, which is a profittunity system. He actually has that built into Metastock as well. This system enters a long position when the price cost is up above the most recent fractal, and will exit the position by crossing the second most recent fractal back. No short positions for Bill Williams fractal system. So with this, we kind of tested this on NVIDIA. It was the best, well, on the stocks that I randomly picked, it was one of the top performing systems. We were able to go in and easily understand what's going on with the system, understand who wrote it, really kind of get a knowledge about how it works. And that's something that you can do very, very easily with Metastock. In fact, Metastock's a huge toolbox. If you wanted to kind of add that fractal methodology and test some other things with it, you could. All the code's open. It's got a formula language, just a ton of power that you can do. And of course, if you find something that you really like, let's say you like the fractal trading system, you can go scan for it. I'm looking at my time. I think we do have. So if I wanted to go find opportunities that exist based on the Bill Williams fractal trading system, we're going to come in here. And of course, what I'm going to do is the scan. So come in here and we've got a few because we've been running scans all day. We have quite a few explorations that are in here. We're just going to do the fractal. And that was number 2. So we're going to go, oh, wait a minute. Hold on, I want to unselect all of the explorations. I had a couple selected. So you saw the MFI divergence. That's for the class that I'm getting ready for. All right. So we're going to go ahead and look for a signal for trading system number 2. I'm going to go ahead and highlight it. I just got the same. The NASDAQ 100, the S&P 500, the NASDAQ. That's what we've got selected. Go ahead and scan for that. We'll see how long. It's not going to take very long. It's over here. Again, what we're going through here is we're filtering out, and we're just looking at the ones that meet our criteria. So hopefully that's helpful for you. Really what I wanted to highlight is how Metastock can help you understand what works in the market, what makes it work, what indicators comprise of that, and help you find opportunities. And I think those tools are core to the reasons Metastock's been rated the best software in its price category for 31 years in a row. Here we've got out of 500 and some of the stocks we rejected 493. There's 10 we can look at. It does a really, really good job of breaking that up. helping us understand. So again, Metastock's been rated #1 31 years in a row. Again, when we set out, I wanted to just kind of give you an idea of how it worked. One of my big goals was to get you trying it. I use Metastock, particularly the scanner, every single day the market's open. Most often I do it twice a day. So for me, I just wouldn't, you could go look at 530 stocks. You could if you wanted to. For me, the ability to kind of go through and just eliminate the noise and focus on what stocks are moving, what stocks have a pattern, what stocks are kind of hitting the criteria. So let's talk a little bit about pricing for Metastock. There's 2 versions of Metastock. We've got Metastock Real Time, which we call Metastock RT, and we've got Metastock DC, which stands for daily charts. Our Metastock RT is $265 a month. It includes, actually, I thought I had it on the side. It includes data. It also includes a program that's very, very, very similar to, if you're familiar with Bloomberg, very similar to that. If you're not, Bloomberg's a product that costs like $1,800 a month. It's powered by London Stock Exchange Group data and Reuters news. And it is literally a platform that if you're an institution or news and you want to market news and data is important to you, you probably have either the news product that I'm talking about or Bloomberg. It's a hedge fund new type quality product, and it's only $265, and that includes both of it. Okay, we do have our DC version. The DC version is only $75 a month. That'll give you end of day. It doesn't give you the real time during the market information. It doesn't include the news. It's only $75. Allows you to scan everything and kind of do everything that we kind of talked about today. So depending on the version that's right for you, even if you can do the 265 version, broken down over 3 months, that's going to be less than $100 a month. If you do the $75 version, that's going to be basically $25 a month. So for $25 a month, you're going to be running this through January, February, into March. And that's going to be your 90-day trial. If you buy 1 month, we'll give you 2 free months. That's going to include Metastock. It's going to include the data region of your choice. We're going to sit you down with one of our, what we call a white glove installation, where they're going to install everything for it. Well, I mean, they can either install it for you. It's pretty easy to install. I'd install it and just have them help you understand what the tools work. They'll walk you through it. They'll give you a really good tour. It's also going to include our Unleash the Power of Metastock, which is normally a $99 value. We're going to include it for free because we don't want you just to subscribe and then cancel in March. Most of our customers have been with us for decades. I think our average employee tenure here is like 13 years. I think our average customer tenure is way longer than that. Because if it's useful, you're going to want to subscribe to it. It's only $75, right? Or $265 if you're using the real-time version. If it helps you identify those better trades, it's not really the investment, it's more the return on the investment. And we want it to work well for you. We want you to be one of those people that are voting in the Stocks and Commodities Reader's Choice Awards every year about what your favorite software is. And we want it to be Metastock. So a couple of different ways you can do that. You can call us at 800-882-3040. You go to metastock.com/sales chat, and you can go to metastock.com/summit deal. So there you go. Did you learn something? I actually have an honest question for you. Well, that implies that all the other questions I have were dishonest, but I want to know, I'm curious. And if you'll let me know, you're not going to hurt my feelings. Was the class on MACD too basic? Was it too advanced, or was it just right? Let me know in the comments. Or if you're watching on YouTube, let me know in the chat. I'll watch it. So there you go. Okay. And I notice I've been saying there you go quite a bit today. I'm okay with that because it certainly beats my other go-to, which is So anyway, I do want to say thank you to Stocks and Commodities Magazine. They've been a sponsor of the Online Trader Summit for forever, ever since we started doing them, which I think was 13 or 14 years ago. Great magazine. 17,000 articles over the years, 1.3 million subscribers. They've been making the magazine since 1983. If you're watching on YouTube and you haven't registered for the summit yet, go to metastock.com/traders-summit. Fill out the registration form. Not only can you get a free Stocks and Commodities magazine, but all of the presenters today have free bonus offers that you can sign up for. Our next speaker, for example, has Live with Oscar. He's giving away a free month of that. You just have to check the little thing that says you want it, and that's all you need to do. So there you go, metastock.com/traders-summit. Thank you, Greg. I appreciate your sentiment that it was just right. All right. If you haven't yet, go to Metastock, or actually go to thetradersforum.com. You can join us. We talk about which lessons. We might be doing one tomorrow on the money flow index. So you can join. We do lessons on different technical indicators. If you have questions about Metastock, it's a great place to ask them. But not just Metastock. We do all kinds of different indicators. We do a lot of different candlestick-related patterns. There's a good group, a good community of people that like to share ideas in a live market chat. It was put together as a community of traders to help other traders. You can join at thetradersforum.com. We'd love to see you there. Everything that I just mentioned is totally free. Why not? Thetradersforum.com. So, of course, we're Metastock. I just talked ad nauseum about Metastock. I do want to kind of remind you about the Traders Action Pack, though. So we've got TST Trender, Vince Vora's Victory Method 2, Daniel Sinnig's SuperTrend Bullseye, Price Headley's Big Trend Toolkit, Jake Bernstein's JBXC Complete, Oscar Carboni's Trend Lines and Training, that Unleash the Power of Metastock that just kind of talked a little bit about, and 3 months of learnmetastock.com. So normally all of those would be $6,884, $2,792 to go ahead and get started. You can most of it has a money back guarantee with it, not the training and not the subscription, but everything else. 800-882-3040, metastock.com/saleschat. So there you go. All right. Okay, our next guest, and we're doing pretty good on time. Our next guest, Greg Lewis, has called, what was it? A force of nature. I was trying to remember the exact terminology that Greg called him. Very, very animated guest, used to work on the pit, has a great YouTube channel, very, very interesting, also a great student, teacher. We're 7 hours in, give me some space. But he does a really, really good job. He does like Omni camps where he'll bring people into Vegas, or he just did one in the UK, where he'll actually teach people kind of his Omni method for trading. Really, really does a great job. Been a long-time partner in Metastock. You can find out more. You can actually go to his room if you go to livewithoscar.com. So without further ado, Oscar, good morning, good afternoon. How are you doing?
Well, I'm doing great. Good morning, good afternoon, and good evening to you, Jeff. Thank you so much.
I'm sorry I stole your line right there.
Oh, that works great for me. Thank you for mentioning what we do here in our trading room and our camps. I appreciate that.
Of course. I can, let's see. I can confirm that I can see your screen and everything seems to be working well. I'll get out of the way.
Well, if I'm ready to go, thank you so much. Appreciate you, Jeff.
Oh,
right.
We appreciate you, Oscar.
The presentation was just fine, Jeff. You did a fine job. I understood everything you had to tell me. With that being said, good morning, good afternoon, good evening, traders from across the globe. Thank you for tuning in to Live with Oscar. And of course, the Metastock, you could call it a summit. I say it's a place where you learn a lot of great stuff about how to use charts from the presenters at Metastock. So I thank all of you, Scott, Lynn, Jeff, Kelly, everyone at Metastock. Thank you for having me. In fact, I just did what I call an Omni camp, which is me doing a 5-day course in London, and Metastock came to present for me. So thank you again, guys. I appreciate everything you do. All right, so traders, I don't know how many of you know me out there. My name is Oscar Carboni. I started in this business as an 18-year-old computer programmer before there were computers that were on any desktops back in 1982. Somehow I hit the trading floor to go visit a friend, and between what I knew about computing and what I seen on the floor, which were no computers, I thought this is the place for me to go. And I literally started with point and figure charts like these. This is literally a chart that I used to hold up in 1982. Point and figure, X's and O's with a pencil. This is gold. In fact, look at the price of gold. $265, $375. This is as real as it gets. But when I started, this was technical analysis. We didn't have computers, right? This is what you had to use. But I spent my whole life wanting to be a programmer, knowing one day computers would come out, got down to the trading floor, somehow got involved with analysis right off the bat, started to get really good with that, and then I used my computer savvy to get charts on computers. In fact, if you trade on a computer today, if you put orders in with the keyboard, if a chart comes up and you can put a trend line on it, if you see an indicator, I promise you, my signature is all over this stuff. I helped create it in the 80s. What I turned out to be by accident was a really good programmer who was a bang-up analyst and a professional floor trader, all in the same human, which you couldn't find in 1982. So with me getting into all of that stuff by 85, I was so entrenched, I was building programs. I literally helped revolutionize what we see today. I was part of the computer revolution when it hit the exchange, when we finally seen computers come out where people could have them on desktops, and we had this huge revolution, if you will. I was there for the entire revolution. I was there for the internet revolution. I'm now here for the AI revolution. And that brings me to the chart in front of you. What you may have seen if you recognize me in other webinars that I've presented for Metastock, excuse me, I showed a series of charts. I brought together a series of markets. And a couple of years ago, or let's say sometime in 23, I did a webinar for Metastock, and I said, I am going to give my fans a whole list of stocks that they should put in a portfolio called the AI Revolution stocks and ride them to the sunset. And in this webinar, I will go over those stocks because this is now the third or maybe fourth webinar that I am doing where I use every single one of these charts, the charts I asked you to put into a portfolio, get long and ride, 2 years ago or a year and a half ago when I put these out there. So we've done webinars since, and the beginning of this webinar will be us going over that portfolio of charts. Where are they now? Where are we going? Are we removing any of the stocks out of our portfolio? Are we adding any stocks to that portfolio? We'll go over all of that first. Then we'll take a look at some commodities. We'll look at crypto. The Omni, Oscar's Market Navigational Indicator, works on all asset classes. So we'll look at a bunch of asset classes together. I have a website. After, I'm going to basically give a lesson for the next hour. Let me just quickly do this because, Dana, who works with me, and everybody who works with me, they want to kill me because I don't advertise ever. I just don't advertise. So let me see if I can do that quickly before teaching you a decent lesson. This is a trading room. I am live in this trading room right now. It's live camera. I keep this on and I stay live in this room all the time, even during the live webinar. Our trading room is live. You have access to this trading room very easily. You will go to livewithoscar.com. Very simple. I'll put it on the screen for you later. Livewithoscar.com. You would literally register. It takes nothing. We don't require a credit card or anything at all. All you're simply going to do here is fill out some information, create a username, give us your email address, and literally what will happen next is you'll get an email and it will go into spam. I don't know why. That's just how the world works. If you get an email from my site, it'll go to spam, most likely. Go to spam, say it's not spam, check that email, and immediately what you'll find is you'll get to livewithoscar.com. You click Oscar's chat room and you will find me right here in that chat room. It is free to you. I am there offering lessons, offering help, showing charts every day of my life, because what this chat room is, I basically spent my life in a trading pit with 500 guys around me having fun all day. Then one day in 2006, they handed us all laptops and said, it's time to go home. All right, well, this is my crowd. It's still like hanging out in a trading pit. This is my crowd here. They gather from all over the world, and I invite you to join me. There's another thing that I offer here, and that is a 4-day boot camp. It's called Omni Camp. Oscar's Market Navigational Indicator. You can just simply go to omnibootcamp.com, and I'll try to put all of these on a page for you before I leave. And you can fill out an application. Again, we require no credit cards, no deposits, no anything of that nature. Fill out the application. I'll call you personally. We'll chat a little bit. Maybe you can be one of the lucky 5 people I invite to my home office for a 4-day extravaganza. I only take a handful of you. It's very limited. I turn down many, but I do approve some. If you'd like to join me in a 4-day extravaganza where I will teach you Oscar's Market Navigational Indicator, all of it, no exceptions, no upsells, you let me know. But that's not what this webinar is about. This webinar is about markets and charts. So I also offer recommendations, and I will talk about that later. I don't want to do that. I want to do this. Sorry, guys, I advertise as much as you're going to get from me. Now I'm going to work. That was to my crew. All right, so let's get ourselves ready for the new year. Let's see what's going on out there. So first, we're going to go over the AI Revolution charts, and then I'll take you down another chart road. We'll look at a bunch of good stuff together. So you are looking at NVIDIA. When I started these series of webinars back here, sometime in 23, Omni started to get interested in NVIDIA. I mentioned it to a bunch of traders, started putting it in videos, and here's what I told traders. Here's what you gotta like about NVIDIA. This is called the AI revolution. Welcome to the AI revolution, kids. This young industry will keep this market going up for 4 or 5 more years. How do I know that? Well, I was there when the computer revolution started. When computers finally came out and everybody could put them on their desktops, and it started to revolutionize Wall Street. It took about 7 years of an upward market. Nothing goes straight up, but we had a bull run for about 7 years when computers came out and hit the public. Then the internet came out in 1994, March of 94. How do I know this? Because by June of 94, I already had websites on the internet for helping traders around the world. Came out in 94. We had a 7-year bull run in 94. We got from 94 to 2001, straight up practically, a little bit of hiccups, big revolution, and then we finally had our pullback. Well, this is the AI revolution, kids. It was born in November of 2022 when it was released to the public. This is only 24. It's only December of 24. You've got 4 to 5 years of nothing goes straight up, but this AI revolution taking the markets higher. You were looking at NVIDIA, one of the first charts that we put into our AI portfolio. When we recognized that it was here, when we told you about it, it was at the first webinar, and we did a second webinar to tell you to hold on to NVIDIA. It looks great. And we did a third webinar to tell you it's at a bull flag. It's about to explode. It just bounced off the 200 ball moving average. Stay with it. It's a wonderful stock. And now we're doing another webinar today to see where it is. When we gave it to you, we were somewhere in the 66 area. It is trading in the 140 area now, and we will continue to hold on to NVIDIA. Nothing goes straight up. Don't ever expect any stock to go straight up. But you are in an AI revolution, kids. It is going to continue. I don't care what you hear from anyone on the street. I read charts. Everything is about charts. And I promise you that what the chart shows us is we're in an AI revolution. It looks just like the computer revolution in the 80s. It looks like well, I should call it not metaverse, but we didn't get that far in the 80s, in 2006. But it looks like the internet. We had that massive rally from 94 to 2001, and then we took off. Well, this looks exactly the same chart-wise to me. No different at all. It's a revolution just like the 2 priors. So NVIDIA remains in the portfolio, holding well, bouncing off averages. You gotta love it. Bull flag worked. NVIDIA stays in the portfolio. Next one we looked at was the AI play called AI.Q. It's the Global XAI Technology ETF. We liked it here. We did a webinar again here to tell you about it. We did another webinar somewhere down here, which I didn't mark, but we did it. And then we did another webinar to tell you to keep it in the portfolio. And today we're doing another. Now, one of the things that I learned many years ago, you want to learn something today? You want to see one of the greatest tricks you'll ever see? I learned many years ago that this market is built on geometry. And every algorithm written is built on geometry. How do I know that? Watch. Simple. Pair of eyes. You can do this. Anyone can do this. I'm going to teach you a simple, powerful trick. Look at this right here. Let me see if I can pull in a few more bars. Look at this trend line, goes from here to here, right? So let me make it bigger now because you see where it starts. Goes from one top to another. And watch what happens when I extend this trend line. It's all about market geometry. Watch this. I'm going to extend. I'm only from one high to another, and then I'm going to extend. What does it do? Catches all the highs here, catches the highs here, catches the high here. Now it's becoming the breakout. How does Wall Street know to do something here? How did they know to do something here? How did they know to do something here? How do they know it's breaking out there? Market geometry, kids. It's right before your eyes. All right. You don't think that you think maybe I'm making this up? Maybe it's a fluke? Well, look at the bottom of this. Same sort of thing. I went from a low at the bottom to another low. I'm going to simply extend this trend line. Watch this. Look at this. It goes, let me see if I grab a little tool. It went from here. It hit the low here. It hit the low here, and they exploded from it. How on earth would Wall Street know that? Because they program this stuff in the algorithms. I promise you, I can see this with my eyes closed. I can teach it to you with no trouble at all. Remember, I was here when we were point and figure. It doesn't matter where you go with the music notes that we wrote in the beginning with point and figure. You can bend them and flip them and turn them into algorithms. It's the same stuff we worked on as teenagers. I promise you, just looks more complicated. It is no different. All the techniques I used in here, all the formations, everything I used here, it's exactly what goes on right now, just that I've got them. I helped them get them onto computers where it's completely accurate, unlike this chart, which, God forbid, I ran to the restroom and I missed a bunch of X's and O's. My chart's not right when I go home. You know what I mean? There was no accuracy. This is beautiful. It's accurate. It's simple. So there's a little geometry for you. Wall Street seems to love the 200 bar moving average if you ever get to it on the AIQ stock. But it is all about geometry, and we like to continue holding AIQ.Q. It's doing fantastic since we mentioned it, told you we liked it here, get in here. It's done really well since. So keep that in your portfolio, and let's go look for another. Okay, we also brought to you the AI play called BOTZ, BOTZ.O. It's another AI ETF. We loved it down here. We told you to get in here. We told you to hold it. We told you to hold it again. These are webinars that we've done. So now we're doing another live webinar. And what I can say is it is breaking out. It looks fantastic. The trajectory is there, right? Look, this thing's going in the right direction. Up. That's what we want to see. Remember, when I started to show you all these stocks, the problem with AI stocks at the time is that there was only a couple and they were extremely expensive, extremely expensive. Well, some of them have split and others were very cheap, and that's why I brought them to you, because we didn't want to buy $1,000 stocks to enter into an AI revolution. We wanted to buy $30 stocks. So, you know what I mean? It's still working. We love it. We're going to keep AI. We're going to keep BOTZ in our AI portfolio. If you would note the last webinar, I left this note out. These are the exact same charts from the last webinar. We're just seeing how it's done. Look at how much respect. In fact, let's grab a tool. Look at how much respect was being paid by BOTZ at this average. Look at it, falls under, gets above, starts a revolution. Boom, boom, boom. Holds it. Holds it. Holds it. When it gets through, it's big. Right? So it paid a lot of respect to this average. And look, it's even getting away from that average. It is starting to go. The trajectory of these AI stocks look fantastic. Let's go look at the next. Next one was Buzz.K, and boy, is this one just going crazy. Oh, another geometry example. Check this out. Talk about geometry. I promise you that's how this stuff works. I've got a high to a high connected. I am simply going to extend this trend line. How on earth does Wall Street know? How do they know? How did they know? How do they know? geometry, kids. I promise I could teach this to you with my eyes closed. I've been doing this since I'm a kid. All right, so we like buzz.k right here. We started to tell you about it here in the 19 area. It's trading at 26 and we still love it. This is a very smart looking stock, by the way. We're really liking this ETF called buzz.k, but we like everything that's in this portfolio unless it's been removed. And we'll even look at the ones that we earlier removed from this list in other webinars. So buzz.k stays in the portfolio, looking fantastic. What else did I offer you cats when this whole revolution started? Oh yeah, the Franklin Intelligent Machines ETF. Now, this chart, I'll tell you right now, I don't like the way it looks daily. I would never want to day trade this. Look at all the gaps and it chokes around and it's nasty, but it is staying in sync with the AI revolution and we still love this stock. We would never day trade it, but we love this stock, and the entire stock's life has worked around the 25 bar simple moving average. The entire life of this stock, it has worked so far amazingly well. It's written in whatever algorithm they're using on this Franklin fund. I promise you, this is simpler than you think. Wall Street likes to complicate everything. You know, they throw the jargon out there, and there's the EBITDA, and there's the float, and there's this, and the inside is makes you go crazy. I promise you, all that information is right here on the chart without much thinking at all. A good pair of eyes and a little bit of knowledge, and you can be very good at trading markets, even if you don't know what you're trading. So this Franklin Intelligent Machines ETF looks fantastic. The 25 bar algorithm is working. This is the address for omnibootcamp.com, by the way. It turned out to be on this page, so I'll share it with you. If you'd like to join me in person for a 4-day extravaganza where I will absolutely teach you the Omni and then make you teach it back to me so I know you've learned it, go to omnibootcamp.com and fill out those applications. And we'll talk about what state it's going to be, what country it may be in, because I'm willing to travel. We'll see what happens. All right, so the IQM looks good, stays in the portfolio. Number 6 we're up to. This is the AI play called Loop, L-O-U-P.K, and another fantastic AI stock, if you will, or AI piece of the portfolio, piece of the AI portfolio. It's an ETF, the deep water. If I remember right, and don't quote me on this because I've studied so many stocks and I usually just use analysis, but if I remember right, these guys have underwater data centers for Bitcoin, for mining, for all kinds of stuff. So great company doing fantastic things. Look at the trajectory that took place. So if you look at where we were in this really, really big channel, and it was certainly moving sideways to up, right? But certainly more up than sideways. Look at the trajectory change once you broke out of the channel. Look at it now. Now it is just starting to run. Look at that trajectory. We love Loop. Keep it in the portfolio. What else did we share in our last webinar that we need to go over? Ah, yes. Some of these we did remove in our second webinar. We pulled out the ones that were non-performers. So this one, LRNZ, we liked it down here, right? We were here when we liked it and told you about it. In this webinar, we gave you a reason to get rid of it. Too many red arrows. We do not like it below the average. We do not like all the red arrows. There used to be lots of green arrows, green. Then they started to turn red. We don't like red arrows. We removed it from our portfolio on this webinar on this date right here. So that's when I asked you to please remove that one out of our AI portfolio. And you know what? It still ended up going higher. Look, of course, it did go lower, right? We had a big drop, but overall, it's higher than when we decided to get out. So even the ones that we took out of the portfolio were doing well. But this one was removed, and it stays removed. I don't know if we'll ever put it back in. I don't like the way the chart looks, the way it jerks around, but it sure is going up. Even the laggards that we got rid of have caught up to this AI revolution. That tells you that they're all going, kids. Let me show you another. Chart number 8, the AI play. It was WTAI.K on Metastock. We removed that from the portfolio right here at this webinar. We asked everyone listening, please remove that. We don't like it. And it ended up dropping all the way to here. I mean, wow. And once again, it ended up going higher anyway. That's how strong this AI revolution is. So even though we removed Wisdom Tree from our portfolio, just looking at it, you could have held that one too. That's how strong this revolution is. What else do we have? We are on 8. We need number 9. I don't have a pre-canned webinar for you guys. I don't do PowerPoints. It's live as it happens. I hope you please bear with me if it's jerking around a little. But yeah, I don't have screens or slides. This is real. It's the stuff I was literally working on for myself right up until this webinar, and I thought I'd share it with you. So you bought the Robo AI Automation ETF was removed from our portfolio right here. In fact, at the last webinar, at this webinar where the dot is, I mentioned that if you drop under this line, we remove it immediately. It did get below the line. We did another webinar to say make sure that it has been removed. It dropped dramatically, and even that one is starting to make new highs, right? Previous highs are here. It got above this high. It's going to challenge that. Even UBot, one of the laggards, is doing well. AI revolution is very strong, kids. Don't let anyone talk you out of it. Don't let anyone tell you it's over. Don't let anyone tell you that big business isn't going to spend. They're going to spend tens of billions on it this year coming. Let's see, what else do we have? 11, we need stock number 10. All right, so the AI play THNQ, think.Q, we love it. It's the Robo Global AI ETF. Look at the trajectory taking place on this one. Same sort of action. First, you had Robo running around. Oh, sorry about that. You had Robo run. We'll just ask that to go back one step. All right. What we were trying to show you is we had Robo running around inside of a, sideways but slightly upward trajectory. And look what happens after it breaks out of this trend. Boom, boom, look at that trajectory now. Going crazy. The AI revolution is as well. OmniCamp is coming soon. I've got one planned for the end of January, and I've got open seats. So if you want to go and join me, please go to omnibootcamp.com. Dano, did I advertise enough for you during this one? It's too much for me, but I'm trying, Dano, I promise. I know he's yelling at me right now. I'm trying, Dano. I'm not a salesman. All right, so the AI play think.Q, look at the trajectory. I love it. Keep that in your portfolio, no doubt. What else do we have? Don't worry, kids, there's more after this. This is just the beginning. We're on 10. We got to go to 11. So the Defiance Quantum ETF, QTUM. Look at this monster. Oh my, look at this monster go. And the chart is beautiful. The way it trades, it doesn't chop around. It's just wonderful. Look at the trajectory starting now, once again, that we were able to break out of this channel, although this had a little bit better upward trajectory than the other two we looked at. Look what happens when you get above. It just starts to go. Just warming up to get to the top of that channel. It started to go. So the trajectory is there. This AI revolution will continue for at least 4 to 5 more years. These stocks are going to help you profit on that revolution. Let's see, what else do we have out there? That brings us to, oh yes, MSTR, baby. We added MSTR in our last, in the webinar that we did down here. We added MSTR. We were somewhere in the, let's see where we were. We were somewhere in the 180s. We added MSTR with a target of 277. It hit our target, go rock and roll analysis, and then just exploded over 500. We love MSTR. It is absolutely staying in our portfolio. It is a great Bitcoin play. This target has been hit. I will derive other targets for us, but we will absolutely keep MSTR, which we just added a couple of months ago. We love it. Now, traders, I mentioned that I do trade recommendations. Let me see if I can show you something. I send out Omni recommendations. They happen 24 hours a day. It is directly from me. I sit right here at the helm. If something's going to happen, you get a signal. I send you a Discord. I send you a flash pop-up, which is a window that rings and vibrates. You know when we're trading, right? So I send out signals, and then I have two separate entities total up the trading we did each month. When they both come to the same totals, they bring those totals to me. I have nothing to do with adding this stuff up. They present those totals to me. I'm just going to go over them quickly for you. Year-end totals of 2020 was 124,919. Now, that's trading the Omni signals on one lot only or 100 shares of stock. The smallest thing that you can do is the calculation here. Many of my OmniX trade 2, 5, 10s. I have OmniX that trade 20s on every one of my calls, and I've got testimonials from them that would knock you over, but let's just take a look at the numbers. 2020, 124,919. 21, we did 69,000. 22, we did about 80,000. Remember, this is calculating only one lot. Don't know what you guys are trading. This is one lot trading only. 2023, we did almost 60,000. Now this year for 24, we're already up 71,000, and we got the Santa. Well, maybe there'll be no rally, I don't know, but we got the month of December to bang away and make a few more bucks. So how it went in January is me sending you signals day and night. If you took all of them, you made about 4,100. Feb, we lost 3,000. Hey, these things happen. We're not perfect. March, we made 4,600. April, 24,000 based on one lot trading. May, 10,600. June, 5,900. July, positive 8,200. All positive except for February. August, another losing month. We lost 5,500. September, we made 16,500. October, we made 7,000. November, we lost 2,200. We're already up for December, and I expect this to be a strong month. So we're at 71,127. If you wanted to join my platinum signals, this could happen for you as well. Remember, that's only one lot. You do 2, 4, 5, you can do math, right? Traders, this is as real as it gets. I've been here since it began. There's a lot of stuff out there that may or may not be right. This is as real as it gets. I promise you, ask anyone around the world that follows me. So we're going to keep MSTR in our portfolio. And if I look at the rest of these, let me see, 14, where do I want to go from here? Let's go with, all right, so here's what I think we should do. Let's really turn this up a little bit. There'll be no additions, no withdrawals to that AI portfolio. Now let's go top day. Let's go look at some charts that we could use immediately following this webinar. Where are we going now? So I showed you the AI portfolio and how it's doing and great stuff. And hopefully you bought those and you're holding them. Now let's go to top day, because if I can help you move forward this week, this month, next year, I'm doing my job. So what is happening out there? Let me just show you a chart. This chart right here is the Dow Jones Transportation Average. It is deemed the leader of US indices. Does it always lead? Not on a daily basis. Is it the abstract leader? Absolutely. How do we know that? Well, the name of this is the Dow Jones Transportation Average, right? Well, Charles Dow invented the Dow theory, which includes the transportation average. The market's named after him. The theory's named after him. It works, I promise. I don't question it. That's that. It's the Dow theory. There's more to it than what I'm going to teach you, but in layman's terms, the Dow is the leader. The transportation average is the leader of US indices overall. Would anyone have the slightest clue why that would be? So why would the Dow, let me just see if I've got some notes for you. I sure do. Why would the Dow Jones Transportation Average lead other indices? Well, if you think about this, if you're a company that produces a product and you've done really well for the last couple of quarters and you got a bunch of product and you're making it and selling it and you got a bunch of it stored up in the factory and you're getting it out the door as quickly as you can make it, and suddenly those orders start to taper off just a little. Well, that means that in a couple of months, you're not going to be shipping as much stuff as you were. The transportation average is absolutely perfect at seeing that long before the rest of the market sees it. You'll have markets like NASDAQ, S&P running up, 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 while the transportation average starts this crazy downward spike. That's telling you the guy's going up, going to run out a little steam and have to catch up to the transportation average. That's the way this plays out almost always. It's not 100%, right? You can't count on every time the transportation average goes down, it's going to pull the other markets with it, because sometimes it drops only a little and then catches up. But when it gets into a frenzy, it is the leader. It pulls the others back down. So I believe the Dow Jones Transportation Average is anticipating the threat of tariffs actually coming to fruition in 2025. How do I know? Well, look what it's starting to do. Look inside this shaded area. It is just starting to go down, while NASDAQ making all-time new highs, S&P making all-time new highs, the Dow making new highs. Why is the transportation average going down? Well, let's see if it makes sense to you. Tariffs, by their very nature, generally are the cause and effect of less goods being transported to and from the United States. I believe the transportation average is adjusting itself for what it sees in the near future as far as needs for transportation. Remember that a market, and especially a chart, it's always foretelling. They're called futures markets. They foretell what's going to happen. And if you know how to read a chart, I promise you, it is better than any system. It is better than anyone that you could speak to. It's better than any advisory service. The chart always tells you what's going to happen. Those recommendations I put out are based on chart only. You've seen the results. I've got a crowd following me for my entire career because I use charts to come up with great trades. Not my noggin. I am not intelligent enough to come up with great trades by meditating. That doesn't happen. It doesn't happen for anybody. You need to be a fantastic analyst, which I can teach you to be, to call these markets properly without any of this getting involved. So if markets are foretelling the future, charts are foretelling the future, you've heard me say this many times. I have stated this my entire career since the 80s when I figured it out. A chart is merely just a visual look at all the government reports, quarterly earnings, cookbooks that are going to be announced that we don't know about, soon to be reported, all the news that could possibly come out, geopolitical or otherwise, traders' reaction to that news, you name it. You know what? It's all built into this chart right here in front of your eyes. You do not need to read the news. You do not need to have a fire hose of information getting shot at you and you trying to disseminate it and come up with where should I buy? It's all right here. I promise. That's how I come up with such fantastic recommendations. That's how we come up with such great year-end calls. The Omni has called where the S&P would go for 16 years in a row. It has nailed it clean every year. Ask anybody who follows me. I think we had one year where the market went up, came back down, and stayed exactly where it was, maybe 2012, somewhere around there. So no one called it right that year. Barring that, January every year I come up with where the market will go. People tell me I'm crazy almost every year. We nail it cold every single year. Why? Because I don't think for a moment about what's going to happen. I use the chart only. So that being said, with the transportation average looking so ugly, the NASDAQ's got a completely different look to it. Check this out. The NASDAQ has been going up, 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 up. That's all it wants to do. While the transportation average has that nasty pullback. This is what we have to start watching out for. What should we be cautious of? So that is what we need to speak about now. What to watch out for. These next few charts and markets, in my opinion, are what we should be watching out for and paying attention to in the future, in the near future, what we should be trading, paying attention to from the moment you walk away from this webinar for the next few weeks. What am I speaking about? You'll see in just a moment. First off, we'll go in here. This is now the portion of this webinar is what should we be watching out for in the future. This chart, which may be confusing, but I will try to make it simple for you. It is an overlay chart where the blue bars are NASDAQ, the red and green bars are the Dow Jones Transportation Average. We just looked at both of them. One going down, the other one going up. What's supposed to happen in most cases is, if you look back here, let me just grab a little tool so I can move around a little circle for us. If you look back here, they kind of stay with each other, right? The charts are all over each other. The blue bars and the red and green bars kind of overlapping. They stay together. They stay together. Ooh, what's this? A widening. Look, it got a little wide, got a little wide. Well, that continued to go and go. And I don't know if anyone remembers this. I did many webinars about this with this exact same chart. And here's what I told you. The rubber band has stretched too far. This is my divergence meter, if you will. The rubber band between the transportation of goods and the companies that produce the goods has expanded too far. A contraction will take place, a reckoning will take place. And what happened? The NASDAQ tumbled, caught up to the transportation average, and then continued to crash. This all just happened in August this year. You guys don't remember it? I remember it very well. I did many seminars and webinars about it. You guys have seen this chart. All right, so that was what happened then. Well, they've gotten back together, and they kind of get a little apart here, but stay together, a little apart here, stay together, a little apart here, and they get back together. But look what's happening now. Now, if it starts to go far, I'll draw like a circle at the top of it and the bottom of it and a line to see how far apart it is. Well, look at how far apart these two have gotten all of a sudden. And you've got this still dropping with the other one not. So the divergence is taking place. The rubber band is expanding again. And here's what I am telling you. There's no way the other markets will not come down if the transportation average keeps going next few days, next week or so. There's no shot that NASDAQ and S&P can go up without it. They have to come back. Just like you see here, this is exactly what happens when they get too far apart. They have to come back together. That is the very nature of how our markets are pricing themselves. They work off of one another. No market is standalone. This market means something to that market, which means something to that market, and collectively they create a collage. Well, you cannot have this sector going up and that sector going down. The rubber band's expanding again. It will create a reckoning. Now, transportation average could stop going down tomorrow and start following NASDAQ. That'd be okay. But that's not what's happening. Transportation average is trying to speak. I'm listening. I'm showing it to you. So you've seen that divergence chart. Let's just go back here a minute and remember one of side of that chart. It's only the NASDAQ and the transportation. This is your NASDAQ going in that direction. This is your transportation average going in the other. And I promise you, it can't continue that way without a reckoning. That's one of the first things I want you to keep a watch out for. And I watch this every day, so you can always join me in my trading room and ask me, how is that chart doing, the divergence meter? What else would I want you to watch out for? Oh yeah, check this out. Here's where we need to go next. I don't know if anyone's been paying attention to this one, but it's my job to keep you apprised or appraised of what's going on. Watch out for the double top to come in Tesla on a weekly bar, no less. Top one, top two. It is going to happen. You're going to absolutely react to that double top. There's no shot Tesla's just going to blow right through that double top, because the first top is in 2021. We're getting to the second top in 2024 or 25. There's going to be a reaction up there. I promise you. That's way too far apart to not have a reaction. So watch out for Tesla and watch out for that. Dano's in my trading room typing boo because he's long Tesla. I'm sorry, Dano. I'm just reading the charts, buddy. Look, I'll show you. He's in my chat room listening. He just went boo. I'm sorry, Dano. Nothing against you, buddy. Love you to death. All right. So what else do we have going on here? So you're going to watch out for that divergence meter, which is NASDAQ doing this, transportation doing that. It cannot continue without a reckoning. You're going to keep your eye on Tesla because everyone's getting long Tesla, and Elon Musk is the president's friend and all that good stuff. Charts are charts. Follow the charts. Not this, follow the charts. All right, so what else do we have I want you to watch out for? Oh yeah, check this out. You'll like this. Coffee traders. Now I've been telling for 3 or 4 months now, I've been silently telling lots of my traders about this. And I absolutely put this in my last live webinar. Coffee. The coffee market is silent killer. It is absolutely the next cocoa. I promise. It's been going on for a long time. And look at the trajectory happening now. It's silently turning into a monster. Coffee, KCH25, KCH25. Look it up, or actually on Metastock, my bad, it's KCH5. There's no 2 in there, my bad. It's KCH5. And look up coffee. It is the new cocoa. Look at the trajectory on this thing. Coffee doesn't belong here. Coffee's cheap. Coffee belongs in the 150s. What is it doing at 330? It's going to continue. Why? Well, first off, the trajectory itself tells you it's going to continue. Second, let me show you what it's doing and why this is happening to coffee. No, I'm going to go with this one. Yeah, we'll try that again. All right, cocoa traders. I pointed this out to people years ago, actually. Cocoa started to do this, and I started to do webinars about it. I said, look, just like coffee is shaping up now, look at what cocoa did. It was silent. Just went up from 1,200, 1,300, 1,500, 3,000. No one paid attention, right? Nobody paid attention to cocoa, and look what ended up happening. It absolutely positively went berserk. It's a $10,400 commodity. $10,400. Now, here's what happened with cocoa. Cocoa is only grown in Ghana, the Ivory Coast. There's only a few places cocoa will grow. Cocoa went from a few hundred to a few thousand. All the cocoa farmers were killed. Goodbye, wiped out, killed, dragged off the farms, and cartels took over. And cocoa is now $10,000. It's insanity. Well, coffee, I promise you, is the new cocoa. This is the new cocoa because no one is paying attention like they didn't pay attention to cocoa. Now, you can grow coffee in more places than just the Ivory Coast and Ghana, but it doesn't grow everywhere, and it takes 5 to 7 years to get anything from a cocoa or a coffee tree, either of the two. So if you started planting today, it would be 5 to 7 years before you harvested any of it. They are driving this the same way they drove cocoa. Keep your eyes on this monster, coffee. What else do we have? So where is the economy going now? Where are the markets going? Where is this going to take us? All right, so I showed you some commodities and I showed you the AI. Where are we going? Well, there's a few markets that'll explain exactly where we're going. Excuse me just a moment. First off, if you know where this one's going, it'll help you know where almost everything else is going. And let me show that to you. Crude oil. This is a weekly chart of crude oil. So each one of these daily bars is one full week. It has been getting cheaper and cheaper and cheaper because it used to be up there, all the way up there. Down, getting cheaper, getting cheaper, getting cheaper. Then it falls out of this pennant flag and creates a continuation pattern, which is a baby head and shoulders, which means it wants to go lower still. The price of crude going lower helps every single company in every country across this planet, everywhere. Everybody gets an immediate stimulus in their pocket when crude goes down. Crude has been going down for a while. It is absolutely helping propel the economy and the stock market. What else do we have? On the other side of that is, and I think I'm on 12 here, yes, 30-year T-bonds traders. Now look at this chart. I don't know if you know how this works, but if the T-bond futures market is going down, when bonds are going down, interest rates are spiking. Bond futures down means interest rates up. That's how this works. So the interest rates are spiking when bonds go down. Well, ever since we got to the bottom of that descend, we've been going up. Same sort of trend that took us down, we're starting to go up. You know what happens when bonds go up? Interest rates go down. Inherent, has to happen. Jerome Powell does not have to come out and say a single word to raise or lower rates. Bond traders and banks can raise and lower rates by knocking bonds down, raising rates, running bonds up, lowering rates. That happens. It's been happening since the market started. So Jerome does not have to raise rates or lower rates. The Fed does not have to say a word. The street can do it for us. The street and the Fed are working together to lower rates. Fed's been lowering, street's been buying bonds. So if you got crude starting to come down, you got bonds coming down, which is bonds going up, excuse me, so it's pushing interest rates down. That, my friends, propels an economy. Absolutely, positively propels an economy. Now let's think slightly longer term, not what might happen over the next few weeks or even the next quarter. Let's look at longer term. Let's go out and look at weekly charts. E-mini S&P. Look at this weekly chart. There is no analyst on the planet, even a blind one, would say that this is bearish. There is just nothing about this to call it bearish. Does a market ever just go straight up? No. Up, 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 pull back. Up like crazy, pull back. Up like crazy, pull back. Up like crazy. Can you say the words? Yes, it will have to happen. Into next year, especially if the especially if the transportation average continues to drop, we'll have to have another one of these, but that's all you're going to get. The market is not going to fall apart with interest rates going down and crude going down. There's just no way you're going to knock the market down. Now, I mentioned that every year I give out an E-mini S&P target in the beginning of the year, and we were down in the 3,700 area, and everyone told me I was out of my mind. 4,700 area, excuse me. You know, where were we in the beginning of the year? Right around here. So we were right around the 4,600 area, 4,690, 4,700. I offer 60-55, like I do every year. I put a grandiose target out there. It's always based on technical analysis. I get ridiculed for the first 6 months of the year, and then people start going, Oscar, how did you know? And boom, we hit our target every year. Ask anybody who knows me. We hit it again, 60-55, right there at the circle. Bingo. No one on this planet is as good as the Omni with coming up with these year-end targets. I've never seen anyone hit for 15 years exactly where it should go. Never seen it in my life. The Omni does it. I'm afraid. I'm afraid of it almost, but it does it. You guys seen this. I put this out at the beginning of the year. So this chart looks fantastic. I don't see why that would be spiraling anytime soon. A pullback? Yes. A bear market? Don't see one here. Then we've got another one to look at. Look at the NASDAQ. This is my chart masterpiece. It's been working for so long. It's an amazing chart. We actually gave a NASDAQ target out this year too. I only gave it out to my trading room in my videos, but I didn't do a webinar about it. And we came up with 21,636. We were at the 17 level. We got to 21,636 yesterday. I kid you not, this Omni is very powerful, kids. So does this chart look bearish to you? Would you think that this looks like a market that you'd call the downside on? Now, can we drop back down to the line right here, which of course could be made a little tighter? Can we drop back down to this? Yeah, why not? That'll drop us down 1,000 points. Who knows? But is it bearish? Not anything we're seeing, no. So overall, with crude going down, the prospects of us pumping more crude once the new regime comes in next year, more crude going down further, interest rates being dropped, I mean, that is a recipe for up, up, up for our stock markets, kids. So that then brings us back here. And let's go take a look at what we have left. That brings us to NVIDIA once again. Now that we've looked at all of that, I want you to recognize that now it's affordable because of, of course, they cut the stock down in price, right? So now it's affordable, and it will lead this group higher and higher and higher. Yeah, there's some talk that the Chinese are doing an investigation. So what? It's not going to stop NVIDIA from doing all the wonderful stuff that it does. So NVIDIA will continue to lead that group higher, and the AI revolution will take our stock market higher. Absolutely, positively. Now, there is Bitcoin and Ethereum, which I wanted to cover as well. So let's go take a look at a couple of those. Bitcoin, so Ethereum. If you've been following my videos, you would know that I have told people for the last few weeks now, start to get ready for this, for Ethereum. Why? Well, because the market, Bitcoin is getting too expensive for the mere mortal. It's just getting too expensive. So if you've got an alternative that's way cheaper, like this one, why wouldn't you just go with this? Well, that's what some people are starting to do. So I prepared people. I said, look, Ethereum's going to start to go because now Bitcoin has broken to 100,000. It's just a little bit too expensive for almost anyone entry level to get into crypto. So you will start to go after Ethereum. Plus Ethereum got above this massive resistance, right? This big blue line got above that. Looks good. Certainly going to move in sympathy with Bitcoin, which is sitting right here. Let's go look at that Bitcoin chart. Bitcoin, we also did an 85,000 target in Bitcoin, but boy, did I get ridiculed for that target, kids. I cannot tell you how much trouble I got for putting out that target, but I bought Bitcoin. I'm still holding Bitcoin. We blew through 85. That target was hit. The Omni is very good at what it does, kids. So where's Bitcoin going now? I've got two targets for you. 106,500, then 109,500. Those targets were driven before we ever got to 100,000 Bitcoin price. So it almost hit 106.5 already, right? It got to 105 and change. These targets remain valid. Bitcoin, like everything else I showed you in the AI portfolio, look at this insane trajectory that took place once we broke out of the big flat. So let's make this fatter, thick, so you can see it. Apply. Wonderful. See how it just started to really, the trajectory just started to expand and move much, much faster, much higher. And now, between these blue lines shows you the trajectory going on compared to the sideways movement. It is just exploding. Nothing goes straight up, kids, but these targets will be seen. So that is what I wanted to present to you as far as charts, what you should be watching out for, what should happen next, and where we could be going. If there are any questions or concerns, I'll be more than happy to speak with you about them. But I think I kind of showed you everything I wanted to show you here. And it all started, of course, with the AI NVIDIA portfolio. Traders, thank you so much for tuning in. I really hope this helps. I hope I taught you a couple of tricks here, or at least showed you a few things that you should be looking out for into the new year. And if you want to join me, don't forget, just go to omnibootcamp.com or come to livewithoscar.com. And you can easily join me for absolutely free right here in my live trading room, and we'll work together. Jeff, thank you so much for letting me present. I enjoyed doing that.
Of course. Always entertaining. We do have one question that I'm interested for you to answer.
What do you have?
Would you sell Starbucks due to higher coffee prices?
It's absolutely going to hurt Starbucks at some point, but there's a lot of coffee, right? So it's not like cocoa yet. There is a lot of coffee, but absolutely positively, if Starbucks has to pay more for their product, and it's getting very expensive, not just a little more, they're either going to charge you more or their stock's going to go down. So yes, they will feel the pain of coffee moving higher if it continues.
Thanks for the question, William. All right, that's it. I wonder if that's why the price of candy was up.
Let me do this. Traders, thanks for tuning in. And remember, a motto that I try to tell everyone that follows me, it sounds simple and it sounds like something you shouldn't do, but it has saved the lives of more traders than I could count. That is, put your stop in before you trade and put that stop in first. One of the things I tell people is to say this to yourselves once you've done that. And most of my Omniacs know what I'm about to say. Are you with me, Omniacs? Say it with me if you're listening. 1, 2, 3. Stops are in. Here's where it gets important. Emotions are out. Put that stop in first. It helps you keep your emotions in check. I hope I helped you today. Thanks for tuning in.
Thank you, Oscar. All right, very cool. Let me do this. Okay. 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 All right, very cool. And we've been talking about his masterclass all day. Did a whole class with us. Talked about how to properly drop a chart, how to do trend lines, technical formations. Total of 3 hours of instructions. It's available instantly as part of the Summit package. You can also buy it by itself. Normally it's $499 at the Summit. As part of the Summit special, you can get it for $349. To do that, you can go to metastock.com/summit deal. You can scan the little QR code with your phone. You can give us a call, 800-882-3040, or metastock.com/sales chat to take advantage of it. And it is part of that big package, the TST Trender, Vora Victory Method 2, SuperTrend Bullseye, the JBXC Complete, Trendlines Training, 3 months of LearnMetastock.com. All of that's normally $6,982 here. If you do it at the event as part of the Summit Action Package, $2,792. For that one, you have to call in 800-882-3040 or metastock.com/sales chat. So there you go. Do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. Great sponsors. If you're watching on YouTube and you haven't registered yet, go to metastock.com/traders-summit. You can sign up for that. So, and then of course, we're Metastock. Greg, I think we should do one more prize.
I concur.
All right, cool. Let's do it. All right. This one I'm going to do a little bit differently. We're going to basically do it based on somebody that's here still. So, and it's going to be Metastock. Oh, Henry, I just saw your question about gold. Sorry, Oscar's left. In any case, though, livewithoscar.com. Go join us chat room. You can ask him right there. So, in any case, Greg, we're going to do a Metastock. Have you heard about Metastock before?
I've heard about it. Here or there. Yeah.
Rated #1 a few decades in a row. Just 30. Yeah. Just 3 decades in a row. Yeah.
In a row.
We're gonna go ahead and give away 3 months of the Metastock real-time service. We're gonna give away 3 months of Metastock Zenith. Metastock Zenith, I don't know if you've heard this, but they spent $1 billion designing that thing. I don't know if you know this, Greg. They have thousands of reporters in over 200 different news bureaus to give news into it.
Oh, you don't say. Tell me more.
Yeah. So you're going to get that. You're going to get 3 months of Metastock, which allows you to scan, test, forecast, all that kind of stuff. We'll throw in 3 months of Learn Metastock. There's hundreds of videos to help you understand how to use everything. We'll give a white glove installation support appointment with it. All of that can be yours if you're just here. So awesome. We're going to do the same thing, though. I've got a list of everybody that's actually logged in right now. And just tell me when to stop. I'm not looking.
Stop.
Oh, it wasn't scrolling.
All right. Can I start?
Will it work if I have to scroll a little faster on this one? There's a lot of people logged in. Okay, let's go.
Stop. Wait. Now stop.
Okay. Final answer.
We need to think of a better method for
that. Let's see. Carlos P won. So let me go ahead and make it.
Congratulations, Carlos.
Yeah, if you have Metastock, we'll just give you an extension too. So we don't want you to feel left out. So, and then we got all the way to the C's in that one, Greg. So there you go. Thank you very much for the assist.
You're welcome. Carry on.
All right. Very cool. Our next guest, next presenter is Melissa. Melissa's joined us several times. She's going to be actually our final speaker of the year. So it's great to have Melissa in here. She likes to talk about gaps and the strategies she uses around gaps. She does a really, really good job with it. Absolutely love having her here. Melissa, how you doing?
Testing. Can you hear me?
We can hear you, yeah. Coming through good. Let me go ahead and make you the presenter here. Yes, I should ask you to share your screen.
Let me know. Start broadcast, it's asking me.
Now, Melissa, before I let you go, I can't think of a better last guest of the year.
Thank you so much. Well, I try to be motivational.
Yeah, you're great. And I'm going to get out of the way so you can do that. Exactly.
Should I put start broadcast? Do you want me to press that?
It shouldn't say that, but
it is saying start broadcast or not now.
Just click not now. Yeah, the broadcast started at 8 a.m. That's how. Yeah, we're live.
Okay, great. Wonderful. Thanks so much. Hello, everyone. And if you have questions as we're going along today, you can put the chat in the room. So as Jeff said, I'm your last speaker here for 2024. I cannot believe that in less than a month, it will be 2025. I personally feel like the year has flown by. I don't know what that means for 2025. But again, it's been a very exciting year to trade. I think one of the reasons the year seemed to go so fast was there was a lot going on this year in the stock market. Obviously, with the election, we were talking about that all year up until November. So it was a really interesting year to trade. And at this point now, you know, you've got two more good weeks, I'd say, of trading. This week and next week, with the way the holiday is in the middle of the week, I think it's going to be very low volume the final weeks of the year. So I'm very focused on what I'm doing right now today. And like I said, this week and next week, and there's a Fed meeting next week on Wednesday, the 18th. So I'm very tuned into that as well. So welcome, everyone. It's so great to be here with you. I'm in New York. It's like midnight here in New York because it's so dark out so early, even though it's only 5 o'clock. And tonight I'm going to talk to you about trading on the side of institutional money and gaps. I trade gaps, and I will talk about that today. I also appear on TV. I appear on Fox News and pretty much every other channel discussing the market, discussing the economy, discussing world events and things that are going on. And obviously, like I said, there is a lot going on right now, and particularly this year. If you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me on Twitter, which is now X, Facebook, YouTube, or Skype as well. So these results are in my trading room. And actually, I didn't even update this since the 20th because I've been so busy since Thanksgiving. But I will tell you, we did Tesla today and AMD were the two trades today in the room. I have to update this and I'll put it on YouTube. But for the year through November 20th, these are day trades, so you need to have a margin account to do these trades. In other words, like if I would short 2,000 shares, that's what I mean by a margin trade. These are not options. I run a live room. I call the trades in the room every day, like I just said, the ones we did today. We're up through the 20th, $823,787 for the year. So my average risk per trade is about $3,500, okay? You can risk $500, $200, $300, $100. You can risk whatever you can afford. So there's lots of different ways that you can day trade. You can open up a prop account. You can open up a retail account. If anyone has questions about that, you can email me or ask me now as well. And then I also trade options. One of the biggest winners we've had recently has been Tesla, actually. Last week, I called the 400 Tesla calls, and it almost went there Friday. I knew it was going to go to 400. I didn't know it was going to go there right after I called it. It was really quite something to watch that. And that has been one that we've been watching. We've been long. And even I looked at it before I hopped on here tonight. That's even lifting tonight after hours, actually. So we do options too. Now, I risk more money in my options. I'm buying a call and selling it, or I'm buying a put and selling it. And again, this is not through the last 2 weeks either, but I risk an average of $8,000 to $9,000 per trade in my options, so I can do some of the pricey ones. I have people with me doing one contract, okay? So at the time I called the 400 calls in Tesla, it was nowhere near $400. So you can see even one contract, if the stock moves and jumps 50 points or 30 points or 25 points, especially in like that did in a day, you can make a lot of money even with one contract, okay? So we're up over 3 million for the year with options. And again, I will finish up these stats for the year. My week has been very busy. I had my December class this past weekend. And so it's a lot when you're trading, when you're teaching people, when you're running the room, when you're on TV. I'm trying to juggle a lot of things at a time. And I'm going to take the time here to talk to you tonight because there might be someone here that's interested in my system. And there might be some of you here that have been trading for a long, long time and you don't know how to trade. You're losing money in the market. It's the end of the year and you're looking back at your year and you're saying, how can I get these results? Why did I not have a good year? Or could I have had a better year? You know, a lot of times people are looking at 2025 and they're looking at New Year's resolutions. I'm not really a New Year's resolution kind of person. I'm more a goal-oriented person. I set goals for myself. But if you didn't have the year that you wanted this year trading in 2024, now's the time to start thinking about 2025. And not only setting some goals for yourself for 12 months from now, where you want to be in December of 2025, but also what are you going to do differently so you can achieve those goals? You know, what steps, what actionable steps are you going to take so that you can achieve the goals you want if your goal is in fact to be a successful trader? So again, I have the stats in here for options and day trades. My options are a newsletter that gets emailed to you. And again, this isn't through today. I have to update it. This was through the 20th, 3847177. So, you know, I've traded since 2008. Now, when I started out trading, I didn't know what to do at all. And I lost money like many of you. When you start, you lose, you don't know what you're doing. And I very quickly figured out that there was something to gaps. So, you know, I didn't know what I was doing. I didn't know anything about gaps. I didn't know anything at all. And then I was back and forth for about 3 years, trading my own money, trying to figure it out. I also figured out there was something special to shorts. So I kind of gravitated to the short side. Now I was talking about Tesla, we went long Tesla. So if there's a long setup there, I'm going to do the long setups too, but I do prefer to short. And we are going to talk about that today. But anyways, I knew there was something to shorting and I knew there was something to gaps. When I saw how fast stocks moved when they fell, when I saw, you know, a gap, just any gap, you know, and I saw the power in the gap. And I said, this is something that I want to do. And this is something that I really want to gravitate towards. And then it was a journey for me. You know, I make it so easy for people because they can come and take my class and learn the class in 2 days. Now, it doesn't mean they'll memorize every single thing from the class. It's a learning process. You learn information, you come back, you ask me questions, and that's usually what people do. But again, it was 3 years of my life to figure it out. So I've condensed all the information in what I know into a 2-day period to help people learn it. And of course, you can ask me questions. So getting back to what I was saying, 2025 is almost here. Are you ready to have a great year? You know, I also like to make lists. Okay, I said that I'm a goal-oriented person. Having a notebook, writing things down, things you want to change, goals, all of that is good. And writing stuff down really helps you, you know, organize your thoughts and get it together with what you want to do, and particularly with trading. So like I was saying, I started trading and then I gravitated towards gaps and also towards shorting. So what I found very early on, what the success and how to make money was really about just becoming an expert. So in order to become a successful trader and successful in the market, you have to become a specialist. And many people are all over the place trying to do lots and lots of different strategies, and then they don't make money. To make the kind of money, I'm showing you the stats, the results that we had this year in even one calendar year with the risk I stated. You have to be very good at something. For me, it's gaps, okay? So if you become a specialist in one specific strategy, that's how you're gonna do it. And for me, again, it's a strategy that reads institutional money, or what I call power money in the market. This brings momentum, and not only that, it brings opportunity, which we've seen a lot of this year, okay? We've seen a lot of actually since the election. There've been a lot of opportunity. I mean, I can't even believe the way some of these stocks are going since the election. Every trader on every level must learn a skill set. That's how you're going to make money. And it's acquired through education, or you teach yourself. You know, like I said, it took me 3 years to figure out my system, but it's a heck of a lot easier and cheaper and shorter time frame if you can pay someone who is an expert to learn, and then you allow them to guide you on a daily basis and teach you, and you get the skills from that person. So again, I focus on gaps, but really my specialty is predicting price action, predicting where a stock's going to go before it does it. And that's something that I have focused on for a long time, but it's really the way that I read a chart in analyzing the gap that allows me to make the prediction of the stock, again, just talking about Tesla, was going to go to 400, to see that number, to see it was going to go there before it was anywhere near that number. Do you know what I'm saying? And again, it's all about price, because if you can predict a stock's going to move higher, then you would go long, you can make money. If you can predict a stock's lower, guess what? You can short. And guess what? Then you're going to make money. It sounds simplistic, but the fact is the way that you make money in the market is really getting the direction right. Now I put in here, again, I was talking about doing options. This is another one that's insane, completely insane. It's still going, actually. I don't even know if this hit over 230 today. This was one I've really, really liked a lot too. We did Amazon on the 7th. Okay, we did Amazon 210 calls. It expired the 15th. This is a trade already done. It's done. Cost was 275. 30 contracts was a risk of 8250. You could have sold it for more than double. So this is a good trade. What if you did one contract? You could have paid one contract and still doubled your money. So I'm using here a beginner risk of 4 contracts. You could have risked $1,100 and made $1,300. That's a good solid trade. Now I'm just going to show here the day that we did it. Again, this was a long. So the 7th is here. Okay. Oops, where are we? Here. Does everyone see it? This is the 7th. Pushed up. Boom. And again, 210 is here. See it? So see how it went through the strike. Again, how do you make money in an options trade? You got to get the direction right. This was a call. The stock price was higher, but it also has to go in the time of the week that we do it. So we do the weeklies. So this moved up and over and through the 210 number. Okay. And again, any questions as we're going along, ask me. So again, how do you earn a living trading? How can you be at this point where you are successful by the end of 2025? How can you do this for a living where you can work from home next year? Okay, if that's your plan, if that's what you want, or even a side income. Number one, you need a winning strategy. You got to learn it first. Very important. You're going to make mistakes if you don't know what to do. Number two, you need a supportive mentor. Do and follow. Again, I run a live room. People follow me in the room. So again, I try to make it as easy as I can for people by focusing on one stock pick a day. But again, having that person to go to and ask questions after the class or every single day in the room is important for people. A lot of times people want to know why. You know, why did this work? Why didn't this work? How did you know it was going to go there, Melissa? Things like that. And again, number three, become an expert in one thing, which I was talking about. It's about implementing the strategy, getting good, and then adding size to win big. So again, you could risk more than I'm talking about in my trades. You could risk less, you could risk more. It's not even about the size factor. You shouldn't even be taking size until, even if you have a large account, until you know what to do. Because again, you don't want to risk money until you understand it. Now, here was another one that we did. This was way, it feels like 100 years ago. We did the 280 Tesla strike calls on the 6th, which is so funny now to look at the chart now. These have been kind of pricey, but totally worth it, totally paying. This cost of this was $13. So if you did one, you could have made $6,200. This was an insane call, just like the one I just told you about. I just called on Friday. It was a 477% return on investment. So let's look at this here, 11.6. Here's the chart. Okay, here we go. So again, look at the pop, boom, woo, and it went up. So again, I do gaps. So let's just talk about what is a gap. A stock gap, so when the closing price today, 4 o'clock the market closes, is different than the opening price of tomorrow, which would be 9:30. And so here this closed at 4 and it opened at 9:30. So again, do I know what's going to gap tomorrow morning? No, I don't. I don't know. I don't know until I get up in the morning and I actually see the gap live. Now, this is a bullish gap. Okay, I just want to point that out. You also have bearish gaps. So here's a bearish gap in Tesla. We didn't play this to the downside, but I just want to point it out. Stock closed here at 4 o'clock, at 9:30 it opened lower. And then the stock fell, okay? But anyways, this was this trade and look where it went. And again, take it over, see it, see where we did it and got the run up. And again, trading stocks like this, you know, we do day trades in Tesla on margin, even at the price point it's at now. But this is a lot cheaper for people to do as an option, to spend $1,300 on one contract or $1,000 or whatever you can get filled at, than buying what would effectively be, you know, 100 shares of Tesla at the price point it is now, or even back when we did it at 280 on margin. So one of the reasons people like trading options is because you could trade options with a small account. And you get one trade like this where you're risking $1,300. This is how your account can just explode. You know, this isn't every trade we do, but there's been quite a number of trades like this that we've been doing. I just told you about the one Friday. Any questions on options? Any questions on this as I'm talking here? Well, how are we doing? Okay, I'm gonna keep going then. So again, how do you make money in the market? Think about it. Well, you're like, you know, a lot of people struggle and they come to these lectures and these events, and Jeff's so great in doing so many of these events and giving so much information to people to try to help them. But when push comes to shove, the only way you're gonna ever make money is if you get the direction right. And that's one of the critical components of reading charts. I'm just gonna go back here. Again, this is one of Jeff's charts. You have to have charts or you're not gonna know what to do. It's like you're trading blind if you don't have a chart. Like I wouldn't trade without a chart, actually. So you're a blind person taking a trade based on this thing, that thing, news, whatever. You know, you have to look at what's happening in the price. So again, going back, how do you make money in the market? You want to be able to get in the direction right. And that's what the chart tells us, okay? So there's so much information in charts, you need it. Again, you're blind. Blind as a bat if you don't have good charts or any charts at all, actually. I mean, there's some people that are trading and they're just like, oh, I like this stock because of such and such thing. Or I saw it on a chat room, or I heard it in the news or whatever. And then they get in the complete opposite direction. It's about determining who is in control. If you can determine who's in control and you can get in that right direction, you're gonna make money. So if the bulls are in control, you wanna be long. That's what's happening with Tesla. That's how we've been making money in it. If the bears are in control, guess what? You wanna be short, okay? There's another one we did, this is Netflix, another just superb chart. If I drew this and just drew it with fairy dust, it wouldn't have looked any better than it's looked. You have to get the direction right to win. If you get the direction wrong, you lose. And again, this sounds very simple, but for some reason, many traders, and I'm just generalizing here, many traders, retail traders, tend to want to do things that are tricky in order to make money. They say, well, I'm gonna make a lot of money by doing this thing. No, it's really just a factor of getting in the area of the control or of who's in the control, determining the control and then playing it in that direction. So this is another one we went long. We did calls in Tesla. It ran right up to 900, just took off like a rocket. And this was even before the election, actually. So I remember the election was early November. It helped move this up, but this has been just skyrocketing, okay? So again, first thing first, number one, you need a strategy. Mine is golden gaps. What is a gap? A stock gap on the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So things are gapping right now as we're talking. It's almost 5:30. Stuff's up tonight, stuff's down tonight. I tend to look at things in the morning. I get up early and I check and see what's going on way before the open. Now here's one that we did. This feels like a while ago, it was before Thanksgiving, but it really was recent. This was Target. Target closed here, gapped down. So this closed the night before up here around 156 and change and gapped down here in the morning around 129-ish. Open fell off a cliff, came all the way down to 120 and change. That's a big move. So who is in control of the target? The bears. You would have only made money if you shorted it or bought a put, okay? So every day I'm looking to find that one to predict where this is gonna go. Now, I didn't know this was gonna go to the piggy target of 120. I thought 125 was good. This kept going. Again, the power of the gap, and then again, also the power of shorting. So again, my strategy is golden gap. So what is a golden gap? This is the strategy that I defined and created for myself, and now I teach people. A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. You take the trade in the direction of the gap. You can do the trade as a day trade or an option. Again, a lot of people want to come to me and do options because they don't have 25,000 in a retail account to trade on margin. But I'm telling you, you know, the benefit really of doing options is not necessarily that you can trade in on an account that's on cash and not margin. The benefit really of doing options is that, again, just going back here to the Netflix, the benefit is that you can hold stocks and positions and options overnight with a fixed risk, only what you have the position, and you can get extended moves, which we did in Tesla and which we did in this Netflix. So again, otherwise you're at the mercy of, if you're just buying the stock outright as a swing trade and anything could happen, you have unlimited risk. Makes sense? So that's really the benefit of doing options, even though, you know, people talk about the fact you can trade them without a margin account, but the benefit is you can hold them, okay? Now we're talking about longs, but like I said, I really specialize in shorting, and a lot of the shorts we did in the room, and the stats I showed you actually are the trades that we did in the room were actually shorts. So we actually shorted most of the year, and I anticipate doing that in 2025 as well. You need a focus, and my focus is gaps, but it's really also shorting. So again, what is a gap? A gap is just a difference between the close and the open of a stock. You got to have a daily chart. Now, again, there are bearish gaps and there are bullish gaps. Does every bullish gap move up? No. Does every bearish gap move down? No. And that's why I designed the system to rate it and go through the process to figure it out. In fact, here's an example of one where target gapped up and fell. Okay. And so again, you have gaps happening and moving in different directions, and you have to figure out the good ones that you can get it to get those kind of big, fat, elongated bars, whether it's a red bar or a green bar. Okay, now how do I do this? I rate gaps with a checklist. With a 26-point checklist, this is what I developed over 3 years. And now this is what I do every single day. And again, this is what I teach people. So, you know, it's very, very interesting when you are looking and trying to figure out every day what to do. Most traders are scrambling for the first half hour of the day trying to figure out what's the market doing and what do they want to do. I'm usually done 5-10 minutes into the open. I know what I want to do before the market opens, and if I don't want to do anything that day, if there's nothing good, I don't trade. So again, I'm very, very focused, even by 9 a.m., even before the market opens, what I want to do and whether and what direction I want to do it, or if I don't want to do anything at all. And again, that allows me to take the trade and get in and get out very focused and in and out quickly. Again, trying to, like, you know, hit a bullseye, very, very focused, because that is what you want to do. The idea of trading all day, you're just going to chop yourself up. You'll make money, give it back. And of course, your brain gets tired. You know, as the day goes on, your brain gets tired and you don't make good decisions. So having the rating system helps me determine who's in control. It also gives me something to focus on and follow. And a lot of traders need that. Human beings need that. And again, that's the great thing about being in the room. When people come in the room, they are there following me, and that helps them stay focused as well. Okay, so let's get back to talking about gaps. So gaps happen in the market on a regular basis, almost every day. However, some gaps are better than others, and some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps to the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that is how you know when the power money will flow to pay you. Because again, power money controls the market. Power money controls the market, and it controls stocks, okay? And it will always, always, always be the case. So even if you think something is not in control, it actually is. Do you know what I'm saying? So again, it's one of these things where if you're focused on an institutional money, it will really, really help you. I'm reading the footprints of institutional money, but I'm really reading it in the gap, okay? So if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. And this is what I do. This is what I do early in the morning, and then this is what I teach people in my class to do for themselves, even though people are coming into the room and following me. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And you can win big trading on this side of power. That's how some of these trades that I've called are 400% return on investment trades, which really can absolutely make someone's week and month, you know, whether it's with a small account or a big account. And again, what do I mean with institutional money? So we did, you know, we did a bunch of different strikes actually, but we did the 400 calls in Tesla on Friday the 6th, and it went there. It was there today. I mean, it was just a really good call. And so how did I know that this would keep going? How did I know it would get to that number? Again, experience, reading the gaps, reading the price action, seeing the control. You know, a lot of times people are trading and they get tripped up and they say, oh, they're against you. No, no one's against you. The market's just doing its thing. It's just moving and it's just doing its own thing. Again, if you're trading blind and taking ideas from strangers in chat rooms, or not even following any strategy at all, or just trying to buy every dip or wait for pullbacks, you're missing huge opportunities, and you're not focusing on the right things or the right aspects, and you're not following the right people. You know, it doesn't mean it's not gonna, that you don't make mistakes sometimes, or you have to learn things, and it certainly doesn't mean that every trade works. Not every trade that I take works, but more work than don't. And that's how you know that you have something good. And then of course you have some that are just absolutely monster winners. And then that's how you can put together some real numbers. So becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Because again, they're the ones that are controlling the money in the market. Learning advanced technical analysis is required. Like I said, otherwise you're trading blind if you don't have a chart. And you have to know what to look at on the chart. If you have too much gunk on your charts, you're not going to focus on what you need to be focusing on, which is exactly the price. So again, like I was saying, this means reading price action in charts. So comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, and your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. Again, this was right around that same week. We did the 775 Netflix calls. Again, look at where the stock went. And even though the stock is expensive and it moves, this is, you know, for the stock to move 150 points plus in a month's time is still insane. It's insane, actually. And it's a good sign for really what's to come in 2025, because we're going to see a lot of big moves in 2025, not in everything, but in certain things. And also we're going to see volatility too. And interestingly enough, I thought this was cheap, actually. One contract cost $10 at the time we did this on the 6th. We did the 775 Netflix calls. Again, this expired already. If you did one, you could have made $5,200 or 529%. So let's look at the chart. This was on the 6th. Here, boop, look at it. And again, this was one, it just kept going. Just kept going. I didn't look at where this closed today. But again, this is crazy. This is all money. Money, 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 if you're in the right direction. And that's how you can get these types of trades where you're making over 500%. So again, for one person to risk $1,000 in a $5,000 account or $10,000 account, you know, this is what people need. You know, people want to do crazy trades when they have small accounts, but really they should be doing even more quality trades, not crazy trades. You know what I'm saying? You need to pinpoint to find these to really build up your account to get somewhere, not doing crazy, crazy, crazy trades. So you need conviction to make money, and you get that from understanding why. You know, again, everybody just wants to take trades and make money and follow somebody in a room. And again, I allow people to do that join my program every day. But if you get why, if you can see that, if you understand that, like, why is Tesla going to go to, 400? Why is it going to keep going? Why is Netflix up? Like, why is this going? That if you understand why something's going to happen, it just really helps you. And it can definitely make a difference whether you hold something or get out of it or even take it at all. So again, I do this using a 26-point checklist, and this is what I teach in my class. And when you think about it intellectually, you're like, oh, this totally makes sense. If I take a trade and I'm in the right direction, I can easily make money. I have to be on the side of the control. So first things first, let's figure out, how do you figure out the side of the control? And that's what I do. And that's what I do with the rating system. And I rate gaps. So gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm really looking for in trading momentum. And then whether you have a small size or a large size, you will get a good risk to reward. So a lot of people like to follow fundamentals. I get it. We should talk about the Fed meeting that's happening next Wednesday. But sometimes things don't go the way that you think based on what people say, even in the earnings or in these meetings. If you look at the price of the chart and you can read that, that's all that counts. That's all that counts. It's not about, oh, what is he going to say? You don't even know. And even if you knew, you couldn't predict the market's direction or outcome in that. It may be different than what you expect. So one of the reasons we sold off today was we had data out and everyone thinks that he's not going to cut rates, you know? So again, these are theories and opinions. The price of a stock, the moment that it's trading, when the market's open or even now, tonight, that's what where price to be closed out, what price is it trading? That's not a theory. That's not an opinion. Again, it's so critical to have live data and charts and good charts because that's where you're going to get the information, not theorizing and making opinions. I go on TV, I give my opinion. And very often I have a different opinion than somebody else. Who's right? Whatever happens after the person says in the future. But for the moment when we're trading, all that matters is right now. We got to be right today. I have to be right this week if I'm in trades that expire on Friday. That's it. I have to be right exactly and as soon as possible. So it's not about opinions. It's about looking at the price and figuring it out, okay? So a big flow of money going in a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, guess what? It is. And this is where people, again, get tripped up, you know, because you're like, oh, I thought this was going to do this, and then it did that, you know? So number one, you need a good strategy. And number two, you need a supportive mentor, which is me. You do and follow. Again, I call the trades live in the room. But I'm saying 50 by 80. You're doing it with me if you want to do it, okay? And, you know, again, the newsletter I do goes to your email. It is an options newsletter that gets emailed to you, but the day trades I call live in the room. But it's just the consistency. The consistency, it counts. It's not about sitting for 6.5 hours and trading all day. It's about getting winner, 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 winner. Everyone has occasional losers, but any strategy does. There's no 100%, but you want to have way more winners. When I get up in the room in the morning, I don't think I'm ever going to lose. I expect myself to win. In fact, people log into the room expecting me to call a good trade. That's how well we're doing this year. They expect to win too now because they're in the room with me. And that's a beautiful thing because, again, if your mind is focused on something positive, you're going to create that. If your mind is focused on something negative, like losing, guess what? That's what you're going to create. And particularly this time of the year, we were talking about it, you know, the last speaker for Jeff, and it's December, and we're getting into the end of the year, into the beginning of 2025. If you don't change something that's in your mindset, you're going to carry whatever negativity you have about trading the market or your results for this year or whatever strategy you're doing, and you're going to carry it into 2025. The interesting thing is, as long as I've been teaching people now, I have been teaching people for quite a long time, as well as trading, more than 10 years, 13 years, going on 14, I'm teaching people. I have realized that traders will carry negative thoughts about classes they took, that they lost money, didn't learn anything, could be 25 years ago, trades they did 35 years ago. They're doing a disservice to themselves, and the only person they're hurting is themselves. I mean, and again, if you don't let it go and have amnesia, you're not going to be able to move forward and be successful. You know, it's like people who have, you know, they get married, they end up getting divorced for whatever reasons. You know, they've got to move forward. They've got to get over it if they want to fall in love again or get remarried or have a future partner. You've got to be able to move past things. And the earlier in the year, the later this year, the sooner you can make those changes in your mind and carry them through into the next calendar year. There is significance in that. Numbers are really magical, magical things. Somebody said to me, well, how did I know that this was going to go to such and such a number? I said, because I do, because it's the magic of numbers. And sometimes once you're trading for a long, long time, which I have for 17 years, and you understand the magic of numbers, which again, I'm reading in the chart, you will see how stocks can move and how things can go to certain places. And again, sometimes it doesn't add up with the fundamentals because it's not about that. It's about emotions or people when they're investing their money and they're trading in the market. One of the reasons why we've had such a big rally and why the markets kept going recently is obviously we've had a lot of optimism and there's change in the air going into 2025 with a new administration. What will become of it? Nobody knows. But for now, it doesn't even matter. It doesn't even matter. We're still in the same administration. It doesn't even matter. People are feeling optimistic. And so they're buying stocks and they're buying the market. Any questions here as I'm going along? I don't want to talk too fast. Just realized it. Are we doing good?
Well, I think you're doing awesome. So.
Oh, thank you.
But I don't see any questions yet. If you have questions,
Jeff's listening to me. Jeff's like,
we also, if you're going too fast, I don't want you to be worried about time because we can end whenever you're done. So don't worry.
Okay, that's right. I'm the last person. I forgot.
Yeah.
Wonderful. Anyways, getting back to the idea of trading is about consistency. It's kind of like if you did a sport. You know, when you start in a sport and you're learning the sport, if you're new to golf or swimming or anything at all, baseball, basketball, football, you practice, practice, practice. The more you practice, guess what? The better you get. It's the same thing about consistency in trading. And like I was saying, one of the biggest issues, I think, with many traders is they jump around for too many different strategies or systems. So they never get consistent in any one system. And therefore, they don't see the consistency in their P&L because they're jumping around too much and they never become an expert in anything. Okay. But think about it, just like in life, in any profession or sport, you would have to do it and practice it a lot to get good. It's no different than trading. So let's take here a look at the target. This was the target day trade that I did on the 20th. So here's the gap. Stock closed here, gap down, open, dropped. Entry was 127.50, shares was 1,500, risk was 4,200, exit was 125.50. And again, this went all the way down to 120 something. It didn't break 120, but I could have made another $5 on this. But I did the trade quick in and out, and I made $3,000, and it was a good trade. It was a good, solid trade. Okay. So anyways, this is what I look to do every single day in the room. And if I don't find anything, then I don't trade. I'm focusing on quality. You know, again, it's looking every day and being prepared before the open. Otherwise, you're just 50-50 crapshoot, and then you're not going to see, like I said, the success. This is another one we did, AMD. We did this today too. We did this today. You can pull up the chart of this today. I don't have the chart of this today in here, but the stock fell today. This was a good gap today. We did this on 10:30, right here. Stock closed up here, gapped down, open, dropped. Boom, boom. See where we are on the 30th. Entry price was $149.95. Again, looking for $1 a little bit more, exited at 148.50, made over 4,000. This continued. So this actually went past that number as well. But we did this today. If you have time, you can pull it up. Again, this was a nice gap. So again, these are trades on margin. You could have bought a put in this today, or you could have bought a put in it today, but you could have bought a put in this the day that we did it on the 30th as well. So like I was saying, people enter my trading room every day expecting to win, and that is a mindset. And I think that if you're in a trading room right now, or if you're trading alone in your own office or home, and your environment is not positive, you know, if you have a spouse and they don't support you trading, don't discuss it with them. Same thing if you have friends or family or whatever. You need to be in a very supportive environment, even if it's by yourself, you know. And again, get into a trading room that's a supportive environment because you want to win. You have to be calm, relaxed, focused, and ready to go every day. And you should know what you're looking to do. And you shouldn't be over trading either. You should have to go into the market expecting to win and be successful. And that's how I look at each and every day. Here's another one we did, IBM. This was 1024. Stock closed here, gap down, open, dropped. Okay. And again, boom, boom, boom. Could have bought a put in this, could have done a day trade in this. Again, 219.10 was the entry. We added it to 18.75. I really like this. Total shares was 2,400, and then I exited at 216.40. This was a good, solid trade. This kept going too. So this was $6,048 on the day trade. Again, this was here. Now you could have bought a put in it too. Could have got out. Could have bought a put here. Could have held it. Look where it went. So again, how you choose to play the gap. Again, I do both day trades and options, but how you choose to do it depends on what type of account you have, whether you feel comfortable doing trades on margin or options, okay? But every day in the room, I'm calling day trades. The room is not an options room. The newsletters, on the options newsletter, you get, like I showed you the newsletters that we did in the Tesla, for example, where you get the trade and you take it when you get it. And we're doing calls and puts. You have to think of it like you're making money on a regular basis. You chunk it out. We're doing the weekly options in the room. We're doing the day trades. We take the trade, we get the move, get out. That's why many of these day trades, even the ones that I showed you here, even in this lecture, I could have held longer. It's not about that. It's about the consistency, the wins, getting the move fast in the morning and getting in and getting out and working smarter, not harder, because I don't want to sit at a desk all day for 6.5 hours. Again, I'm trying to take the options to get a larger move. So like if I want to hold IBM, I'll do the day trade quick, buy the put, let the put ride. You know what I mean? And then I don't have to worry about sitting and babysitting a day trade all day. And the other idea about working smarter, not harder, is that you can have a better quality of life doing other things with your time. Maybe that is another job. Maybe you are still working full-time. Maybe you're working part-time. Maybe you have a family. Maybe you're retired and you want to go golfing in the afternoon. The idea of working 40, 50 plus hours a week is exhausting in today's environment with the stress and everything else. Trading is a nice lifestyle if you can master it. And that is a lot of the reasons that people decide they want to do this. They want to work from home. And then, of course, people have big ideas and grandiose ideas about making a lot of money and becoming rich. You can. I mean, you absolutely can. But the fact is, you're never going to get to achieve those goals if you don't become good. And it's not about reading a million books. And it's not about doing a million different strategies. And it's not even about doing a million different trades. It's about becoming an expert in one thing and narrowing it down and pinpointing it down and getting the consistency down. And then, of course, adding the size. Adding the size then once you're good at it. So I was talking about this, about why is shorting the way to go for fast profits. Again, we shorted AMD today. It was a nice trade. The panic comes in, panic comes in and stocks move fast. I mean, no one's thinking hard about buying a stock. Panic buying is something that's rare and happens not that often, okay? But panic selling actually happens quite a lot. And so we're looking to capitalize on that often. I don't know what we're going to do tomorrow, but hopefully we'll get a good short tomorrow. So number one, the strategy. Number two, you need a good mentor. And then number three, like I've been talking about, you need to become an expert in one thing, and you need to focus on one thing, and preferably one strategy, and also even one stock. Again, you can play it two different ways if you want. That will help you be consistent. That will help you achieve your goals, whatever your goals happen to be, whether it's making 50 grand a year, trading on the side a half an hour a day, 100 grand a year, or whether you want to do this and really go full on, like I decided to do a long time ago. Again, I wanted a brand new career. That's why I got into doing this. I was doing mortgages and I was working far too many hours, and I didn't feel like it paid me anymore. I was probably making, by the time I quit, $5 an hour for the time that I was working. You just get to a point where you want to do other things with your life. You want to have a better quality of life. And a lot of that has to do with, again, the amount of time that you spend at work. And if you're stressed out and spending too much time at work, it takes away from your happiness and the quality of your life and things you want to do to spend time with yourself and your friends and your family. Okay. Any questions here? How are we doing? Everybody good? Okay. So getting back to what I was saying, one of the cornerstones to everlasting trading success is consistency. Without this, it is hard to stay in the market for any length of time. In order to be consistent, a person needs proper focus on what counts. And for me, I focus on stocks that are being moved or controlled by institutional money. How do I determine that? I rate the gap. So how are you going to know what stock to trade each day? You get up in the morning and you rate it, okay? And that's what I do. That's what I do every day. And every day I'm looking at different stocks. And I'm looking to find the power of money in the rating system. And then I take the trade into the open as a day trade quickly between 9:30 and 10, or as an option, okay? And that's what we did with Target. We actually bought a put in Target and we did the day trade too. And then we were in and out and it worked and we were done. And again, one a day is all that you need. So it's about learning the checklist, because gaps have to be qualified, because you can't just short every down gap. You can't short every up gap. Gap fills don't work. If anyone's told you that, that's not true. So you will learn the checklist if you come to me. This is what I do. Okay, this is the information. The checklist tells you what to look for in the price of the stock to know who is in control, to know if the bulls are in control or if the bears are in control, so that you can know what direction to take it. There's only one thing, and one thing only, that can move the direction of a stock, and it's money. And it's not a little bit of money. It's actually a lot of money, or what I call power money in the market. Power money is in charge. It's always in charge. Power money is in charge of the stock's direction, and trends are set and moved by the power money people, of which there's a lot of in the market. And that's why the market has so much volume. That's why people love to trade the US stock market compared to other markets in other countries. The US market has large moves, stocks have large move, and the indices do too, and they have a lot of volume. And the amazing thing is, negativist traders and analysts talk about the power money people. They're the reason that one individual can be successful in the market, and why you can take one contract and make $5,000, $6,000. And you can do that on a regular basis too. You have to find the good gaps, okay? So getting back here to the target, again, you know, earnings season for 2025 starts in January. We're at the tail end of earnings season now, and then we have the holidays. But this was an earnings gap here in Target. And many stocks gap for earnings, but they also gap for news. They also gap for data points. They go with the market. So there's lots and lots of reasons why a stock will gap. So we have a fair amount of gaps in a week's time, but they're very, very important, okay? And a lot of people just don't understand gaps. And once you understand how valuable they are, it will help you become profitable. And you will help you pinpoint and read the power of money when it sets up. And then, of course, this is going to help you, give you conviction to take the trade, to hold the trade, and then to take more size, you know, so that you can make more money. Seeing when and where the power of money positions are getting in is like finding a gold mine. Seeing gaps clearly in how they're creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power money moves, okay? Now, I have talked about this before, I think, in other webinars here, but this is particularly important at the end of the year going into 2025. Again, talking about clearing out all the negativity, clearing your energy to go into the next year. And what do you want to do? Think positive, and you want to level up. This just applies to everything in our life. It's not just trading, it's everything. Too many people trade on the fly and they're not interested in really getting good. They just don't even care. They're just greedy and they want to make money. They don't really want to get good as a trader. If you get good, then the money's going to come. And you only get conviction if you get good. Otherwise, you have no conviction. So leveling up means take it to the next level, pushing yourself to the next level, whether that's studying, learning information, getting good at charts, doing something different, learning a new strategy like mine, following someone new, doing something different, and then again, letting go of the past. You have no idea how many people are following me, and it's kind of interesting now because, again, I started the business in 2012. So now, you know, going into 2025, teaching people for this many years, almost 14 years, you have no idea how many stories I've heard from people about they did this, they did that, whatever, and they just can't let it go. It's like, you know, if you're holding on to something for weeks and months and years, you know, it's holding you back. You're holding yourself back. And again, this is a good time of the year to just cleanse and move forward so that January 1st, you're at a new space and a new place mentally and physically, and then you'll be there financially. Because what happens, the change has to happen in your mind first. You just make the decision that you're going to do something different. You just decide that you're going to do it. And then things start to happen. And that's really where it all is. So the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that is profitable, extremely important, Golden gaps are a highly profitable strategy because they focus on large momentum to trade. And what stocks should you trade? Stocks that gap and rate 20 points or more. So my system is based on 26 points, but 20 is the cutoff. I don't have to have a perfect score, okay? I'm always trading the gap in the direction of the gap. When do you trade them? Early in the morning when they set up and trigger. That's what I'm looking to do always. And you must have a structure in place in order to make any money at all consistently. It's really about the consistency that many traders lack in their systems. I think anybody that's ever traded probably has made money doing something at some time in some trade, and that's what gets people excited to do it. But you have to make money on a regular basis. So people make money, lose, make money, lose, make money, and they're up and down all over the place, and that will wreak havoc on your mental state and your account as well. And you kind of got to be honest with yourself and say, wait a minute, I'm not making money, I'm not getting somewhere with this, and I have to do something different, you know? But anyways, how do I know ahead of time where stock will go? I rate the gap. And this is what you'll learn if you come to take my class. My next class is not till January. We'll talk about that in a minute here, but I use a 26-point checklist. This checklist tells me what to trade and what to look for each day. So it's a rating system. It measures gaps by rating them on the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, ideally like the Target or like the Tesla. A big move on the day, we want two. Early confirmation of the bias in the move between 9:30 and 10, and precise entries with follow through, and a good risk to reward target potential. So what do I think is a good risk to reward? If I'm risking $1 to make $1, if I'm risking 50 cents to make $1, okay? If I'm risking 25 cents to make 10 cents, you know, I'm looking to try to turn it over 100% is what I think is a good trade, 1-to-1. And then you also need to create a money management plan for yourself. Again, how many trades do you want to do a day? How many trades do you want to do a week? What's the size of your account? Are you going to do options? Are you going to do day trades? All of this, you have to get organized for yourself, okay? This is a chart of the QQQs here. Again, I think 2025 is going to be a big year. Again, whether the market rallies or falls, nobody knows. But I think it's going to be a big year because there's going to be change happening in the universe in 2025, change in a new administration, and the market's going to have reactions. And we want to be able to capitalize and profit on those reactions. Some of them could be to the downside. Some of them could be the upside. Right now, a lot of people are long the market. Even after today's sell-off, a lot of people are long the market. And they think the market's going to keep chugging up higher. Maybe it will, but what if it doesn't? So people are making money now if they're going long and they think they know what to do just because the market's been moving up. You have to know what to do under any market conditions. You have to know what to do when the market's bullish, when the market's bearish, and particularly what I'm looking for every day is stocks that don't even need the market. I can tell you right now, Tesla would be flying without the market, hands down, okay? So in reality, I don't need the market for my trades, but I sometimes do trade the market. Someone's asking a question. Do I have any losers? Yes, they were in the stats. I just had the stats at the beginning, Jack. Maybe you weren't here. I'll go back to the beginning of the lecture. I had all of the stats through 11:20, and the losers are in here. We just talked about this. See the parentheses? Those are losers. Now, we have been on quite a tear, I will say, in the trading room. But every trade with a parenthesis is a losing trade. So 11:15, we did BA. It lost. I don't have the chart in here. You can look it up. Look at the chart. And then we did Disney. 11:13, NVIDIA lost. And then I did Boeing. 11:06, lost in Tesla. Won in NVIDIA. So all the losers are in here. You can't expect to win in every trade. I talked about that earlier as well. That's unrealistic. Again, if anyone tells you something has, you know, 100% win ratio or something like that, that's just, you know, I would be a psychic if I could do that. You know, I'm pointing out certain trades that we've done recently that have gone way more than I thought that they would, or very fast to the target, like I talked to you about the Tesla call from Friday. But that has nothing to do with the fact that there are trades that I take that lose. And you have to be prepared for that. Otherwise, I wouldn't use stops. So I teach people to use stops, and I use stops myself in the day trading room. If I didn't ever have any losers, I would risk my whole account every trade. That would be absurd. You can't do that. You need to size yourself accordingly. You need to put in a stop, okay? And you need to honor that stop as well. You can always do a retake. Say you take a trade, you get stopped out, and sometimes I do. If you want to go back and look at the stacks, sometimes I've done the same thing twice in a day. Took a stop, retook it, second trade worked. But sometimes I don't. Sometimes I just get off of it. But again, my win ratio is probably between 70 and 80%. So you come and trade with me, you figure every 10 trades, you're going to have about 7 winners and 3 losers on average. And maybe sometimes it's higher than that, where we have, you know, maybe it could be 80%. But again, that's the sort of thing that I'm talking about here, where we're talking about people's mindset. I never said every trade that I do works. That has nothing to do with the fact that I have a good system and I take a lot of trades that do work. If you're trading expecting any system where every trade to work, you probably can't afford to be taking risk, because you can't afford to take any losses at all. You probably can't afford to be risking money trading. If you open up a trading account, and I don't care if you do $2,000 in an options account or you put 100 grand in a retail broker or open up an account, every time you take a trade, there's a possibility that exists that the trade could lose. You could take a good trade that I call and you could screw it up. You could knock it, how? You could knock it out. You could be so piggy about it. I could call a huge options trade and you could knock it out of it. Hold it to the last day, even though it's up all week, and knock it out and losing it. So again, you have to be responsible with your cash and with your profits. And that has to do with sizing yourself correctly, putting stops in, taking risks. You know, I think people are all over the place as far as when they are using stops, because they're afraid to take a stop because they don't want to take a loss. But when I take a stop, I don't like taking a stop. It's not like I don't expect myself to stop out. I expect myself to win. I talked about that. But I put the stop in anyways, knowing, again, that it could stop me. But the reality is that anytime you take a trade, you're looking for high odds. 26 points is what I look at on a chart. If I get 20 or more, I'm going to take the trade in the direction of the gap. That's a high odds in my favor, the way I look at it. And I say, therefore, this trade is worth risking 3 grand, because I think the odds are in my favor that I could turn that 3 grand into 5. And that's how you have to look at it. If you're taking a trade and you're risking 3 grand and you think you're going to lose the 3 grand, you know, you're down from the start, because your mental point is that you think you're going to lose or you're afraid you're going to lose. A lot of people trade and they're afraid all the time that they're going to lose. You can't be afraid to lose, because in fact you will have trades that lose. That's my whole point. But a couple of losers should not kill you, shouldn't blow up your account. Why? Because you should still have more winners than losers. And that's how you make it. That's how you make it in this business. You can't have too many losers. That's just the way it is. And again, to be honest with you, over 70% win ratio, those are some pretty fat numbers. I think I talked about this. Measures gaps by rating them in the daily chart to find stocks that have a high probability directional bias. We did talk about this. We talked about 2025. This is me. I did a class live in New York, actually, in September. I had people come. They met me. It was a good lecture. I do not have any live classes planned in the future. Maybe I'll do something, but at this point, I don't have anything planned. So the classes I do are online. So the next class is not until January 2025, which is a long way away. But if you want to sign up for the January class and start trading with us, you could. The January class is January 25th and 26th. And again, you know, you're closer to realizing your dreams than you think if you've been at this for a while. It's real. I mean, I got a really nice email from someone today. Actually, he emailed me after he sent this email. After he sent this email, he emailed me. He was up over 9 grand for the day. He just did the class this weekend in December, and he paid for the Black Friday bundle I did, which was $79.99, and he emailed me. He was up $77.25, but then he emailed me later. I didn't have time to put in it. He was up over 9,000. He's going to be one of the traders that we highlight this week in the marketing list. Someone's asking me something. Do you trade more on the long gaps or on the short gaps? I do more shorts, but recently I've been going long as well because the trades are there.
We have another question. If you're answering questions right now, this was from YouTube. Do you pay attention to after-hour gaps?
Any gap, anyone, anytime at all. So yes, but I'm a morning person, so I typically do my ratings in the morning. If like I won't do my pre-work tonight because I'm a morning person. But any time something's gapping is essentially a gap. But as far as doing the rating, I will wait to do it in the morning. Like this is late for me. This is like midnight for me to be here with Jeff right now. I'm going to bed after this, actually.
I hear you. I'm migrating that way too.
And then I think I've talked about this picture before in the last webinar I did with Jeff. I saw Bill Ackman at a restaurant in New York, and it made me think about, again, how many successful people there are in New York City. You know, New York City has its share of problems for sure, but this is still a metropolis, and there's still so many successful, wealthy people here, so many businesses in New York. That has been very grounding for me and motivating for me. And so if you are, wherever you live in the world, you know, you want to be around successful people. So again, if you're in a trading room, you want to be in a trading room that's succeeding. If you have a mentor, you want to be with a person that is successful. You want to gravitate towards people that you could admire and learn from, and that again have this good energy where they're going to support you and that can motivate you to get to the next point in life. You know, you have to look at trading as something where you're practical and professional, and that's why I do the prep work. Like I said, I do it in the morning. The system I use to find the right gap each day is called the Golden Gap. It's a 26-point checklist, and this is about empowering yourself to trade today. So if you come and do my class, you will learn the rating system, you will learn all the entries, the exits, the targets, and you will learn it in the Golden Gap course. This is a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. So the class for January is the 25th and 26th. I'm doing a special through 12/15 for the January class. If you sign up for the combo, you get the Trends class, the Golden Gap, and the Merry Christmas special is you will save $1,000. So you will only pay $69.99 when the normal tuition is $79.99. And then the Trends class is January 28th, and as a bonus, as a Christmas special, you will also get the Market Report subscription and the trading room subscription and the newsletter subscription free for 1 year. So you get 2 classes, 3 subscriptions, and you save $1,000 in the price. Any questions so far? How are we doing?
I think we're caught up on questions.
Okay. Okay, well, thanks so much for having me, Jeff. I guess Merry Christmas to you.
Should I wish you a good night?
No, I don't.
No, great job. So you can email Melissa at thestockswoosh.com to do that. Melissa, great job. I appreciate that.
Thanks. Have a good evening.
All right. Thanks for capping us off for the year, too. All right. Very cool. Let me go ahead and do this. I have to make myself the presenter again. We'll just wrap up. Oh, here, let me turn on my camera. I want to thank all of you guys for coming. If you haven't yet checked out our Traders Forum, we're just getting started with it. It's a live market chat. We do lessons on indicators. We do a lot of fun stuff. We talk about the market, patterns, all that kind of stuff. TheTradersForum.com. I look forward to seeing you there. Tomorrow, we're doing a lesson on the money flow index. So you won't want to miss that. TheTradersForum.com. We'll see you there. Okay. I do want to remind you, well, let's see, before I do this, where are all of my, I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. If you haven't registered yet and claimed your free issue, go to metastock.com/Traders Summit. You have to do that today. If you're watching the recording, it won't be the same sign up form. You can sign up for the next one. So if you haven't yet, go to metastock.com/Traders Summit and get your thing. We talked a lot about Metastock and how it's been rated the best software in this price category for 31 years in a row. I wouldn't trade without it. You should try it. There's a reason it's been rated so highly. All of the offers from today can be found at metastock.com/summit deal. If you have questions about them, you can call us 800-882-3040, metastock.com/sales chat, metastock.com/summit deal. So also, we do have the bundle offer where you can get TST Trender, Vora Victory Method 2, SuperTrend Bullseye, Big Trend Toolkit, JBXC Complete, Oscar Carboni's Trend Lines and Pattern Tools, 3 months of the Learn Metastock soft website, Unleash the Power of Metastock, the workbook and the videos. Normally, all of that's $6,884. Everything's discounted, $2,792 if you want to just buy the whole package. 800-882-3040, metastock.com/sales chat. Get in touch with us. Anyway, I do want to say thank you. All of our speakers, both today, all the people that we work with, you for being here, for watching the event, for liking and subscribing if you're watching us on YouTube. Just thank you for being here. Hope you're doing well as we kind of roll. This is our actual last event for a live event for Metastock. So I hope you all have a wonderful holiday season, a good new year. Stay healthy, stay well. I'll see you at another session. Thanks.